and CEO. Deborah, it's great to have you here. So break down the results here for me. We initially saw, I think, some excitement just given the fact that the fourth quarter was so strong. The Target shares under a bit of pressure from
Good morning. Good morning.
that muted outlook and concerns maybe surrounding tariffs going forward.
First, thanks for having me. And second, as we look at the results, number one, traffic and ticket were both positive in the quarter, which is, I think, exceeded expectations. And secondly, they were very specific about when they started to see some softness, and that was after Valentine's Day. That's actually very much in line with our results at Foresight, where we've seen a bit of a, kind of downdraft in ticket and traffic, and starting February 17th. And so what we believe is just there's a lot of noise. The consumer is a bit more conservative, and Target is continuing to invest heavily in 25, and their only kind of watch out is that the first quarter just may be a bit weaker than otherwise they would have expected.
What is the tariff risk look like?
All right. Back in 2018, when Trump put on his first tariffs, the markets did pull back about 12%. Back to the 200-day moving average, you can see that we were at highs. Very similar look to what we're looking at right now. Okay. So we're at highs. Okay. We've had a nice run up. The difference between this second term, Trump's second term, is that he is doing the tariffs early in his term. Okay, so in the first 2 months, he's put on these tariffs. So in the previous cases, he waited for the year. Okay, so 2017 into 2018.
When we try to quantify the impact that this is going to have on Target, how big of a risk is that maybe to the volume outlook?
Well, I think going back to we saw positive traffic and ticket in the fourth quarter. They have been very focused on returning value.
All right, so starting off in January 2017, of course, the markets continued to grind higher, and then we ran up to all-time highs and then pulled back to the 200 days. So what I'm getting at is that that's the possibility or the potential that we could see that much happen again. So if you're an investor, I'd be just sitting and waiting for an opportunity to buy. I wouldn't be putting cash to work just yet. I would also be looking for VIX to spike. That would signal capitulation. If VIX spikes up like it did over here in December, the last time we had a pullback back in December. Okay, we had a decent pullback, not as bad as this one. And currently we're trading right at 58.23 on the futures.
That's a very good question, and I think that is where the risk lies, is in the apparel, footwear, accessories. So you're more discretionary, and that is.
All righty, let's get ready. Let's see. Aklo.
If you will, gift to oneself, but that is where you can spend a few dollars versus multiples of that. So we believe that apparel, footwear, and accessories will continue to be challenged. Some of it is based on where a lot of these companies have their sourcing base, and also, especially in hard lines, the time needed to switch your sourcing base is well over a year. So that is where it is much more difficult for some of these companies to react quickly. And I think that if you look at the large, this is what I believe is going to be a standout moment. That you're going to see a significant difference between the larger and the smaller retailers. The larger retailers are already prepared for this, but the smaller retailers, and I'm talking under 10 billion, so depends how you look at small, but I wanted to define it. Under $10 billion in sales, they, I think, have been reticent to make unnecessary investments, but that could come back in the way of higher prices and also chain. And those are some of the concerns I have, especially going into holiday 25.
Right, makes a lot of sense. Deborah, thanks so much for breaking that down.
All right, we got about 5 minutes to go. 5 minutes to go.
Okta shares are climbing to the upside here after reporting better than expected fourth quarter results. The software company's revenue climbing 13% from a year ago. Yahoo Finance executive editor Brian Saws got the chance to speak with Okta co-founder and CEO Thomas Kurian.
All right. Let's get ready for the opening bell.
Identity and security are very important for companies in every industry, governments across the world, and it's reflected in our earnings performance in Q4. We're very excited about the numbers, about the growth, about the profitability, and more importantly, about what it means for next year and beyond. We're in a big industry; it's growing fast, and we're a key player in that industry that's providing a lot of value to a lot of customers, and we couldn't be more happy.
McKinnon was also very optimistic about fiscal year 2026 and taking a look at the guidance that exceeded analyst expectations.
All right, we got about 4 minutes to go. 4 minutes to go.
The private equity firm Sycamore Partners could take the drugstore chain private for around $10 billion. Yahoo Finance is Angela Kumari joining me now with more details on this deal. There has certainly been some talk about this for a while.
There has been, and I've said it on air before, and we know that this is the most serious deal that Walgreens has considered. They have been looking for a buyout for the last couple of years, and that's actually when you saw the valuation of the company tank. So taking a look at the current market cap is $8.8 billion, and the deal valuation that Wall Street Journal reported is $10 billion, and that is a tenth of what the company was worth 10 years ago. So clearly a need for Walgreens to go somewhere. The deal will split the company into 3 smaller companies, and that includes sort of its international arm. So taking a look at what Walgreens looks like, it does of course have that retail giant pharmacy business and clinical trials, as well as the Boots pharmacy in the UK, the pharmacy benefits manager, which is Shields, and then the newest endeavor and the most valuable for investors is the specialty pharmacy business that it got into. Plus, it has the health service provider, VillageMD, which it is letting go of, and then CareCentrix and Cencora under that umbrella. So how the company will split up, of course, we don't know the details just yet. But, you know, we've seen over the years, and if you take a look at the map too, just how much space Walgreens has globally, that's also part of how the company will split up. Walgreens has been compared to CVS in the past, but it really more falls into the category of Rite Aid, which we did see go private just a couple of years ago, and so this is sort of following that suit. Retail pharmacy business, not a good time for that with all the reimbursement pressures, as well as online competitors. That's why Mizuho's Darren Holmes said last week, prior to the Wall Street Journal valuation, that he thinks the stock will continue to trade. And also believes overhangs on Medicaid funding. That's another.
All right.
There is existential risk around for the business. So that's something to take a look at. We've seen, you know, a lot of polls on the stock, and the stock is up right now on this news. So stay tuned.
You certainly know, all right. Keep right here, and Yahoo Finance coming up next. We got the opening bell for you. We'll play right back.
Futures just moving slightly sideways just above the low. A little bit of short covering. Most likely a little bit of short covering. Could see another stab lower. That's what I'm anticipating. And we're about to open. Okay, let's get ready. SPY drifting a bit lower now into the open. All right, SPY dropping off a bit more. All right. All right, Robinhood starting to bounce. That one was off yesterday. Supermicro, Apple showing a little strength. I wouldn't be eager to jump in first thing. Shorts covering, so we get these little bounces. Okay, Tesla starting to bounce. Nvidia starting to bounce. I would think there's a lot of people down here interested in buying Tesla. Maybe not yet, but soon. If you're an investor, I'd be waiting for VIX to spike further. Okay, so we're starting to get there now. We're motoring higher. The last time we got to these levels was back in December, which is kind of interesting because the move back in December wasn't as bad as the one we have right now. Eventually, we got down here into January and then bounced. You could say that this is pretty much a range at the moment. Let's go take a look. I'm not doing anything until I can see some capitulation. Day trades only. Okay, Netflix turning back down. Netflix looked okay yesterday, and now Netflix is down this morning. When you're in a hole, you don't keep digging, right? Okay, so we broke this uptrend. Let me just highlight what I'm looking at here. We broke the uptrend. And now we're at this level right here, just about ready to bounce. We got the 200-day right there. That would be a 7% decline. So it wouldn't be as bad as 2018. Okay, SPY continues to move lower. Wouldn't be as bad as 2018 at this rate. Okay, so this is the daily time frame. Okay, looking for a bounce. We're oversold on RSI. Previous daily high, previous daily low. Obviously, very bearish day forecast. Previous daily high, previous daily low. Okay, so the 200-day, that's about 7%. Okay, there goes Supermicro. Short covering, most likely. I would assume any bounces for now are just short covering. Supermicro. Give it a few minutes for the markets to settle down. We're still looking for a bounce. Okay, S&P got a little bounce now. Okay, a good sign would be if we have all of the New York FANG components all showing some short covering and pushing in the same direction, pushing higher. They're still mixed at the moment. NVIDIA just popped up, so it looks like some short covering there. Again, I'm just assuming short covering initially. Okay, we're down in an area we haven't seen in a while for NVIDIA. There goes Supermicro.
very important for the Mag 7 as well. Let's go over to futures land where we have a lot going on, but I'm going to lean into gold because it's higher right now. And looks like I'm going to lose my access to the Wi-Fi, so I'm probably going to kick it back to you right here.
Okay, Microsoft trying to bounce. Netflix is off. Nvidia is bouncing, but it's in an area where we haven't. There's really nothing here in terms of support, resistance. RSI oversold. Okay, Super Micro, nice bounce. Super Micro. Right at the 50-day. Well, what I would note is that a lot of these stocks that have come back to their moving averages, like the 200-day, Tesla did not bounce. It did briefly, but it's not holding on to the 200-day for now. Now, that could change. We could see a hammer. Still basing. You could consider this basing in this area. Meta also had the 50-day. We stopped at the 50-day. Now we're bouncing again. Do these buyers show up at 640? It's 100 points off the high. Okay, looking a little better for now. Shorts covering. Okay, Microsoft coming off the low. Microsoft, pretty decent decline in Microsoft. What I'm looking for are signs that institutions have started to pick up shares. Okay, 383, that was that low over here back in August. Currently trading at 386, so we're in this area. The takeaway here also is that the tariffs back in 2018, we had an initial bounce. Not doing anything at the moment. We had an initial bounce, okay, at the 200-day. Let's go out to March, April. Okay, and then came down and revisited again. Okay, so be aware of that. We had an initial bounce. That would probably give you another opportunity to reduce your risk. Of course, eventually we continue to move higher into 2021. So if we go out to 2021, of course, we can say the markets was, oops, sorry about that. 2021. You can see that the markets eventually went much, much, much higher, okay? So here's the initial drawdown to the 200-day over here on the left, kind of masquerading behind all this text, but you get the point. 2018, end of 2018, we had this pretty decent pullback below the 200-day. Then 2020, COVID. So there's potential and no reason to just jump back into markets. If you're day trading, it's a different story. We got the markets bouncing right now. Futures are bouncing. Okay, nice little bounce so far. Okay, the fangs are looking better. Let's take a look at a few. Let's take a look at Apple. Apple. Again, we're looking for buy order blocks. Pre-market, we had some. We got resistance again up at 240, little 240, 245 yesterday. 244, 245. Okay, so that's Apple. Let's look at Amazon. 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 Big move down in Amazon. Broadcom. Broadcom still near the lows. I would just assume that this is shorts covering for now. No reason to jump in. Meta, we just talked about. Meta below the 50-day. Okay, looking for buyers to show up. Meta. Okay, Microsoft. You saw Microsoft too. Microsoft. Nice little bounce. That's probably just shorts covering. We could roll over and continue lower. Okay, that's the problem. We could roll over. Here's Nvidia. Nvidia, nice bounce. Okay, so you had a nice move from 110 up to 115. That's a 5-point move. I wouldn't chase it right now. See if this turns back down. Okay, so the one thing that was looking pretty strong were bonds, TLT. Okay, TLT. All right, we're above the 200-day. Okay, last time we got above the 200-day was back in December. That was when we had our last really decent pullback prior to the end of the year. And then TLT rolled over. So let's look at the weekly on TLT. Big range bound pattern. So you're not too far off of where we got rejected in December. Now, if that were to change and we were to start breaking higher, I would imagine the markets would be much lower at that point. Some people are taking up bonds for security and safety. Let's see what gold looks like. Gold. Okay, gold. Inside day, inside week. Gold bouncing. So the US dollar must be moving lower. Yes, it is. The 10-year yield, we know that moved lower. And key to one of our signals is junk bonds. Let's take a look at junk. Junk was at the 50-day yesterday. We're below it today. 200-day is right there below. In an area where they were buying before. So that would line up pretty nicely if we could get a VIX to bounce, VIX to roll over. You can see all these mixed signals. So tough. There we go. Futures pushing back down again. Sit tight. Sit tight. I don't think we've seen fear or capitulation yet.
All right, Drew, always love getting your insight here. Thanks so much for taking the time.
Yeah, thanks.
Get over to our chart of the day. Madison Mills is standing by for a closer look at the performance of stocks versus bonds. Maddie, what are we seeing?
That's right, Shauna. Taking a look at a broader sign of the Trump trade unwinding here, as you are seeing investors flocking to safety in treasuries, bonds returning over 2% year to date, while the S&P 500, rather, since Trump's election, and you've got the S&P 500 returning 1.6% since that election date. So you've got stocks trailing bonds in terms of their total return since that election. Now, why are investors piling into treasuries? Obviously, a couple of reasons. You've got the momentum unwind that we're seeing, that big tech sell-off from Mag 7 down 10% in just the past 2 weeks here. But of course, I have to mention policy, those 25% tariffs on Canada and Mexico weighing on risk assets.
Okay. All right, Apple pushed it a bit higher. Apple has resistance right overhead, but it is bouncing. Apple. All right, this could go either way. It's right below the 50-day. Can we run back up? Call wall overhead at 245. That could have changed overnight. Let's see. Uh, 242.50 and 245. 237.50 is the put wall. So Apple, if we get any kind of bid, 242.50 is the call wall now. Calls have shifted. Apple, okay. Okay, so Merck, yesterday we talked about the pharmaceutical companies, JP Morgan, not JP Morgan, J&J. Okay, pharmaceuticals, J&J, MRK, ABT, ABBV, etc., etc. Bullish.
Life was really hard until I discovered Dice Drinks. Building kingdoms is so relaxing, and destroying my friends' kingdoms.
Okay, so J&J, Merck. Merck's at the 50-day, but following through. Merck is looking good. All right, so what, 2 weeks ago? 2 weeks ago, we took the July 100 call, assuming that we could get to 100. First, we would have to encounter the 50-day. The 50-day is right here, right now. Okay, we just tagged it, 50-day. Okay, that looks good. Let's see if they react to this or if they keep buying. Okay, they're still buying. Merck. Okay, so let's look at Abbott Labs. Abbott Labs took off to start the year. Abbott Labs just keeps going. AbbVie, continuation. Okay, Bristol Myers Squibb. Okay, so you got lots of strength in these pharmaceutical names. You can just trade IHE. You can trade IHE. Okay, IHE, you can trade that as well if you don't want to get at individual names. Okay, NVIDIA looking a little better. Okay, so this nice round 100 number, catching a bid.
GitLab is a leading DevSecOps platform that allows people to make software better, faster, cheaper, more secure. And so
okay, so Merck really hit the lows, and let's look at the weekly. Merck on the weekly time frame. All right, so this is showing some promise. Now, if this breaks this basically year, this rollover into 2024, if this breaks and starts to trend like over here on the left, okay, if it starts to trend like this in the left, that will require the 10 EMA to turn up. It is already starting to turn up. So if we get above that, we could see a nice potential here, another 20, 30 points, 40 points. All right, so this would be a long-term swing. Merck is these pharma. These are swings.
Yeah, it's a great question. There is some uncertainty around it today.
Mhm.
12% of our business today is in the.
Okay, if this is just shorts covering, we're going to see a lot of these stocks roll over. If it's prolonged into 10 o'clock, 10:30, that's a different story. I feel bad for the guys from Waste Management. They're going around the neighborhoods picking up the refuge, the trash, but it's so smoky still very smoky out. Can you imagine if you have asthma, you wouldn't want to be outside. I went into an adjacent neighborhood about 2 miles away and got halfway into the neighborhood. It was so smoky, I couldn't go any further, so I had to turn around. So tomorrow we're supposed to get some rain. That would be so welcome. Quelch these fires. And put the smoke to bed. All right, so then these stocks are just sitting here. They look pretty precarious to me. I'm not going to put any money to work just yet. These day trades, I mean, these scalps are like very quick. Better to look at some of these pharmaceutical names, which look very strong. Okay. This is a couple of weeks into this. Merck. Let's take a look at pharma, see which ones could turn that maybe are lagging a bit. Okay, Acadia Pharmaceutical. Just have to look at their pipeline. I'm not sure what they've got going on. AstraZeneca, another name. Okay, let me just change these to different chart style. All right, select that. 2050 day. Okay, last off what? AstraZeneca. Bristol Myers. Okay, looking for the breakout. Okay, 2050 day cross on Bristol Myers. Corcept. Okay, that one's on the watch list, right? Dow Jones Pharmaceutical and Biotechnology Index. This is one that you could buy too. If you want to drop $1,100 per share. Okay, let me just grab my phone real quick. Okay, Tesla pulling back again. Gilead, been on a run. GSK. Okay, all of these look good. What was the one? What was the other one? Yeah, GSK. GSK was one that we were looking at. That's on the watch list. GSK for the last couple of weeks. GSK continuation, looking good. Relatively inexpensive name. Gapping up. Moving above the 200-day GSK. All right, so 2 weeks ago, we were looking at this along the 9 EMA. GSK continues. Okay, that looks good. GSK. Ironwood, no, not interested. That one's off. Jazz Pharmaceuticals. J&J. KPTI, no. Legend, no. Lilly, higher. Merck, of course. Merck looks like it's going to break this bigger downtrend. Okay. Okay, so we're breaking this downtrend, potentially. Okay, so if we get above 99, 100, we'll break this trend. And Merck. Mylan, no. Pfizer, maybe. Another ETF, PJP. Santa Fe.
It's time for Jim and Stuff Trading. Sometimes we forget why we had NAFTA, USMCA. It was because the big foreign companies that
So we did this with Canada and Mexico so that we could compete with
Zotis.
and with South Korea.
Zotis is another one. ZTS.
And they still have low tariffs. And now we're going to get our American companies, Ford, GM, Stellantis, are going to be hurt. So, I mean, it's a little illogical. Why aren't the taxes put on the countries that are really flooding our country with imports? VW, Toyota.
Well, there's no argument that we're not.
Yeah, we may get to that.
Well,
You're
right now it's
raising the point.
2.5.
Remember, we had NAFTA, then it was redone under the first Trump administration, the USMCA, which was supposed to take care of all this, but now they're completely
Well,
revisiting.
why
that.
don't we just? Why doesn't the president or someone just say, "Listen"? And now we're going to get to the big South Korean companies, Japan, which pay 2.5%, instead of just destroying Ford Motor and GM, which has a huge. But all I'm saying is, why did we do this? There's a little history involved. And was it
Okay, so
because
pharmaceuticals look good.
Japan and South Korea,
Let me
you know,
just
those
check real
countries
quick.
give a free ride, we're on
Sector-wise.
and it doesn't make a lot of sense.
Well, April 2nd is when we may start to see.
Sector-wise, the only thing that's higher is actually tech is flat to green. That's probably temporary. XLP and XLU. XLP. Okay, continues. Let's see what Campbell's Soup is doing. Campbell's with a nice bounce. A lot of these consumer staple stocks look good. Consumer staples. Okay. Altria, Mo, we identified these changing trend a couple of weeks ago. XLP, Brown and Foreman trying to change direction. CVS, Campbell's Soup, Clorox, Coca-Cola at highs, 72, 52-week highs. Colgate Palmolive. Okay. All right, let's see what utilities look like. With yields dropping, XLU should move higher as fixed income investors look for yield. They'll move from bond yields to utilities. All right, these are changing direction, so these look good too. AES Corp, AEE, Amerin. All right, a lot of these utility companies, American Electric Power. Okay. Okay, let's see. Tesla's still moving lower. Tesla's below the 200-day. Okay. Next level is 238 and then 212 below that. Apple, as expected or anticipated, these stocks, nice little run up. I would assume that that's just shorts covering. For now, tech, not really the best place to put money, I would think. Defensive stocks are working. All right, so we got, if you have NVIDIA, by the way, if you have NVIDIA, you could also neutralize your position if you're trading NVDX, for example. Okay, I believe, what is it? NVD, is it NVDD? Okay, 1 times bear on NVIDIA. So you could equalize your position on NVIDIA as NVIDIA continues to move lower. All right, so I have some NVDX. I'm not really that worried about it right now. But you could neutralize this position if that were something that you were interested in doing. NVDD, okay, that's moving higher. Okay, some of you have NVDL, I believe, right? Granted shares. NVDS, I believe, right? Short. Okay, so you could trade NVDS.
Welcome to Catalyst. I'm Shauna Smith alongside of Madison Mills. 30 minutes into the U.S. trading day. Let's get the three catalysts that we're watching this hour. First up, we'll break down the impact of tariffs on CNBC. Investors grapple with growth fears alongside concerns about
Good Tuesday morning. Welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber, live as always from Post 9 of the New York Stock Exchange. It's ugly out there for stocks. We continue to move south since the open, down 1.5% on the S&P 500, 1.4% on the Dow, which is now down more than 600 points, and the Nasdaq down 1.5% as well. It's a broad-based sell-off as those.
Okay, let's go take a look at. Keep looking at utilities.
President Trump following through with his threat there, and we are seeing continued
AES
buying in the bond market.
doesn't move very much. 47 cents a day. It's up 5 cents.
Remember, we were as high as 4.8 in January, inching toward that 5%.
Dominion Resources. A lot of these look good. Duke Energy. Duke Energy. Edison.
Defensive plays. Everybody else is lower, and financials are actually taking it the hardest, down 3%. Consumer discretionary also down almost 3%. 30 minutes here into the trading session. Here are some individual movers we're watching. Fresh results out of retailers, Target, Best Buy, and more on the move. We're going to get the streets take in just a moment. Most of them are lower. We're watching big tech as well following yesterday's big sell-off. Bank of America cuts its price target on Tesla by more than $100, $380 a share now. Nvidia trading around its lowest level since last September after.
All right, so EIX Edison. This is probably going to continue moving higher. Let's see what options are going for on that. EIX.
So far this year, and it is day one of President Trump's new tariffs on Mexico, Canada, and China. We're watching the fallout from retail to technology, as well as the Fed next move. We're going to talk about all of those implications, which are clearly front and center this morning for investors.
Meantime, Canadian Prime Minister Justin Trudeau set to hold a press conference in about half an hour. We're going to take you live when it happens. But first, let's get to Megan Cassella at the White House with the latest on these tariff moves. Morning, Megan.
Hey, Carl, good morning. So this is by far the most aggressive trade move that we've seen from President Trump, even going back to the start of his very first term. It's more than $1 trillion in goods getting caught up here. And that's before you start to count in the retaliation. There was a lot of hope, guys, and I would say even expectation all the way up until midnight last night that we might not get to this point, that we might see another delay. But the Trump administration being very firm now, and Commerce Secretary Howard Lutnick making the case.
EIX, I like the way this one looks. Looks like we could move higher. Volume the past couple of days.
If they can stop the flow of fentanyl and they can prove to the president they can stop the flow of fentanyl, then of course the president can remove these tariffs. But you've seen it. It has not been a statistically relevant reduction of deaths in America. It's just black and white.
So the only way they say now of lifting those tariffs is if we see a statistically significant reduction in deaths from fentanyl, something to watch there. But all three countries, meantime, making moves to retaliate. China putting tariffs of about 10 to 15%, mostly on agricultural products. They say they're also blacklisting about 25 U.S. companies. Mexico's president, just in the last few minutes, saying that she does plan to talk with President Trump this week, likely on Thursday, that she'll detail her retaliation on Sunday. And then Canada, as you mentioned, we'll hear from Justin Trudeau later this hour. We'll bring you those headlines and bring you that live as we have it. But they're also planning their own retaliation, guys, tariffs on about $108 billion worth of U.S. goods. So we'll see if we get more specifics from him as well.
Yeah, Megan, I mean, first of all, obviously, given how little fentanyl it takes to obviously impact a lot of people, it's hard to imagine they're going to be able to really you certainly hope, stem the tide of what's happening here simply from interdicting at the border. My question to you, though, is not about that. It's about Lutnick's comments about April 2nd, where he said we're going to reset trade policy on April 2nd. I guess many are just trying to determine, well, what does that then mean this is only opioid or fentanyl related. So what is happening on April 2nd, and will it also impact China, Mexico, and Canada, along with so many of our other trading partners?
The White House keeps referring to this date of April 2nd as the big one. It's interesting that they see that as sort of the point that they're getting to when they're also doing so much in the meantime. But these are all on separate tracks. Today's is the fentanyl-related tariffs on Mexico, Canada, and China. On March 12th, by the way, next week, they've also been threatening steel and aluminum tariffs against all countries, including those that Trump negotiated exemptions with in his first term. So something to watch there as well. And then on April 2nd, we get the reciprocal tariffs. They've described these as the ones where they're going to go country by country on an individual basis and decide what tariff rate to put against each country on its own. The EU is likely to be at the top of that list because they've laid out a number of frictions with the EU that they don't like. Things like the VAT, for example, is at the top of that list. So we may see them go country by country. We may see them all get rolled out on April 2nd, but it is sort of a Herculean task that they're trying to figure out, and that's what happens next.
Okay, so we got utilities. Let's go to consumer staples. I already did that. We already did consumer staples. Healthcare. All right, so right now we're just letting this play out. Defensive sectors are getting the love. Okay, here's XLY, XLP. 3 weeks ago, we told you this looked like it was starting to turn. It was neutral at the point 3 weeks ago, and then 2 weeks ago started to turn. And last week, of course, this really started to accelerate. Started to look more like 2022. I don't think we're going to see a bear market this soon, but there are many that think after 20% plus gains in the major index like the S&P 500 that we're due for a bear market. I don't know, maybe 10% pullback like we saw in 2018. It was about a 12% pullback to the 200-day moving average. So positioned defensively.
Into recession. Here's the chart of the day. This comes from Bank of America. It's the percentage of their own economies that is trade with the United States. For Canada, more than 30% of its GDP is tied to trade with the United States. And it sends 75% of its exports to the United States. For Mexico, which is the orange line, it's an even bigger part of their economy. More than 40% of their GDP is with the United States trade. They send more than 80%. All right, Apple's starting to turn. All right, so be aware of this. We've been talking about it in the weekend videos for a couple of weeks now. Okay, NVIDIA is starting to turn. NVIDIA short, coming back down. Let's see, NVIDIA. NVIDIA. You can see where NVIDIA is. So any day trades are just that. Apple, nice bounce on Apple. So started off well, moving higher. Apple. So I think that's an important factor to remember. How much is at stake for these countries, Canada, Mexico? They might threaten that they're going to do. What is Bitcoin still moving lower? Bitcoin. Deficit with China and Mexico is increasing, which could be sort of an aggravating factor here. But they are heavily reliant on the U.S. and they have an economy and their political futures at stake, certainly for President Sheinbaum. It comes at a time where the U.S. economy is showing some weakness. I think it's worth pulling up what's happening with treasuries again and with the U.S. dollar. Because remember, initially it was thought that tariffs were going to raise inflation. And so sell bonds and buy the U.S. dollar, right? Higher inflation in the U.S. means the Fed's on hold. So that was the prevailing wisdom. It's completely flipped on its head now, where the dollar's weaker today and treasury yields are lower. Why? Because growth is a bigger concern than inflation.
And we mentioned obviously the financials in the last hour. You led this hour as well, Sarah. I mean, the performance of these stocks right now is notable in the sense of you got Citi down almost 8%, Bank of America down plus 6%, Wells Fargo similarly. That's a reflection of a concern, right, about a slowdown in economic activity.
Growth, and we don't have higher for longer maybe anymore. We're going to get maybe more interest rate cuts priced in. We're now pricing in 3 cuts plus. So that's changed. The trade flows, they get hit with that too when there's disruption in that. And, you know, also at a time where the consumer is looking increasingly fragile. And there are many ways we can see that from consumer confidence to how about Target? I mean, I did get to speak with Michael Fidelki, the COO of Target and the EVP, about what they're seeing in February, and they saw a decline. I mean, they characterize the consumer as still budget conscious, choiceful with their budget, resourceful with their budget. But the softer start to the year in February, where they actually saw the sales decline, it's why they gave appropriately cautious guidance, according to Fidelki. Not to mention the fact that tariffs are a pretty big deal. 50% of their goods are produced in the U.S., 50% are abroad. As far as what they saw in Q4, the numbers were good. I know you guys talked about this, encouraged by the stronger traffic, the 2% traffic growth, strong growth in share performance in apparel. That was notable, I think.
Okay, Apple trying to bounce a bit more. We got initial resistance at 239, 240, and then 240, 250.
Defining characteristic and something that distinguishes them from Walmart. But the bottom line on the consumer, guys, is those comments and what they're seeing in February jots with some of the macro data, which has been a little bit of an when it comes to the consumer. We'll see what we get for jobs on Friday.
Meantime, the S&P is down about 1% right now after the worst day since December. The election day gains have now been lost. NASDAQ's officially in correction territory. Our next guest does suggest shifting to lower growth, lower risk positions. She likes Amazon, NVIDIA, and Broadcom. Joanne Feeney joins us, Advisors Capital Management Partner.
All right, starting to push higher, Apple.
You've been making some of these moves over the last couple of months?
Yeah, that's right. You know, obviously there's been plenty of chatter about these coming tariffs, and the president of the United States has the power to impose tariffs, doesn't need congressional help there. So we've been pretty worried about this. And so in our balance strategy, which is designed to be relatively conservative, but still deliver good growth over years.
Apple, you got the 50-day overhead as well. Futures at the low of the day.
We did that over the last couple of months. We reduced some of our technology.
If you're going to buy anything, look at defensive sectors. Those will most likely carry the trend over the next few days, next couple of weeks.
Whether that's an Altria, we also continue to really like some of the healthcare names like AbbVie and Johnson & Johnson. It might be boring to be in some of these names, more utilities like Duke Energy, but right now in this environment of elevated policy risk, not just the tariffs, but also potential government shutdown and global political risks, we think it's wise to just shore up the defensive side of portfolios.
You heard what you just said, defensive. All right, so there you go.
You know, obviously we're going to be sensitive to the changing political dynamic. We don't know if these tariffs on Mexico and Canada, China, and potentially new ones on Europe, we don't know how long they'll last. But if the administration wants to engineer a change in manufacturing, that means they're going to be around for quite a long time. And so it's not clear one wants to run back into industries that are in the middle of that. Nevertheless, we still think there's opportunities here for growth, secular growth from AI, from cloud, from cybersecurity. Those things will remain even in a tough environment like the one we're now facing.
I see we're showing some of your moves into Broadcom and NVIDIA. I mean, we are still, even aside from the tariff discussion, dealing with the DeepSeek wrinkle, the maybe lack of ratification on whether these CapEx dollars are going to at least be high margin businesses. Explain why that trade makes sense.
Yeah, we've owned Broadcom for 10 years and NVIDIA for quite a while. So we don't, at this point, raise our positions in those, but we are pretty confident that growth run is going to last for a long time, even with something like DeepSeek. That technology was known around the industry before DeepSeek hit public awareness, and it doesn't really change the narrative. It just means that if you have better and better chips, you're going to be able to do even more. And that's why we have not seen CapEx cuts from the hyperscalers. We see them doubling down. We see Blackwell, the chip from NVIDIA, still in a shortage position and just ramping, and a new one coming at the end of the year. So we do see that as a really strong secular growth opportunity. In fact,
all right, so we're still drifting a bit lower.
relative to their growth opportunity and relative to the market. So if you're not an owner of NVIDIA and you have a sufficiently long-term perspective, that would be one to take a serious look at this point.
Yeah, you're not the only one today. Citi as well reiterates their buy on NVIDIA as we bounce off 109 and change. Important day, Joanne. Appreciate the clarity and insight. Good to see you. Joanne Feeney.
You bet. Take care.
As we head to break, here's our roadmap for the rest of the hour. The read on retail. Target and Best Buy both out with earnings, both seeing sharp declines. We're going to break down the numbers.
Plus, tech's tumble. The Max 7 continues to underperform. NVIDIA, which we're just talking about, that's the lowest level those shares have seen since September. We'll discuss, of course, if there is more pain ahead.
And the Canadian Prime Minister Trudeau, big press conference this hour. We'll take you there live when it happens as Squawk on the Street continues after this.
Now time for some of today's trending tickers. You can scan the QR code below to track the best and worst performing stocks of the session. Do it all, Yahoo Finance's trending tickers change. First up, let's take a look at Best Buy's halfway through the quarter expectations. And they did warn of some impact from tariffs. The retailer CEO saying that price increases are likely to be passed on to the consumer as a result of the new tariffs that are being implemented. Joining me now, I want to bring in Seth Basham, who's Wedbush Securities equity research analyst. Seth, it's good to have you here. Tell me just about the results and some of the commentary that we're getting out here from Best Buy as a CEO. Obviously, same-store sales rising for the quarter, snapping 12 quarters in a row of negative growth. That's obviously looks like maybe we have turned a corner. Are tariffs going to reverse that?
Most likely they are, unfortunately. The uncertainty caused by tariffs is leading consumers to pull back on big-ticket discretionary spending. You're seeing that in consumer survey data, sentiment data, and we think that Best Buy sales will likely decline again in the first quarter and potentially for 2025 if the tariffs really stay in place here.
How likely are you thinking that might be set? And what are you looking at in your models and changing?
Okay, Apple did respect that area of supply shorts again.
Yeah, certainly. When we think
Supermicro. Supermicro. Nice little bounce today, but below the 50-day.
Market is deteriorating as we speak. The S&P is now down almost 2%. Almost every sector is lower except for consumer staples right now. The declines in financials, wow, down 3.6% as a group, but some heavy selling in some of these names, which were thought to be big beneficiaries of the Trump trade, deregulation, pro-growth policies, all that. Not today. And consumer discretionary is right down there with it, down 3.4%. Tech is getting slammed as well. The Nasdaq's down 2% right now for the week, and it's only Tuesday. We're down 4.6% on the week. I mean, it has been a challenging few weeks here, and those losses are really starting to pile up. Buying of bonds with yields sharply lower. Retail's in focus as well.
All right, Supermicro.
Tariff impacts and also new numbers this morning out of Target and Best Buy. Consumer discretionary, one of just two sectors now in the red on the year. Here to break it all down, Michael Baker, D.A. Davidson analyst. It's good to have you, Michael. Clearly, tariffs are front and center, and that's got to be part of the selling today. But what about what you gleaned on the consumer from both Best Buy and Target?
Yeah, I'm here at the Target meeting today, and what we're hearing today is very similar to what we heard from a couple of retailers last week, which is Really strong fourth quarter.
Okay, so we have about 75, 80% of stocks on the NASDAQ 100 that are red on the day, declining, advancing stocks, Biogen, Amgen, AstraZeneca, AEP, Regeneron, mostly defensive stocks are in the top 20. And some of the only stocks that are green, Gilead, BRSK, XCL Energy.
Well, it's the idea that discretionary categories might get hit more in a tariff environment. Both Best Buy and Target Plus, they're going to pass pricing through, but that will probably or could definitely hurt units, and that's the issue. That's what Best Buy said this morning, is that tariffs could hurt them by at least 1% on the top line, because they will raise prices, but they expect at least a bigger offset in terms of units. So the discretionary categories, and Target and Best Buy aren't alone in that sense, but they do have higher exposure than, let's say, Walmart to discretionary categories. Those are the ones that presumably get hit a little bit more.
Can any of these companies buy more stuff in the U.S. to avoid more tariffs, or is that just not possible in these categories?
Well, it's buying in countries other than China, Mexico, and Canada, and that's been a trend that's been happening. But to move outside of those countries and to move more in the U.S., that takes a long time. I think that's generally the idea over time, but that can't be done.
Okay, Supermicro, just watching that one. Biogen, Amgen. Okay, Biogen breaking higher. Biogen.
You push, the easier that is to see Walmart. We think they'll be successful at that. The second alternative is to eat some of the margin, and I think that's the concern, and that's what you're seeing in the stock today. And the third alternative is to pass through, and that's where you could see a little bit of a hit on units. So that's the other issue, particularly for discretionary retailers. Again, the non-discretionary type retailers, warehouse clubs as an example, Walmart should have an easier time not seeing that unit degradation because you're selling needs, not just one.
Really quick, because you are at the Target meeting, I know they're laying out all sorts of long-term initiatives and flashing new partnerships. They just did one with Authentic Brands as Champion, for instance. They're going to open new stores. They're going to lean heavily on digital, which performed well in Q4. Is there anything you're hearing that makes you a buyer on the weakness today and what we've seen from Target lately?
Yeah, well, sure. That story is all very positive. And let's remember, 2024 was a difficult year, but they ended up making their full-year guidance. So towards the low end, but they were in line with what they said a year ago. They had a really good holiday season. It's been volatile in terms of the quarters, but things are going reasonably well, with the exception of February and now the uncertainty of the tariff. But longer term, yeah, we think they're well positioned, particularly where the stock is now. I say yes, you should do it now. If you buy a car, you like it.
Better car now. Used maybe is better than
Right now.
right now.
It's changing.
And you laughing, because I personally have asked for us.
And we saw last month used car prices were ticking higher in an unseasonable time. Usually a time when they're lower, they're taking higher. So it's already happening.
That's a lot for us to think about here. Not so much working down. All right, let's take a look at Apple. Apple introducing a new iPad Air. The company saying that it's a faster and more powerful model built for Apple Intelligence. The tablet coming in at 11 inches and 13 inches sizes. Now it's expected in stores next week. Apple's iPad revenue climbed 15% from a year earlier in the fiscal first quarter, which the company reported last month. So they're seeing some momentum here. Questions about whether or not the debut of this faster iPad Air is going to be enough to sustain some of that tablet growth. But again, there is some excitement surrounding these new products. The product pipeline, very grateful here.
Okay, Biogen, Amgen. If you absolutely must do any trading, I would suggest following the data. The data suggests XLP, consumer staples, XLV, healthcare, and XLU, utilities, are where institutions are putting money to work, positioning very defensively at present. Tech, not so much. All of the stocks look pretty good this morning for the most part, some of these tech names. Apple's holding up okay, but the rest of them pull back. I would steer clear of tech for now. You might think you're going to get a nice scalp or short-term day trade. You may do well. But I would suggest looking at defensive or do nothing. You don't have to be investing right now when the markets are pulling back, right? When you dig a hole, or when you're in a hole, you don't want to keep digging, right? So we're right above the 200-day moving average now. This could be an area where we see money coming in. All right, so the S&P is right down at the 200-day. I didn't think we'd get there, but there we go. And we'll continue to drift a bit lower. All right. Sorry about that. Okay. Biogen continues to rise. Okay, let me shift to the S&P. I had to take my son to school a little early today due to the fires. Got to go around a different area. I'll be back be back right around 11:30.
Michigan professor of economics and public policy, Justin, great having you here on Down Finance. Just talk to me just about of this escalating trade war, what it ultimately means here for U.S. economic growth.
Right, so there's two sets of issues here. There's the tariffs that the US has put on the rest of the world. Those tariffs, to be clear, are actually not tariffs on the rest of the world, they're tariffs on Americans. When you go to buy a washing machine from Home Depot has imported that washing machine from abroad. In order to clear customs, Home Depot now has to pay tariffs on that washing machine. Home Depot, simple law of economics, when costs go up, you jack up your prices. Home Depot's going to jack up your prices. So you and I and all your viewers are going to see higher prices for the goods that you buy from Mexico, Canada, and China. That's 2/5 of our imports. That includes a lot of the fruit and vegetables that certainly my family eats every week. Then there's the tariffs that are in retaliation. Each of these countries has already announced retaliatory tariffs. That says that the global marketplace that has historically been open to American businesses, where we can produce the best stuff in the world and sell it all around the world, is starting to become closed. Look, we've seen this movie before. This was the first Trump tariffs under the first Trump administration. China put retaliatory tariffs on American farmers, and it didn't take long before they went to the White House asking for payouts in order to help them struggle through what have become very difficult business conditions. So we're going to pay more at home. They're going to struggle to do business, and in a couple of months, you'll be looking to see American taxpayers bailing out American companies that have been hurt by these White House actions.
So Justin, who do you think is going to blink first, the Fed or Trump, when it comes to especially the market reaction to some of this tariff news and the potential that the market is going to erase all of the post-election gains that we've seen?
So to be clear, the US stock market today, measured by the S&P 500, is at a lower level than it was the day before the election. That's the US stock market judging that the current administration is less good for the future profitability of American businesses than they thought the day before election day. And this is despite the very large tax cuts promised by the administration. So it's a very sharp vote of no confidence. I don't think that this is a question of who's going to blink. It's not a strategic interaction. Canada's not trying to get us. They're not trying to knock us out of any particular market. They're doing exactly what we all thought we'd agreed to do with NAFTA, which is coming together to see if we could produce more together than we could apart.
Right.
They went through the circus
Justin,
renegotiating it.
Just to be clear, sorry, I mean, is the Federal Reserve going to potentially react more quickly to any market negativity that we're seeing than the Trump administration?
I don't think so. The Federal Reserve partly wants to stay apart from politics. Also, at the moment, we haven't yet seen any impact on growth. It'll cause growth to slow. That would normally cause the Fed to cut interest rates, but it's going to cause inflation to rise. That would normally cause the Fed to raise interest rates. So it's a very difficult balancing act, but I don't think of the Fed as being a particularly major player here. We do know that the president historically listened very closely to what financial markets were saying. Financial markets are saying they hate his latest actions.
Justin, I'm curious just in terms of some of the recent data and some of the trends that we are seeing. And Sam Rowe of the Ticker, in his post this morning, reflected on a chart that Morgan Stanley recently published, if we could pull that up. And they talked about on earnings calls, they did an analysis right now of earnings call transcripts, and they were talking about the pull forward mentions that we're starting to hear and that we have heard from a number of companies here over the last several weeks. And we have seen that number tick higher here in the most recent quarter. I guess my question to you is, ultimately, what impact does this have on the economy? To what degree is this really moving the needle, if at all?
Right, so there's a very weird short-run thing that's going to happen, which is we all knew tariffs were coming, and so some of the more sophisticated players realized, let's get in there and buy. I had neighbors who bought their family car in January rather than waiting till March. But more than that, we've seen businesses that need raw materials really pull forward a lot of their spending from what would have been March and April into January and February. In some sense, by the way, this means that the Trump economy began before he actually came to power because people understood what he was going to do. So that has led to a very sharp surge in imports in January. We've got the early data on that. In February, we're going to see an even sharper surge. The US trade balance blows out. And that's going to have all sorts of weird effects through the rest of our economic measures. So my advice to your viewers is be very careful about interpreting economic data over the next few months, because you'll see a huge surge in imports followed by a huge decline in imports, both of which are basically due to trying to front run the imports. And that's going to have effects all through our economic data. And it's actually going to be several months until we see what the underlying shape of the economy really is.
So how does that viewpoint impact your thesis about where we're at in this economy, Justin? And how should our viewers be thinking about how much weakness there is in this economy? Is there significant, substantial weakness? Are we in the middle of a slowdown? How would you characterize it?
So I think I'm an optimist. The president inherited actually a remarkably strong economy. We have unemployment very low. We have inflation around about 3% and heading back down to 2%. We have the Fed on a path back to normalization. We have reasonable rates of economic growth. So before January 20, I was thinking to myself, wow, this all looks pretty good. And that's basically the answer I want to give you. The problem is a lot has happened since January 20. There's two shocks in particular I want you to keep your eye on. The first is if you look at measures of economic uncertainty, they're at almost record highs now. The pandemic actually caused higher levels of economic uncertainty, but beyond that, we've never seen uncertainty like this before. And if you were the CEO of a major business thinking about breaking ground on a new factory or purchasing new robots or overhauling your software, you might think to yourself right now, amidst all this uncertainty, you know what, I'm going to wait 3 months to see how all this pans out before I start spending money. Now, if enough factories do that or enough families do that, that creates its own economic problems. And then the second thing we're already seeing is consumer and business sentiment have really cratered over the last couple of weeks. What the president has been doing has been immensely unpopular. The American people don't believe that this will be in their best interests. And the real question for the economy is, people say they don't like it. Are they going to act that way? If so, they're going to pull back on their spending. And if that's the case, that could be the first shot fired and something of a downward spiral. And I'm very worried about that.
And on the topic of consumer spending, we're just pulling up a chart of that Moody's study that I know you've heard about from this week. The top 10% of earners are making up half of consumer spending. What impact does that dynamic and that wealth gap and spending gap have on the economy if it continues?
Look, the economy's not some weird third thing that's out there. It's you and me and our lives. And if a small number of people get to do half the spending, that means a small number of people get half the stuff. And that means there's less stuff for the rest of us. It's as simple as when we have enormous inequality like this, that suggests there are many families that are doing without. And the only ways to help those families are to grow the pie and to grow the size of the slice going to those folks. And they're the two ways forward. I'm not sure which of those is the Trump administration's current goal, because it appears to be serving neither goal well.
All right, Justin, thank you for breaking it down for us and joining us. We really appreciate your insights. Thank you.
A pleasure.
Before we head to break, we want to go live to Canada. You're looking now at a live shot as we await comments any moment now from Canadian Prime Minister Justin Trudeau in response to the U.S. tariffs imposed on Canada today. We will be monitoring this for any updates and we'll bring you news as we get it. We'll have much more coverage ahead on Catalyst.
Cleaning is a stressful chore. You can scrub by hand all day. There has to be a better way. Now there is with the Spinny Scrub, the revolutionary handheld spinning scrub brush that makes cleaning a snap. Make pots and pans shine. Deep clean your grout and tile. Even filthy shoes look like new. The Spinny Scrub is easy to recharge and store away. And with detachable cleaning heads, you can relax and let the Spinny Scrub do all the work. Scan the code on your screen or go to spinnyscrub.com and order your Spinny Scrub today.
CoreWeave, one of the hottest names in AI cloud computing, is going public. Backed by NVIDIA, this one small startup is now eyeing a valuation of over $35 billion. Founded in 2017 as a crypto mining firm, CoreWeave then pivoted to AI cloud computing, riding that explosion in demand for those high-powered chips that train AI models. In 2024, the company brought in $1.9 billion in revenue, a huge jump from just $229 million the year prior. But with that growth comes losses, $863 million in losses last year alone. Now, CoreWeave's big name backers include NVIDIA, JP Morgan, and Fidelity. It even secured a $650 million credit facility from top banks like Goldman Sachs and Morgan Stanley. However, the company does rely heavily on just two customers. One of them is Microsoft. They accounted for nearly 2/3 of CoreWeave's sales last year. Now, CoreWeave is set to trade on the NASDAQ, ticker symbol CRWV, with Morgan Stanley, JP Morgan, and Goldman leading their IPO. Some of the company's challenges. CoreWeave did disclose weakness in its financial controls, and its rapid expansion means high costs and potential growing competition. But still, as AI adoption surges, CoreWeave is positioning itself as a leader in the cloud infrastructure space, making this IPO one to watch, even amid growing concerns about IPO pipelines more broadly.
Well, IPOs this year raising $6.6 billion, with 48 companies filing to go public so far. Now that's an increase of nearly 60% compared to a year ago. That's according to the latest data out from Renaissance Capital. For more, we want to bring in Brianne Lynch, Equities and Head of Market Insight. And Brianne, we certainly are seeing some volatility on the rise here on the heels of the tariffs that were just announced by the Trump administration. I guess my first question to you is ultimately, what does this mean here for the IPO landscape? Is this a risk here of potentially slowing down some of that deal momentum?
Great to be here. And, we entered 2025 expecting this to be a big year for IPOs, and a lot of the things that have happened in the market over the past few weeks are adding concerns for investors. So tariffs, you mentioned, concerns about inflation and the fact that we might not actually see rates come down in the near future are all things that are weighing on that investor sentiment. And the early IPOs we've seen as well haven't really given a vote of confidence for other companies to follow. You have Venture Global trading down about 40% from its IPO price. SailPoint IPO'd last week about flat. So I think a lot of investors are hoping a big tech company like CoreWeave could be the one to reverse that trend, because certainly we're not seeing strong IPO traction yet.
How has that conversation, I guess, changed from the companies that you speak with? Was there a little bit more momentum following the election results that you've seen slow down in recent weeks?
Yeah, there definitely was a sense of momentum that we were seeing in the market, and it's been building over the past 2-3 years. Globally, you have over 1,200 of these unicorn companies, so companies valued at $1 billion, that have been waiting for their next move. And for many of them, that's an M&A event or an IPO. And, I think many thought that we would see more M&A given more of a risk appetite and, allowing more M&As to happen, less antitrust. But that's something that hasn't really panned out. And IPOs, given where the market is still a bit shaky. But I think for a lot of these large companies like CoreWeave that are generating a ton of revenue and growing, they have opportunities to grow in the private markets, and many are choosing to do that while they wait out the volatility.
Brian, what does investor confidence look like here in these newly public companies?
Yeah, I'd say in newly public companies, we've seen a little bit more investor trepidation. It's more of a risk-off appetite than we had expected coming into the year. So investors are a bit more cautious than maybe we had anticipated. But there still is this growing demand to participate in the innovation and growth that is changing industries. So when you look at AI companies in particular, a lot of these companies are growing so rapidly, like CoreWeave, in the private markets, that investors that are looking for that growth and looking for a little oomph in their portfolio are moving to the private markets and saying, hey, I'm not going to wait till the IPO. I'm going to invest earlier because it's questionable when these IPOs might happen.
Yeah, that's really interesting. I wonder, too, if you can talk about how we're seeing that play out from a global scale. I know we've seen this trend of companies transferring their listings, coming to U.S. exchanges from foreign. Do you think that could potentially be a bigger pipeline than new companies, new IPOs getting listed on U.S. exchanges?
Yeah, I think there is an opportunity there. The U.S. market is, the largest financial market, in the world, and a market that investors and companies are looking to, participate in and, be in front of U.S. investors. So I think that's one component of it. But I think more broadly, we're going to have to see, a little bit more macro certainty or a few IPOs do exceptionally well before more companies will decide where they want to play their pieces.
And for investors out there, our audience is trying to figure out where we're going to see most of that activity. Where do you think it's going to come from?
When we look at companies on our IPO outlook, there were a few main categories they fell into. Cybersecurity being one, hardware like CoreWeave falling into that AI infrastructure play, and then fintech companies as well. So those are some of the key categories we're looking at. Klarna is a company that's filed their S1 planning to go public. And they fall into that fintech bucket. You've got CoreWeave again in this AI infrastructure bucket. And then cybersecurity companies being another one that's a big focus area.
All right, Brand, thanks so much for breaking that down for us. I appreciate it.
Thank you.
Let's do a quick check of the selling action that we're seeing across the board here. You've got the Dow, S&P, and NASDAQ all in the red once again. The NASDAQ in correction territory, off just about 1.5%. We're seeing the sell-off extended from yesterday. Now, when you take a look at some of that concern creeping into the market, obviously on the heels of the newly implemented tariffs from the Trump administration, rattling investor confidence here for a second day in a row. You now have the Dow off just over 750 points. The S&P losses of 1.7%, were again one of those critical levels to watch. One of the next critical levels to watch, as Maddie pointed out earlier in the program, is 5,700. When you take a look at the move to the downside here, we have wiped out those post-election gains. When you take into account ultimately what this means maybe for that trade moving forward. Of course, the question to so many investors that we have been asking strategists here this morning is whether or not some of that selling pressure is over. Nancy Tangler telling us earlier in the 9 a.m. hour that we could have another 5% or so to go, just depending on the developments of retaliatory measures that we're expected to continue to get here. Again, Mexico expected to announce that in a couple of days. We're also waiting the latest reaction from Canada's Prime Minister Justin Trudeau. He's expected to speak any moment right now. So we will bring you those headlines as they cross. If you can flip it over to the bond market as well, we're seeing this move lower here in yields. Now the 10-year yield as well as the 2-year yield hitting the lowest levels that we have seen since at least October. You have the 10-year yield right around 413, 414 now, off another 4 basis points. Keep it right here on Yahoo Finance. Much more of your market action ahead. We'll be right back.
Hey, it's Patrick. You want to elevate your home? Check out the Studio Pro Centrifuger from Hotel Collection. This compact and efficient diffuser uses advanced cold air diffusion, filling your space with rich aroma. It can cover up to 600 square feet. If you know me, you know I love the Nobu Hotel. My new favorite scent, Matsu, I get to bring the hotel home. Turn your home into a luxury escape and live like you need.
Looking for a new TV for your home but are overwhelmed with the options between brand, size, mounting? It's overwhelming. Premier Sound Security and Automation is here to take the stress away this holiday season. Right now, you can buy a 65-inch LG or Samsung Ultra High-Def TV delivered and professionally installed for just $8.99. Call now and you can have this completed within 48 hours of booking. Shop local this season at Premier Sound and Heat.
I miss you.
I miss you too.
Love has this habit of messing everything up.
What is this?
It's present.
I fell in love all over again.
On this canvas, I have absolute and total power. I can do anything here my heart desires. I can change the course of muddy rivers. Anything. When I go home, the only thing I have any power over is the garbage. It sits there and waits on me. There we are. But that's okay. I can always escape to this piece of canvas and create any illusion that I want. And so can you. And there's a big old root on this tree. It comes right out. I can.
Worries over a global trade war and a drop in optimism over that U.S. crypto reserve, they are weighing on Bitcoin and the crypto trade writ large. But just how far might Bitcoin fall? I'm Jared Blicker, your host of Stocks in Translation. Let's take a look at what the technicals are telling us about Bitcoin's potential next stop. So I thought we'd get back to basics here and just review the definition of a trend. This is very important. A bullish trend is a series of higher highs and lower lows, while a bearish trend is a series of lower highs and lower lows. And I'll also add that the market can go sideways, frustrating traders, breaking out to both the upside and to the downside. But first, let us establish the longer-term trend in Bitcoin, and that is up. This is a 3-year chart. So we take this low here from about the beginning of 2023. We can just kind of eyeball and see that it's zigzagging up and down. But critically here, we have higher highs and higher lows. And if we were to pivot right here, you might think, well, we can go higher, but we also have to consider the converse of that. If Bitcoin now falls below, what is that, about 50,000, then we have a series of lower lows. And if you look at the short-term time frame, this is going to really be illustrated because over the last 2 months, I'm going to put some candlesticks on because it's kind of important to the presentation. It might be a little bit hard to see, but I'm going to draw in these trend lines right now as I see them. So here we have a low, here we have a high, here we have a lower low and a lower high, and this brings us to where we were 24 hours ago or thereabouts. That was when we were looking at the crypto reserve news, really just catapulting crypto and Bitcoin to higher prices. However, as you can see, we are in the midst of a short-term downtrend, and this has important implications because what happened yesterday, I'm going to draw a line right here. If you take this high over here, and this is the ultimate high of Bitcoin, 109,000, and then you take this low here, it's about, I don't know, that's 70 in the, I'd say about the low 80,000s. You take that, we have a 50% retracement. That is a midline here, and then we can put a target down here. It's a negative 23% retracement. I don't want to get too wonky here, but this target sets up for about 71,000, 70,800 exactly. And you combine that with the price action support that I was noting the other day, and let's get that in here. This is volume support. That's what we see here. These are transaction areas. This area right here marks a very important price action potential support. That is right around 70,000 as well. So that gets to my ultimate thesis that Bitcoin right now is probably heading toward the low 70,000s, at least before it gets to new record highs. So on that note, tune into Stocks in Translation for more market decoding deep dives and episodes every Tuesday and Thursday on Yahoo Finance's website or wherever you find your podcast.
All right, Jared Blicker, thank you so much for joining us. We appreciate it. to get a check back in on the markets, especially the selling that we are seeing here. You've got U.S. stocks reversing and continuing their losses here. You've got the S&P 500 down about 1.5%, the tech-heavy NASDAQ carrying those losses here. One thing I think is really interesting, as the S&P eyes its 200-day moving average, if it hits that level, we could see more selling. I think the sequencing really matters. This is something I talk about a lot on Capital Gains, our politics show. In 2018, we had corporate tax cuts first. This time around, that is not the case. Also, corporate tax cuts are somewhat priced in at this point. They're just going to be a continuation. So even if we do get those tax cuts, will that relieve the pressure that we're seeing on markets from these tariffs? That, of course, is a big question that remains to be seen.
Yeah, certainly. When you take a look at that 200-day moving average, Maddie, some of that selling pressure, you're right, the sequencing clearly being reflected in some of that concern that we are seeing creep into the market here, or has been started to creep into the market over the last just several trading days. But again, when you have the S&P right around 57.64, that critical level to watch here, 200-day moving average, 57.25, and why, like you said, it could accelerate some of that selling there. So again, that's important to keep in mind. And of course, this comes as investors and strategists question a Trump put and whether or not what level the S&P could potentially need to fall to in order for Trump to blink here. So we will see. Very much up for debate. All right, coming up next is Wealth. Maddie has you for the next time.
Welcome to Yahoo Finance Sports Report, a unique look at sports business brought to you by Yahoo Finance and Yahoo Sports. I'm your host, Joe Pompliano, and I'll be breaking down the financial side of the game for your financial gain. We'll go beyond the headline, analyzing all the latest sports news, the teams, the trades, and billion-dollar deals, so you and your portfolio will win big. Catch Yahoo Finance Sports Report on Thursdays on all your favorite podcasts and streaming platforms.
1 second, they're a neighbor you left. The next, they're a neighbor you trust. 1 second, you're worrying about your home. And then, thanks to ADT, there's a lot less to worry about. Feel secure enough to let others in with Trusted Neighbor from ADT.
Okay, no one's gonna make a fire. Our job is to let him do it by himself. Kind of what you got there, Craig? It's important to challenge young homeowners turning into their parents. Oh, not a great start. Get a turn. You got to turn it. Doesn't look structurally sound here. Tom? They can't help themselves. A fire starter? Okay. You know, cavemen, they built fires with nothing but their wits and their bare hands.
Progressive can't protect you from becoming your parents, but we can protect your home and auto when you bundle with us.
Yeah, watch this.
Easy. Find a pet-friendly Italian restaurant with outdoor seating and extra food.
It's time for Yahoo Finance's Market Minute. Stocks plunging as tariffs on Canada, Mexico, and China go into effect. NVIDIA shares extended declines today after falling more than 8% Monday, hitting its lowest level since September amid tariff woes and potential trade export restrictions. Target under pressure after the retailer warned that uncertain consumer demand and tariffs could weigh on its next quarter. Target's fourth quarter did blow past Wall Street's expectations thanks to stronger than expected sales in its discretionary categories over the holidays. Also, Okta shares jumping on better than expected fourth quarter earnings and revenue. The company's CEO told Yahoo Finance that identity and security are very important for companies and governments, which will be exciting for Okta's next year and beyond, according to them. That is your Yahoo Finance Market Minute. For more on what's trending on Yahoo Finance, scan the QR below where you can track the best and worst performing stocks. of the session. Welcome to Wealth. I'm Madison Mills, and this is Yahoo Finance's guide to building your financial footprint. Our community of experts will give you the resources, tools, tips, and tricks to grow your money. On today's show, stocks under pressure as President Trump's tariffs on Canada, Mexico, and China spark retaliatory tariffs. We'll discuss strategies and help you insulate your portfolio from the volatility. We'll also dig into the items you use every day that could be impacted by those tariffs. We'll talk to an expert about when to expect an impact on your wallet. Plus, hosts of Yahoo Finance's Living Not So Fabulously will join the program and give you 3 ways to save up for a down payment in an expensive housing market. Well, President Donald Trump's tariffs on Canada and Mexico, plus that additional tariff on China officially going into effect this morning. All goods imported into the U.S. from Canada and Mexico will have 25% tariffs, imports from China totaling 20%. So how do tariffs impact prices? Like a lot of things, it comes down to supply and demand. If consumers want something badly enough and companies know it, they might pass on the full cost to their consumers. But if there's plenty of supply and consumers can take their money anywhere, they may stick with products coming from companies that find a way to keep their costs low. Let's say there's a 10% tariff on imported goods. Does that mean you're going to pay exactly 10% more? Not always, right? One example, tablecloths from India. A 10% tariff would likely only raise prices about 2% because tablecloths are made everywhere. If India's get pricey, stores just buy them from other countries. That competition keeps prices low. Then we've got another example, gaming consoles. If a PlayStation made in China gets hit with a 10% tariff, you will potentially pay exactly 10% more because there's no real alternative. You're not switching to an off-brand console that gives Sony, Microsoft, and Nintendo the power to make you eat the full cost. Now, it doesn't stop there. If tariffs hit Mexican-made cars, it's not just those cars that get pricier. Dealers could raise prices on all their cars to keep margins high. The same thing happened with washing machines and even dryers when tariffs hit appliances in 2018. Now, China retaliating against U.S. tariffs, adding 15% to U.S. farm equipment. China accounts for a large chunk of U.S. agricultural exports, 17%, according to the Department of Agriculture. Equipment manufacturers will then potentially raise prices for all of their products, putting grocery prices at risk of rising even more than they already have. Bottom line, tariffs don't just add prices. Companies use them to reshape prices across the board. We're going to have more tariff coverage for you throughout our hour, including the impact on gas prices and the housing market. But first, let's take a look at the market action 90 minutes into the trading day. One big headline we are monitoring, stocks reversing the rally that we saw following the election of President Trump. You can see here your S&P 500 hovering around 57.55. That's also nearing the 200-day moving average. So questions about whether or not we see more selling once it hits that. Again, this comes as the global trade war escalates. U.S. tariffs of 25% on Mexico and Canada taking effect. Joining me to discuss, we've got David Dietz with Dietz Wealth Management Group's Chief Investment Strategist. David, thank you for joining me here this morning. What are some strategies for investors to navigate the volatility and uncertainty presented by tariffs?
Sure. I think 2 key strategies. One is stay diversified here. You know, we have seen, of course, people make big profits in the Mag 7 and so forth. But when you look really year to date, that's where all the losses have been, while other areas that people perhaps have taken a light touch within their portfolios, for example, international diversification, Europe stocks are up over 10%. So down 7 in Mag 7, up 10 in the European stocks. You could mitigate a lot of that down 7 if you included some of that. So that's one thing. Of course, always remember the fixed income component in your portfolio. We've seen, for example, the 10-year Treasury drop in yield about 40 basis points since the start of the year. Yields come down, that means prices go up. So that's another bulwark for your portfolio. I think the other key thing investors need to keep in mind is don't react too quickly. We have seen all sorts of instances just since the inauguration day of kind of flip-flopping on strategies. The tariffs against Canada and Mexico were on, then they were postponed for 30 days. Things can change very, very rapidly. And so I particularly those who have a investment horizon more than a nanosecond, be cautious about reacting to every single twist and turn in the headlines.
Well, there's this idea in the market that corporate tax cuts could be a little bit of a cushion to some of the selling that we are seeing off the back of those tariffs. Do you think that the market will react positively if and when we do get confirmation of those continued tax cuts, or is it not the same cushion that it was in 2018?
Well, since they're already in effect, and it's merely an extension of the pre-existing corporate tax rates, I don't think you're going to get the same sort of bang for your buck as we did back in Trump 1.0. But nevertheless, it will be helpful. We're looking at other tax provisions too that could be useful for consumers. For example, perhaps the lifting of the SALT cap, which could help consumers in high tax states. And of course, there's other little things, on tips and so forth that could also help other consumers and so forth. But I don't think we're going to have a huge tailwind from the extension of the corporate tax cut.
So what's your single best trade idea for the next year for investors who want to hedge against any risk from policy uncertainty?
Well, again, stay diversified. Certainly, dividend-paying stocks can make all the sense in the world here because those have lagged behind really for the last decade as people are ignoring yields 3, 4, 5% per year, which are growing with earnings as they've chased the non-dividend-paying tech stocks. But if in fact this economy slows, and there's every reason to think that the policy volatility along with tariffs will cause a slowing in the economy, then interest rates continue to come down. And of course, the value of dividends, and of course, even more importantly, dividends are growing, is going to be worth that much more. So that's a general theme that I think investors could pursue.
And what about SMCI? This is one of your top picks. It's been a fascinating stock to monitor here. It's down about 30% in the last 5 days, but it has seen a run up year to date here. What's your base case and your bull case for SMCI?
Yeah. So what I love about MCI is they're making some of the hardware and servers that are going to help further the AI revolution. In fact, NVIDIA at one of their investor conferences particularly cited SMCI, Supermicro, as an important partner as we build out the AI infrastructure here. But the stock, of course, had some issues. First of all, it got way up into the stratosphere at about 122. And then, of course, they had some accounting difficulties. They fired their auditors. There's a chance of delisting. That seems to be past them. In fact, they finally got that problem resolved. But the stock pulled back about 13% yesterday. It is up today. And as you know, a very ugly tape here. And what I like about Supermicro is the growth is fantastic. The debt is low. The accounting problems seem to be the rearview mirror. And you're buying something that's trading about 12 times earnings instead of 12 times sales, which is pretty good in the AI environment.
All right, David, we got to leave it there. Thank you so much for joining us. Appreciate it. It's now time for some of today's trending tickers. Scan the QR code below to track the best and worst performing stocks of the session. The Yahoo Finance's trending tickers page. First up, On Holdings beating on the top and bottom line in the fourth quarter, reporting 36% sales growth from the prior year. Sales outlook for the full year essentially meeting expectations. KeyBank calling those results better than expected. Truist saying the results and outlook cleared a high bar and touted underlying demand trends. Citi calling the results a big beat and thinks the sales outlook is conservative. That stock up 3%. Next up, AutoZone missing on the top and bottom line in the second quarter. Comp sales rising 0.5%, but falling short of analyst expectations for 1% growth. There's a big drag from international comp sales falling 8.2%. CEO saying currency rate moves pressured sales and earnings in the international business. And finally, we'll flip it over to Kraft Heinz, known for its ketchup and mac and cheese, of course, entering the alcoholic beverage market. Company rolling out a new hard seltzer with Crystal Light. Kraft Heinz says nearly 1 in 5 Crystal Light fans already use the product as a mixer for their cocktails. The vodka refreshers are 77 calories with 0 sugar. They'll hit shelves this month at select retailers, costing $9.99 for a 4-pack. The company expects new flavors and multi-pack options in 2026. That stock up 1%, which is bucking the broader trend of selling that we are seeing in a lot of these consumer-facing names this morning. Well, tariff woes and weak economic data have driven volatility over the past few weeks. Just because the headline indices have given up all their year-to-date gains, this doesn't mean there isn't value to be found in the market. Joining me now to talk about that, we've got Michael Sonnenfeld. He's the founder and chairman of Tiger 21. It's a peer membership organization for ultra high net worth investors. Michael, it's great to speak with you because you can give us such a great pulse on what the ultra wealthy are thinking about this market. Just give me the headline here. How are you hearing investors talk about this kind of rise in pessimism we're seeing in the market versus where the market's currently at?
More turmoil and confusion than normal. It's a period of great volatility. And our members are not just ultra high net worth, they're all former entrepreneurs who have built businesses mostly from scratch. The overwhelming number of our 1,600 members are first generation wealth creators. So they've been creating wealth in the private markets primarily.
And talk to me about why value investing is being viewed as the right way to allocate capital right now.
So value is seen in a lot of different ways. Our asset allocation has over half of our members' assets, about $200 billion collectively, in private equity and private real estate. That's where members are finding a lot of value. We only have about a 23% exposure to the public equity and mostly in the ETF. But there's some trends that people notice. For instance, we had a low cash in the fourth quarter. The last time we had below 10%, it's 9% now, was in 2007. So it's a little reminiscent. Same thing happened with Berkshire Hathaway.
Right.
They have the highest cash now, and they had the highest cash right before 2007. You can look at housing starts as an indicator, or houses for sale. So there's a lot of indicators saying there's a rotation in the market out of growth and into value. You could play it on ETFs. You have the Russell 2000, you have IJS. But those are really defensive moves. The thing that our members know is if you're buying a company, forget the momentum. On average, look at the fundamentals. It's a company, you're buying a piece of it. How will it do? Our members are very meat and potatoes oriented of basics. And this is a time where basics are really going to shine through.
So it also sounds like you're saying it's a stock picker's market a little bit.
Well, it's always a stock picker's market if you can pick great stocks. But over the long term, the evidence is overwhelming that indexes and buying the market is the better play for the long term. Some people aren't thinking the long term, they're thinking the short term.
Right. Well, and it's interesting hearing you talk about small caps, but they're off their highs, down 15% today since November. So it is a challenging environment to find that value. I also heard you talk about private credit opportunities. How can retail investors play that area of the market?
Well, there are a number of publicly traded private credit companies. The BDCs in particular, Golub would be one that's widely held among Tiger members. But there are many. I think Blackstone has one, and many others. So as a category, when you're talking about value investing, depending how you look at it, the fact that a loan is at a proportion of the value, you're already having the protection of the equity above the loan. So if you really want some downside protection, if you can get private credit where the credit is independent, meaning it's floating credit, not taking the interest rate risk, that might be a better play.
What's your highest conviction trade amid this policy uncertainty?
Staying away from the fads. Our members are in private credit. Our members are in private real estate. Anything that's sort of meat and potatoes. Apartment houses would be a good example.
I'm not hearing AI. I'm not hearing tech.
We have a huge exposure to AI. The Magnificent Seven has been on our radar for the last 3 years. Obviously, it's down about 10% this year. But when you say down 10%, it was up 60% last year. So it depends when you focus in that lens, how closely are you looking? And when our members get in our meetings and somebody says, well, it's down 10%, what should I do? They say, well, if you didn't know that it's a better deal when it's down 10%, you shouldn't own it in the first place. But if you look at a longer term perspective, the Magnificent Seven still have extraordinary franchises, even though there seems to be some sector rotation out of that.
I like that mentality. If you wouldn't buy the dip, then you're not high conviction enough to own that individual name. Thank you so much for joining us and breaking that down. Really appreciate it. We're going to do a quick check of the major average here. Averages, and we're still seeing that selling happening off the back of those tariff announcements. You're taking a look at the Dow, still under pressure, though recovering from some of the degree of losses that we did see earlier today. I also want to see if we can get a check on the S&P 500 and the tech-heavy NASDAQ here. still seeing those losses. Again, the S&P 500 capitulating all of the gains that we have seen following the election of President Trump. You've got your S&P down 1.5%, your tech-heavy NASDAQ down about 1.3%. After the break, we're going to discuss when consumers can expect tariffs to hit their wallets and the specific impact on gas prices and the housing market. Stay tuned for all of that next.
If you feel like you're on the wrong road with your finances, Credit Karma can help you push through to a better place. Because that's how you gain the power to reach your horizons, wherever they may take you. Find your way to money with personalized guidance to improve your credit, savings, taxes, and more. Intuit Credit Karma. Karma you can count on.
1 second, they're a neighbor you like. The next, they're a neighbor you trust. 1 second, you're worrying about your home. And then, thanks to ADT, there's a lot less to worry about. Feel secure enough to let others in with Trusted Neighbor from ADT.
Choose to get every detail right. Every Mazda is crafted with care you can feel.
Wake up.
Congratulations, here are the keys.
Congratulations. Here's the water heater that somehow passed inspection, but will definitely flood your basement.
Congratulations. Here's your first year supply of nitrogen fertilizer. Remember, not too little or too much or you'll kill your lawn.
Okay.
Congratulations, here's Progressive's Home Quote Explorer. Uh-oh, you're good. You can quickly compare insurance options and find the right coverage even if it's not with us.
What's the bad news?
Skip the line.
We are building something new for you. It's all on Barrett TV. Hope to see you soon.
Importing goods into the U.S. just got more expensive, and exporting them to other countries is about to cost more as well. President Donald Trump imposing 25% tariffs on all goods coming in from Canada and Mexico, our closest trade partners. Also imposing an additional 10% tariff on China on top of the 10% one added back in February. Now Mexico, China, and Canada are all planning to retaliate. So what does this mean for consumers? Joining me now to discuss, we've got Paul Grunwald, Chief Global Economist at S&P Global Ratings. Paul, it's great to speak with you. Help me break this down for consumers monitoring these headlines coming in. Is the tariff tit for tat that we are continuing to see something that is actually going to hit consumers' wallets in the near term?
Yeah, thanks, Madison. Great to be on the show. Yeah, the first issue to think about with the tariffs is who's ultimately going to pay them. Obviously, tariff, but we try to look historically who's paid these, and we keep coming back to the same answer, which is ultimately it's the consumers in the the tariff issuing countries. So in this case, it looks like most of the tariffs are going to be passed on to U.S. consumers. So when you put that together, we've got a revised forecast now that's got a bit lower growth, a bit higher unemployment, and a bit higher inflation reflecting that.
And where does that leave your outlook in terms of the likelihood of a recession?
Yeah, in the U.S., it might be kind of marginal, maybe 20 basis points, because the U.S. is a relatively large economy and it's not very trade dependent. But our trading partners, Mexico and Canada, they are likely to go into recession with reductions in growth on the order of 1 to 2 percentage points. So again, kind of on impact, it looks manageable for the U.S. What
What we're really worried about is this uptick in uncertainty. And if that starts to affect firms' investment decisions and consumer spending decisions, then we could be in for kind of a bumpier ride in the U.S.
Yeah, I'm fascinated by this idea of whether or not we can sort of talk ourselves into a recession by talking about policy risk, by increasing fear in the market. And we're seeing a key fear gauge hitting a record high this morning as well. Have you seen that happen throughout your career, this idea of uncertainty and fear about the market leading to a recession?
It's pretty rare. We have a couple of recent examples where the Fed's U.S. policy uncertainty index has spiked. One of them was at the beginning of 2009 when we entered the global financial crisis, and the second one was March 2020 when we entered the pandemic, and policymakers were understandably at a bit of a loss back then as to what to do. The index spiked again in 2025, January and February. So if this does indeed lead to a pullback in spending, it would be kind of an own goal. It doesn't necessarily mean recession, but it's kind of an avoidable slowdown in growth. We'll be revising our forecast later this month, but we've definitely come to the view already that the downside risks to our baseline soft landing scenario have risen.
And how are you thinking about the Fed moving forward and whether or not they will be more willing to take policy from the White House into account when they're deciding whether or not to cut rates this year?
Right. Well, Jerome Powell's been pretty clear that the Fed's independent, right? It's independent within the government. It's not some external organization. It's part of the government, and its mandate is set by Congress. But I think what's interesting about the Fed is most of us economists were thinking that going into this year, the Trump administration would try to juice up growth a bit. Inflation expectations came up. So we took a couple of Fed rate cuts off the table. We went from 3 to 1. Now with this new downside risk on the uncertainty we just discussed, we can see the bond markets reacting, the 10 years down to 4.1, 4.2. There's a possibility that with the growth slowdown, those Fed rate cuts might come back on the table. That's not what you want, because that would be signaling a serious slowdown in growth and possibly a recession. Also would be a weaker dollar. So that's kind of the trade-offs we're looking at right now, whether this uncertainty is really going to move the macro needle downward in a big way.
All right, Paul, really appreciate you making time for us this morning and breaking that down for us. Thanks so much.
Thanks very much.
Well, President Trump implementing a 10% tariff on Canadian energy imported to the U.S. How could that impact how much you pay for gas? Here with more, we've got Yahoo Finance senior markets reporter Inez Frey. Hey, Inez.
Hey, Madison. And some states could see prices rise as early as today, according to one analyst. Specifically, the regions that are going to be impacted, that'll be between now and the next 3 weeks. And specifically, you've got the Northeast. This is the area that will be impacted the most. You've got Patrick DeHaan of Gas Buddy predicting that you're going to be seeing gas prices anywhere between 20 cents to 40% higher by mid-March. And the Northeast is really the area that's impacted because that is the area where you're getting a lot of imports from Canada that are refined fuel. So we're talking gasoline, we're talking jet fuel, we're talking diesel. So that's directly coming into the Northeast area. The other region that is going to be impacted is the Rockies region, the Great Lakes. And that is because you are getting in this region, you're getting directly the crude imports from Canada. And the U.S. imports about 4 million barrels of crude per day. And that is heavy crude that is used in the refineries in these regions. So those refineries run on that heavy crude. They need that heavy crude. They can't just switch over to something else. So that'll be one challenge going forward. But that is something that is likely to impact prices in the weeks to come. Goldman Sachs is saying that they're predicting that basically the Canadian oil companies and the U.S. consumers, they will be bearing the brunt of these tariffs. Why the Canadian companies? Well, because Canada can't necessarily, it's not that easy for them to export their oil, their heavy crude to other markets. This is because of the infrastructure that they have built. These are coming through pipelines into the U.S. So it's going to be difficult for them to do that. So Goldman Sachs is predicting that they're going to be lowering their price of crude, their Canadian price of crude. And then on top of that, you're going to have the U.S. consumer that is also going to be paying a little bit more for these gasoline prices. But make no mistake, analysts are saying that if we do go into an economic downturn, into some type of recession or slowdown, then you are going to see demand going lower. So that could also impact the prices as well to the downside in that case.
All right, really appreciate you breaking that down for us, Inez. Thank you so much. Tariffs, as well as President Trump's immigration policy, set to add pressure to the already wary housing market. Yahoo Finance spoke to Jim Tobin, the CEO of the National Association of Home Builders, about the headwinds builders are facing.
We get 30% of our lumber from Canada, and that will certainly crimp our ability to build more houses, but build those houses affordably. Everything is starting to impact, again, tariffs and immigration policy are really starting to squeeze every market in this country.
Joining me now is our very own Claire Boston. And Claire, it is a very unique time to be chatting with you. A lot is changing. I read your story over the weekend about some signs of positivity in the housing market. Now we've got these tariffs officially this morning. How are you thinking about, and how are the people that you speak to thinking about the totality of the impact of this policy?
It is definitely a weird market right now. And on the tariff front, the big thing we are seeing is all of this is probably pointing to higher prices in the new home market. It's not just lumber that we rely on. In Mexico, we import a lot of gypsum, which is used in drywall. And then home appliances, things like your stove, that usually comes from China. And as a result, generally speaking, that would push home prices higher. Builders may respond by trying to build smaller. Using less lumber, that kind of thing. It remains to be seen, but probably not good news for the market at this moment.
And how quickly is that read through in price increases for the housing market? Do we know at this point?
Yeah, it's hard to tell right now. The other thing I'm kind of thinking about is the substitute effect. If you are kind of thinking about a new home versus an existing home, maybe you're looking at that existing home if the prices become more comparable. Sure. And that kind of thing, potentially could push prices up there as well. And it's just tricky. It's really expensive right now.
And there's also some data showing that home prices are decreasing in certain areas. Can you talk to us about where consumers can find that opportunity?
For sure. Yeah. Right now we are seeing it's a little bit more of a buyer's market these days in specific markets, particularly the South and in Florida. Those are places where the home builders have been the most active recently. And so, one thing that remains to be seen is if tariffs really impact them and push up prices, is the South going to get more expensive in the coming months? We'll have to see.
All right, Claire, it's official. I'm moving to Florida then. Thank you so much for joining us. Really appreciate it. We are heading into the spring home buying season. Zillow says the typical down payment is between 3 and 20%, with average home prices over $320,000. That means most potential home buyers need between $10,000 and $60,000 saved up. Here is some advice on how you can boost your savings. We've got David and John Auden-Schneider, the debt-free guys and co-hosts of Living Not So Fabulously. Guys, a pleasure to see both of you. John, let's start with you. What is the biggest way that you want to advise folks listening to reduce their expenses?
Yeah, you just had several guests in a row talk about how everything is getting more expensive for the American consumer. So some of these tips might have been unheard of even 3 months ago, but they're becoming more common today. One advice we have is that you move in with friends or family to offset some of your costs. We have 2 clients who've actually done this. One client of ours was able to save over $10,000 in 1 year by living with his mom and dad. Another recommendation that we have is maybe it's a tight market in most of the country, maybe not in the South or Florida, but now might be a good time to consider selling your current home, putting as much of that profit into a high yield savings account, and waiting until later when you can either buy a bigger home or when the opportunity is more appropriate for you and your family to buy the right size home. In the meantime, maybe live with mom and dad or maybe downsize to something smaller. And then a third suggestion is maybe looking at some of those things that were luxuries once upon a time, maybe cutting those out, like DoorDash and Instacart subscriptions. We're paying anywhere up to $924 a year in subscription services alone.
Yeah, it's really interesting. I always tell people to look at their biggest buckets of expenses and how they can cut that if they're trying to save. So I'm glad that you brought up the great point about housing costs. David, what are you looking at in terms of some ways to save up extra money?
So one of the things is that now is the opportunity, especially with the gig economy, for folks to figure out ways in which they can earn just a little bit of extra money. We're seeing a lot of individuals who are wanting to either pay off debt or are trying to save for a down payment, are doing things like freelancing or starting a side gig. We actually know clients of ours who they pet sit through Rover on the weekend and are making somewhere between a couple of $100 to over $1,000 a month. That helps them save for that down payment. The other thing is that if you're getting ready to move, you probably have a lot of stuff you don't necessarily need anymore. So go out on Facebook Marketplace or Craigslist, places like that. Start selling the stuff that you aren't using and put that money aside for your down payment.
All right, we're back. S&P pretty much where it was.
Yeah, one suggestion. You get more money every paycheck.
S&P pretty much where it was for the last hour. Okay. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Tuesday, the 4th of March, 11:32 on the East Coast, the best coast, coast with the most. All right, just sitting here, see what we can do next. Defensive stocks look the best.
Take advantage of those to the extent that you're able to, but make sure that you remember that somebody's subsidizing all those rewards, and you don't want that to be you. So pay your credit card off every single month.
I love that. So well said. David, I also want to get your take just on how much money you should think about having saved before you even pursue the idea of buying a home. What's a good kind of range?
Yeah, I think this really depends. You showed us that stat earlier, anywhere between 3 and 20%. But if you're using one of the local or national programs that are for down payment assistance, then look for the guidance that those programs actually provide. In some cases, you may not have to have a down payment at all, depending on that program. If you are looking for a conventional loan, then please find a qualified mortgage broker, whether that be through your local bank, credit union, or even an independent individual. They're going to be able to not only find you the best rate, but they're also going to help match up that down payment to your particular financial needs. But keep in mind that just because they say you can afford it doesn't necessarily mean that you can. We want to keep in mind that there are also other expenses related to owning a home. Insurance is one of the big ones right now that is being talked about, as you mentioned, in Florida and in the South.
All right, watching the futures, just sitting here, pretty much like the S&P, not doing much. Defensive stocks, if you got to do anything defensive, XLP, consumer staples, many of those stocks continue, like Campbell Soup we highlighted about 3 weeks ago. That dipped last week, bounced into this week. Let's look at some of those names. Let's look at Procter & Gamble. Procter & Gamble, okay, nice follow through. Previous high, met with some selling. Procter & Gamble, Kimberly-Clark, toilet paper, etc. Colgate Palmolive, okay, toothpaste, soaps, consumer staples products. What about Coca-Cola? Coca-Cola, consumer staples. It is what it is. You know, people drink Coke and Coke products. They have more than just, you know, the syrupy Coca-Cola, of course. What's Celsius doing? Celsius. Okay, Celsius. All right. That one's pretty much worse for wear. It's down $10 from the earnings high. They are buying another company in the same business. All right. Pretty decent pullback too. What else? Let's see. Supermicro pushing higher. Supermicro. Okay, back above the 50-day. Bollinger Bands are coming together, so I wouldn't be surprised to see price hang out right in this area.
Because the fentanyl stuff seems to be getting solved. But at some point, I think Trudeau's out of office in 5 days. There's a reason he was forced to resign. I think we're going to have a much different
Supermicro. Okay, looking at Supermicro, not a bad move there. If you have Supermicro shares, you might want to think about selling covered calls like 50, 55, something like that. You know, it's going to take a while to get back up to that level overhead. Most likely will. But selling like, I don't know, let me take a look here. If you have super micro shares, you're thinking about it. If you held on to puts and you had puts into this week, into yesterday, that was a pretty nice return on those puts. Super micro, let's see. Let's go to the monthly, March monthly. Let's take a look at that. Okay, I have some 50s, which I chose March because if it starts to rally, I can go out to say the 55 the next month and probably get a credit and just keep moving my levels up, but still having a covered call premium. All right, so that gives me, in this case, $400 and 4.5, 4.5 points of downside, 4.5 points of downside protection, or subtracting all of the calls that I've sold. My cost basis is down here near the 50-day, so looks good. I'm looking for the bounce, super micro. So let's see what those are going for. March 50s. The 50s. Let's see. March 50s are. No, that's not right. What did I have?
What's going on is we're just off the lows, and what's happening here is that the complacency around tariffs is now dissipating, and the stock market is now pricing in the potential for lower earnings due to the impact of the tariffs. I just want to show you the estimates for the first quarter. They've been coming down. I noted them 2 weeks ago here. So what the market believes,
Super
even though the Trump
micro.
administration may not believe this, is tariffs mean higher inflation and slightly lower growth here. So we had 12% earnings growth for the first quarter coming in January 1st. Now we're down to 8%. And that's probably going to go lower in the next few days if the tariffs continue to be implemented. We've seen some new lows today, expansion of new lows.
All right, so I had 2 puts left. I had 2 puts left monthly, and there's still a profit. So I took those off. I did notice those. That's the way it goes. I had a much better fill this morning. Damn it. All right, so I had some March puts on this. Still left. Had 2 left. Oh, well. All right, so let's go to, all right, I have June 50s. Those are, yeah, those look good. June 50s. They're going for 475. Okay, let me look at what the next month looks like. 475. August, 475.50. Yeah, so I could get a credit. I can get a credit right now if I roll out to August, go up to the 55 strike. I think I'm going to do that, actually. All right, so I'm going to roll out Super Micro. Let's see, Super Micro, I have 5 of those. Covered calls for June. Rolling order, okay. Sell, buy back the Junes, sell the August 55s for a $60 credit. All right. All right, so I got that. All right, so I got to roll out to the 55 for a credit. Thanks, Rick.
Just what you're talking about, Philip Morris and Johnson & Johnson and Procter & Gamble. And these volumes have picked up as well. This has held up very, very well overall. So as you can see, guys, just an awful lot of cross currents going on. Defensive holding up, bank stocks not doing well.
Okay, so let's go take a look. I heard Nicole, whatever her name is, on Schwab, Miss I Understand. She understands. She was saying all sectors are red. Was that right? They were not all. Oh, yeah, they are. Okay. So they did go red. All right. So she was right. Just wanted to check on that. So XLP, a little reversal from the high. Okay. XLU, a little reversal. All right. XLV. Okay. So these are pulling back a little bit. Individual names like Merck hit the 50-day and rejected. Okay.
Two things that were really buoying the bank stocks post-election, right? One was animal spirits and growth, and second was deregulation. And what's really derailing the bank stocks is sort of the turbocharged negative of number one, which is that the tariffs are not only going to derail the growth story, but to take Sarah's point even further, it's essentially putting a slowdown on the table. To Bob's point, someone like Bank of America is not going to be down.
SPY trying to turn the corner. Futures trying to push up a little bit. It would be crazy if we got a hammer off of the 200-day area. S&P. Let's go take a look at the S&P. Taking it very slow as the markets continue to melt down. Still looking for that capitulation with a VIX spiking. All right, so far, there's a 200-day. Still very smoky outside. I keep hearing helicopters.
For now, look, I think that what's at immediate risk for modeling revisions would be the capital markets activity that we thought were going to be, on the table as soon as this quarter, Carl. That's clearly going to be at the greatest risk of revision. What's next to be revised?
Oh yeah, there's a Blackhawk dropping water. The wind picking up again today.
Earlier point with your previous guest, now we have to think about, rate cuts, and that could be particularly impactful for the money center banks that are rate sensitive. And fourth, look, if we're really entering in a recession, that's really going to scramble not just earnings, but how we're thinking about multiples and calls, because there's nothing that changes sentiment more than credit quality when it comes to credit sensitive financials like banks.
I mean, you really can see it in the price action. Wells Fargo, Bank of America, these are higher rate names. And they benefit more when rates are higher, right? And so that tells the story. I also think, market telling you a story with Citigroup being the worst performing bank stock today, Erica, because they're the most levered to cross-border activity, right? So directly impacted by tariffs.
Yes, absolutely. And also, whether it's fair or not,
All right, so we filled this gap over here. You see this gap right there? The green box. We filled that gap from November, 1st of November. We have no, there's no gap there. All right, this gap filled, these gaps filled, these gaps filled. All right, so we look pretty good for this year. We filled this gap over here from November. We filled this gap right there from the second week of January. We filled that gap, so we're looking pretty good so far. RSI is oversold.
consumer credit has a perfect relationship with unemployment, right? And so for now, the delinquency data is telling you that, consumer losses should, peak, and, banks and credit card companies like American Express and Capital One still have a lot of reserves. But if the, layoffs in Washington and the softness in, in the private sector because of tariffs, if that happens and, the unemployment rate goes up, that's going
All right, we're starting to see a little push in the S&P right here. Spiders turning up. Okay, watch for a little reversal. We're starting to see more activity, volume coming in.
Another reason why the jobs number beginning this week will be so key. Erica, we appreciate it so much. Thanks. Good to see you, or at least talk to you. Good to see you.
The other point here, Carl, is that
Supermicro continues.
trade here as well. I mean, these were very
All right, what about some calls on Supermicro? Let's see what those look like out in January.
of a positioning unwind, I have to assume, going on as well, making the banks the hardest hit, along with everything else we were just talking about. with Erica. Major averages right now, S&P is down 1.5%. We're off the lows, but investors are continuing to sell as they digest the impact of the tariffs on Mexico, Canada, China. We're also watching the fixed income market, 10-year and 2-year yields, both hitting their lowest levels now since October. Joining us now with her outlook, BMO Private Wealth Chief Market Strategist, Carol Schleif. Carol, welcome. It's good to have you. How are you thinking about the tariffs now that we know they're not just a negotiating tool, which many investors were hoping for?
It's funny because we wrote in our weekly piece last week regarding tariffs, just rip the Band-Aid off, and I guess they ripped the Band-Aid off. So at least now companies are telling us how they can perform or how they intend to take that next step. Whether or not there is a Trump put in it relative to the markets, we'll have to see. But if they continue like this, and or if that pain translates pretty quickly to employment, if you have a big auto company saying we've got to shut down manufacturing here because the tariffs are too great, the cars are sitting on the lots, you could see that the pushback come pretty quickly. So there is that piece of it. But companies are already telling us, Target and Best Buy both told us this morning that prices are going to go up in the next few days.
Right. So does it change your view of the market overall right now?
Not necessarily. We had come into this period expecting more volatility this year, putting defensive pieces in portfolios. You know, this will sort itself out, not unlike if you remember back in the first few weeks.
Okay, so we're still in this range-bound condition. Could come right back down. Need to see a breakout.
Once markets had adjusted to the new realities. But we suspect you'll see some of that here. But the main difference we have here is it's pretty comfy to sit in cash in here and let this sort itself out in the short run. But things will, investors will come back once there's a little more clarity on, are the tariffs sticking? Are the retaliatory tariffs sticking? Or do we back off some of that? And the one thing is, too, is our companies here are incredibly resilient. And now that they've got the numbers are on the board, they can figure out, are we going to pass it on? Are we going to absorb it? What are we going to do? They've been scenario planning for months, but not knowing which scenario was going to come, and now it's here.
Carol, I'm glad you're with us because it was a BMO chart that I was all over yesterday, was looking at ISM prices paid. They pointed out it tends to lead headline inflation 6 to 9 months. And in your words, or in BMO's words, it was pointing now due north. Although it's kind of hard to separate how much of that is the fear from tariff, just front loading. And again, whether that, as you point out, would roll off once we had some.
Okay, S&P is starting to climb. S&P is starting to climb.
How you calculate that?
Watch the spiders here.
I think the Fed's going to understand that there's a lot of noise in the numbers. That's why I actually was really looking forward to the beige book coming out on Wednesday, because the Feds will have done a lot of talking in their local markets, and there's always a lot of great.
Okay, so let's look at this.
And they'll continue to do that. They'll continue that.
Okay, we got to get through 576. Need to get through 576.
Responding to this now that the threat is not just a threat, but it's out there, because it's a lot easier to deal with certainty, or at least the outlines of certainty, than it is the uncertainty that we've been in. But we do suspect the numbers are going to be really garbagey. There's a lot of front running that you saw. You saw it in the messed up in some of the ISM numbers and the under the hood numbers. You've seen it in consumer numbers, and consumer confidence definitely is taken ahead.
So, what's interesting is that bonds are rallying so hard and the dollar's selling off, which is not inflationary trade, which is not necessarily bad for equities in the longer run, right? It gets back to what the president has wanted to see, which is lower interest rates to provide some relief to consumers. Ultimately, do you take comfort in the fact that we are seeing that kind of relief and the dollar sell off, even though it's happening because of growth worries?
Right, and I think you've got that in there. The key to watch will be employment, and the key to watch will be, does that top tier stay in play, because they are what drives the predominant amount of GDP here. And also the numbers coming up, especially on the 10-year, ought to be really helpful to the housing market going into the spring selling season, as long as you can get confidence to stabilize. And when people are confident, they level down.
Finally, we're going to get a joint address to Congress tonight by the president. Tariffs will be obviously one
Chinook just flew over the house. They're pretty close. I'd say only about a mile away. They're dumping a lot of water. Sorry for the distractions, but you know, fire not very welcome around here. A lot of pine forest, pine needles. All right. Okay, watching for a follow through. Supermicro continues to push. Supermicro, nice reversal and moving higher. And limit fentanyl. Try to cut off that supply of fentanyl. People keep forgetting about that. Okay, Supermicro is still going, looking good.
Hey, Sarah, hearing a lot of these concerns and many of the executives.
4% of Americans say inflation impacted their decision to change their current savings strategies, according to the Vanguard survey. So what is the most effective saving strategy for consumers who are trying to withstand the effects of inflation? Joining us with the answer to that, we got Brandon King, head of personal investor cash over at Vanguard. Thank you for joining us, Brandon. So talk to me about the single best way that consumers who are struggling with inflation can start to optimize their savings.
Yeah, and inflation is the hot topic here lately, and there are very real things that investors can control to fight against it. And the biggest one is making sure you're getting your fair share on your savings, right? If you look at your traditional banks, they're earning maybe 41 basis points. That's 0.41%. And with inflation hovering around 3%, you're actually losing money, by not looking for alternatives that can yield a bit more than that. And there are plenty out there. So I would urge investors and savers to shop around and look for better yielding solutions so that they can maximize the returns.
So talk to me about that, because just anecdotally, I know a lot of people who got into the high yield savings account space a couple of years ago, and now their savings account may not be offering the best return. How should consumers be thinking about flipping around and flip-flopping their high yield savings accounts?
Yeah, and rate is one factor. So definitely make sure you're earning a competitive return. And so yields do fluctuate, but we do expect them to be higher for a bit longer. I think that if you're in a situation where you feel like you're not earning what you deserve, there are plenty of options out there. So you can look around. But at the same time, yield is just one factor, right? And so there's a lot of other reasons to choose a high yield savings account or choose a cash management account or do work with a firm. And that includes access to cash, levels of FDIC insurance, and also the kind of total relationship and potentially simplifying your finances. So, at a place like Vanguard, having your savings, your investing side by side can actually be a really good way to simplify your finances and also kind of manage them holistically.
Yeah, and Brandon, something else you point out that we were fascinated by, a quarter of Gen Z is keeping money in cash, a significant portion of their savings in physical cash. Talk to me about that. Is that an advisable strategy for Gen Z? Why do you think we're seeing that?
All right, Supermicro looking pretty strong. All right, S&P continues to push off the low, so this is looking much better. Maybe this is the first in a series of higher highs and higher lows, looking really good. Supermicro, we got a lot of stocks starting to reverse now. If you want to take a a small shot. I would just do a day trade at this point. Okay, what's Apple doing? Apple.
And so I think maybe that generation needs to be activated a bit.
You can see, you can hear that Chinook. Like that Chinook is so loud.
APY and the interest rates of today can actually have a real impact on our cash. And by not taking that action and the way inflation is, you're actually losing money.
All right, we gotta leave it there, Brandon. Thank you so much for joining us. Appreciate it. We're gonna do a final check on the markets here. It's interesting to see where we are seeing the degree of this sell-off because it indicates a little bit of that economic slowdown fear in the market. The biggest leaders of losses today, so the biggest losers, are in the financial and consumer-led names. Banks posting a really terrible day so far. That KBW index down 6.3%, the worst day since Silicon Valley Bank crisis happened back in 2023. We saw financials being huge beneficiaries of the Trump trade, so also an example of the unwind of that Trump trade. You've got the Magnificent Seven, those tech-heavy names down just about.
Okay, so NVIDIA, nice move on NVIDIA so far. Watching NVIDIA as well. People stepping up and buying. Okay, looking good. Nice ABCD pattern. Here's A, B, C, D. ABCD pattern, looking for a push through the highs. We're starting to push through the highs right now.
Smarter investor. Welcome to Stocks in Translation. I'm your host, Derek Blittery. Welcome to Financial Freestyle. Hi, I'm Bob Powell, and welcome to Decoding Retirement. Welcome to Living Not So Bad.
Okay, we're coming into lunch hour.
Welcome to Capital Gains. I'm your host, Madison Mills.
Welcome to Word Money. I'm Patrick Murphy, and I'm Dan Coons.
From Wall Street to Main Street to the C-Suite, we are your daily lifeline because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts.
At State Street, we know everyone's trying to get somewhere. Take the next step toward your future by investing in the now with GIA. Getting there starts here.
Introducing the Avocado Smooth Slicer. Simply cut a ripe avocado in half, then use the Avocado Smooth Slicer to pop out the big red light. Cutting perfect avocado slices is so satisfying. Totally guacamole. You're the toast of the town. With its two-step design, just pop, line, and say avocado. Made of stainless steel and easy to clean.
Okay, so we hit A and we got rejected right there. NVIDIA looking much better.
It's time for Yahoo Finance's Market Minute. Stocks are selling off, erasing post-election gains as trade tensions spook investors. NVIDIA and other chip stocks are pairing earlier losses now, relatively flat amid growing trade tensions. President Trump raising tariffs on China to 20% today from 10% back in February. Investors are also wary of the possibility of expanded ship export limits to China. And auto stocks also under pressure as S&P Global estimates tariffs on Mexico and Canada could cost U.S. car makers 10 to 25% of their annual EBITDA on average. And Starbucks nabbed Nordstrom's CFO, Kathy Smith, ousting their Starbucks veteran Rachel Jerry. This comes as new CEO Brian Niccol.
Okay, NVIDIA going to try another attempt at the high of the day.
What's the process for developing a retirement income plan? Should you use the 4% rule? Well, here to talk with me about that is Bill Bengen, who 31 years ago wrote a paper that changed the course of history for retirement income planning and who is about to publish a new book coming in August, the title of which is A Richer Retirement, Supercharging the 4% Rule to Spend More and Enjoy More. Bill, welcome to Decoding Retirement.
Hey, great to be here. Thanks for inviting me.
Oh, it's a pleasure to chat with you, Bill. And I'm wondering if you could begin with the process of creating a retirement income plan. I know in your book you say that there are 8 customizable elements. Let's go through them.
Yeah, okay, fine. I think it's important to do that because...
All right, it's 12 o'clock. Let's go ahead and shift over to CNBC. See what they have to say with Wapner.
We're going to talk about it all day long, and I see a lot of things to be excited about for the longer term.
Yes, this has been for Stephanie Lincoln. We will get into more detail, a shopping list moment. If you
Yeah, absolutely. Absolutely.
with that list, and I'll tell you some of the moves that she has made. What about it, Josh Brown? As JP Morgan also says, the guardrail of risk markets looks to have come off. Barclays today talking about the euphoria in the U.S. is on the retreat, and there is still room to wane even further. You've had $3.5 trillion of value wiped out of the S&P since Election Day. This is not what a lot of people thought was going to take place in the first 30 to 40 days of this administration.
I guess it's weird because this is exactly what they promised us would take place. They said on day one. This is what they told us. So I don't really understand, like, oh, wait, they're really doing this? They did this in 2018.
I mean the moves in the market. You're right. You're right about, obviously, about the policy moves. Obviously, but I'm not necessarily sure that on Election Day, if you would have told people that, okay, the NASDAQ is going to be down 6% by, the second week or the first week of March, you say, that doesn't sound right.
Yeah, no. That part I agree with you 100%. And actually, here's something very unexpected. In the last 50 days, Tesla fell into a 45% drawdown, the second fastest 45% drawdown ever in the history of Tesla. The CEO basically lives in the White House / Mar-a-Lago, and yet Tesla has now fallen out of the Magnificent Seven stocks by market cap. Broadcom is bigger. Berkshire Hathaway has a bigger market cap. So does Eli Lilly. So that was unexpected. There's a lot of unexpected things happening.
NVIDIA trying to break out. NVIDIA.
When you've lost the Wall Street Journal op-ed page, basically
Would be really nice if we saw a follow-through day tomorrow.
there's just a lot of blunt language now. There's a lot of chaos. I don't think it'll stay this chaotic. I don't think the VIX goes to 50 as a result of this. I think this volatility will be with us for a little while, but I don't think it's a great time to panic necessarily. There's risk off really fast. 8% of the S&P 500 now has an RSI above 70, which means there are very few stocks in a bull market. You're basically seeing a peaking in 52-week lows. 8% of the S&P are now making New Year lows. That's fairly high given what's gone on in the last 2 years. 40% of the S&P components are making 4-week lows. So if you think you're going to be the first person to sell and react to this, you already missed it. So I think the way that you want to think about this is what are
NVIDIA charging higher. NVIDIA looking a lot better.
not what's getting trashed the most.
NVIDIA looking really good.
Focus is on what are the best stocks in the market. Where are investors not selling and riding this thing out? Because in my opinion, those are the names where you'll continue to get all-time highs once this volatility subsides. I know there are people with different strategies. They want to buy pain. They want to run into Tesla down 45%. I'm not saying that won't work. I'm telling you what I would be doing and not what everyone else should be doing.
Brian, is it time? And by the way, I mean, heck of a time to have you here, right? You do work for BMO. Last I checked, it's a Canadian-based bank.
It is.
Right?
Yeah, so let me share a little bit about how my morning has gone.
Please.
If that's all right. So we have the very good fortune of running private wealth portfolios for both Canada and the United States. And so we own some portfolios that are a mixture of U.S. and Canadian. I can't tell you how many calls I've taken, Scott, that want to blow out some of these portfolios, like literally blow these portfolios out and go 100% Canadian, which I think this is exactly the wrong time to do that. That's number one. Number two, working now.
You mean out of anger?
Working out of emotion, out of anger, out of just pure fear. Okay. Now, where I was going to go next is being in Canada for 13 years, working for Canadian Bank, but marketing up there as a strategist for a lot longer. I'm not going to tell you how many years. The Canadian market is actually excessively contrarian. Whatever they're doing, go the opposite way. They're typically led by fear, and they're massively macro. Now, what do we know about Canada versus the United States? Many of the economic projections for Canada, just in the last 24 hours, have cut GDP down to negative GDP for the year, 2 full percentage points. And the Bank of Canada, in terms of our own estimates from our great economic team at BMO, is saying that they're going to be excessively aggressive in terms of cutting rates. So what does that mean for Canada in terms of the lending facility? We know that banks are tremendous managers of capital. The banks that are centered more toward on the U.S., I think, are still the place to be. The Canadian consumer is still very prudent in technology. So we think actually this is a longer-term buying opportunity for Canada. But I think it's not time to leave the U.S. if you're a Canadian client.
But do you agree with sort of JP Morgan suggesting that this is a time to be tactically bearish U.S. stocks?
No, I don't, because number one, no one can time the market. Number two, we're investors, not market timers and not traders. And so many people said, Belsky, you didn't make any changes in your portfolio this month. Well, guess what? The names that I own in my portfolio are the names that I want to own in any kind of pullback anyway. I'm not going to try to outsmart myself. So guess what? I think that the names coming out of this, and it's really interesting, is that the market is performed the way that it should. Take your generals out first, then take the lieutenants out, which are generals were tech, lieutenants were financials. Now we're going after the other commissioned officers. So I believe from a near-term perspective, we're closer to the end than we were.
How are you viewing the market in all your years of experience watching these markets? What does this tell you? It's not your first rodeo. It's not the investor class's first rodeo of a trade war and tariffs from this president. So what do you think?
Well, I'll tell you the thought that went through my head when I saw the market really fall when Trudeau was speaking. I thought, the market could end up positive at the end of the day. Now, I'm not saying it's going to, but it's interesting that NVIDIA right now is positive. What I think we're seeing is just this sort of reaction toward the mean. We had 3 months, more or less, of financial stocks leading the market higher because euphoria about there aren't going to be any regulations. They do everything they want. I'm not even sure that would be a positive, but the market got so enthusiastic, it became unrealistic. And we sort of led higher and higher. And now there's, oh gosh, maybe there's a problem here. Maybe there's some inflation. But manufacturing is still looking good. The manufacturing numbers, I think, are decent. The consumer numbers aren't great, but they're not terrible if you heard what Target had to say. And there are pockets of concern, such as, let's not get too exuberant here and there. But that doesn't mean that this is the end, that we have to say, oh my God, it's, watch out below. we have to get extremely bearish. I think that we should always.
Well, no one said you have to get extremely bearish, but there are times to be tactically bearish stocks.
That just
You're down
means,
a ton yesterday. You're down a bunch today, and the market's been unsettled as it is. We may be in a prolonged environment that feels more unstable and unsettled because you're not sure how long the tariffs and this trade war are going to last. Among other things, you're not sure about to what degree earnings power is going to deteriorate if you're dealing with a growth slowdown and trade war.
But you're coming off a 16% earnings growth in the fourth quarter.
Yeah, no, and expectations are falling fast after that. This is not
the numbers haven't been coming down at all, not yet. Now maybe they will, and maybe the tariffs will clip earnings and the picture for earnings by 5 to 7%, which is what I've been saying for a while. But you have such momentum with regards to the earnings power at these companies. And so even if earnings were to fall, that's not great for stocks. It's probably why we're seeing a sell-off. However, that being said, you're still looking at something like 7 to 10% earnings growth this year if you grow 1.5%, 2% in the economy, which is what I am continuing to believe.
You kind of, I get the feeling that you think overall this is a not much to see here moment. Would you sure sound like? Because I can tell you, consumer confidence has been falling, right? Sentiment among consumers is not great. Hardly any of the retail-based companies have been talking up a great game.
Yeah, but
hardly any.
We haven't had a goods growth economy in 4 years since COVID, right? No one's buying goods at all. And so it's actually quite impressive to see what Walmart put up in terms of same-store sales, what Target did, what TJX did. I mean, there are winners,
but you're talking
and there are
staples and lower-end retail.
Well, no, I mean, lower end. Not really. I mean, 60% of Target's revenue is discretionary, and they're Target, right? That's what they sell, and they actually did quite well. But my point being is, COVID happened, we bought goods. Then we got out of COVID, we did services. We're somewhere in the middle here on services. I think we are slowing down, definitely, but I don't think it's a disaster. And at the same time, I think goods are overdone to the downside. Just look at what Walmart had to say in terms of where they saw strength. When has the last time we've seen discretionary goods actually surprise to the upside? Both Walmart and Target said it today. So Walmart said it last week, Target said it today. So my point being is you can't just look at retail and say the consumer's dead. The consumer is not dead.
No one said the
It may be
consumer's
slowing,
dead, but I mean,
but they have jobs and they have wages and they have savings, and that's the most important thing in my mind.
The consumer holding up as strongly as it has,
pretty remarkable.
Collectively has been remarkable. The resiliency is one of the reasons why we've been able to put in new highs in the market this whole period of time. The death, so to speak, of the consumer has been greatly exaggerated numerous times. Obviously, through the whole rate hiking cycle. And
what if you get mortgage rates to come down? What if you actually have housing that then starts to actually improve? Mortgage rates peaked at 7.3% 2 weeks ago. It's at 6.88. We're nowhere close for it to see momentum in terms of housing, but you get that into the low sixes, that is important because there's a multiplier effect to housing. You buy a house, you have to buy stuff for the house, outside the house, and a car to get around from the house to wherever you're going. So that's what I'm watching.
So, Josh, Carrie mentioned NVIDIA being higher today. That's been a pain point within the market. Bernstein, Stacy Rascon says valuations are looking increasingly attractive. They suggest that stock has done historically well if you buy it at 25 times or lower. It's obviously had a huge pullback. We've suggested, well, you're not really going to get a better feeling market until the likes of NVIDIA looks a little better in its own right.
I mean, there's so many green stocks right now that we should be talking to, like eBay, Alphabet, McDonald's. Like, these are pretty big market caps. But Scott, you're right. To that point, nothing is big enough to offset NVIDIA. There's no 10 stocks that are big enough to offset NVIDIA. So I do think it's important for maybe not necessarily overall volatility, but
Super Micro looking pretty good. Watching NVIDIA for a push here. Watching NVIDIA. Buy order blocks.
Look, 26 times forward earnings with a 50% growth rate, a buyback, and arguably some of the best news flow of the year out of any stock still ahead, including a huge developers conference in March. Why wouldn't this stock be a buy here? So I agree with that sentiment, and if I'm out looking for things to do and I haven't done this yet, I would have it on the list.
Apple too. I think we would all agree, given its reliance on semiconductors in general for its products, and given its reliance on China for a huge chunk of its revenue, 17, 20%, it's the best performing mega cap stock over the past 1 month, even though you could make the case that it has the most to lose from a trade war with China. The knock has been it's trading at a premium valuation for less than premium fundamentals. It's at 31.6 times forward earnings. Steve Kovac joins us now, our reporter, of course, who covers that stock. It's a great disconnect for people who say, wow, how is this stock still green and doing better than others when it would theoretically be so exposed to a trade war with Canada?
Yeah, that's right.
With China, excuse me.
Yeah, that's right, Scott. And by the way, yesterday, once we got that confirmation from the president that these tariffs were happening, we saw the stock drop 1.5%. It's up about 0.5% now. And let's get some perspective here. What they think, analysts think the impact of these tariffs are going to be. They haven't gone through the second round and done that analysis yet, but the first round they said it's going to be low to single-digit percentage hit to earnings. We'll see what they say for this round.
Supermicro continues to rally.
Make this calculation now. Do they increase prices or do they absorb those costs? Either way, it could hurt them. So we do have some guesses here of what could be happening with the iPhone 16e, for example. That was a new phone they announced a couple weeks ago. That was a $170 price increase over the last model. And just this morning, though, we had an opposite example. There's a new iPad Air model that came out today, that was announced today, starting at $599. That's the exact same price that last year's version cost. And we're also expecting one more product to come out this week. That's a new version of the MacBook Air. Apple's been pretty silent, though, to be honest, about what's going on with these tariff impacts, how they're thinking about pricing. iPhone pricing is going to be the most important. They can probably absorb things from the Mac and the iPad and those lesser products, but iPhone is where all the money is, and they're not going to be able to shift enough of those supplies of those iPhones.
All right, watching the futures continue to climb. NVIDIA looking pretty good.
Still relying on China, and I want to point to what the Best Buy CEO said today. His vendors are expected to raise their prices. Apple is one of those vendors, and it hits
Amazon making a new high in the afternoon session. Amazon making a new high.
Microsoft has already warned Windows revenue could take a hit as well, Scott.
Yeah, it's good stuff, Steve. Thank you. And Steve Kovac. Brian, I mean, maybe investors just simply think that, Tim Cook's trying to make Trump his BFF, and they're going to get some kind of exemption from a lot of these tariffs, or that there's not going to be a protectionist play on China's part related to American products like the iPhone relative to competitors over in China. But Apple's already, we've already seen market
Oh,
share
by the way, happy Mardi Gras.
issues over
I
there.
got my relatives
Has traded, I think, reasonably
sending me
well,
pictures.
pretty darn well, when it would be front and center here.
Happy Mardi Gras 2025. Supermicro at the highs. Supermicro at the highs. We've still got about 80% of the 75% of the NASDAQ 100 declining, 25% advancing. Supermicro higher. All right, so that pullback recently in NVIDIA and Supermicro and some of the other chips, probably buy signals that we're starting to see. Earlier this morning, I was thinking just short covering, but this is following through. This is exactly what we were looking for. Short covering in the morning, followed by continuous buying off the lows. NVIDIA certainly fits the category if we can manage to move higher. All right, so NVIDIA trying to go here. NVIDIA up against supply.
Mag 7s are all significantly off of their record highs. Apple is only 8% off.
Electronic Arts is number one on the NASDAQ 100 at the moment.
Which is 19. You mentioned Tesla, Josh did. The price target gets cut today. Wolf talking about Microsoft is the one who needs to make a stand here. So we'll watch all of those. Stephanie Link is making a move in this space as well to a stock that's 18% off of its record high, that being Amazon.
Well, I started trimming a couple of weeks ago. I went from really now I'm slightly underweight. It's still about a 3.5% position for me, but you have 95% of the sell side that have buys on this thing. Just about everybody owns it on the buy side too.
I think that it's had a nice run. It's up 23% from its August lows. And I just thought I could take that cash and put it elsewhere into names that have just gotten hammered. And we'll talk about some of them if you want.
Like Broadcom?
Yeah, like I've been adding to that for the last 3 weeks, and it keeps going down and down and down. They report on Thursday, so we've got to be careful. But I do believe in the long-term story very much. Its rate went from 34 times forward estimates, which got rich, to now 28 times. Now, I was buying it a couple years ago at 14 times, and we've talked about the multiple expansion. But
All right, there we go. Starting to break higher. NVIDIA breaking out.
60 to 90 billion total addressable market in their AI business, with 2 new ASIC customers coming in the next couple of years. I think that's going to be very positive. Software, I love the VMware acquisition, what it's doing for their recurring revenue and margins, and their non-AI business, that has actually been horrible. And I expect it to be down 15% in the quarter, but I do think you're in the process of troughing. So I like the valuation, the pullback in the stock, and I just thought it as an opportunity. I just don't have that much cash. I have a little more cash than I have, but I didn't have that much.
You found some at the bottom of your handbag.
Well, it's out a little
To
bit.
get Palo Alto, too.
There goes NVIDIA. Nice move on NVIDIA. Cool.
I'm trying because I'm trying to look for ones that have lagged that I haven't been able to own. CrowdStrike was one I didn't own ever, and I bought it when it fell 41%.
It's okay, Stephanie. We love you anyway. Stephanie's good.
It's held up remarkably well. I like cybersecurity very much. I think it's bigger than AI in terms of the total addressable market. And Palo Alto's lagged. And I like their platform strategy. I think they've done a really good job there. Free cash flow is expanding. So this one too, it's kind of lagged. It's hung around here in this downdraft, but it's not been a good stock over the last year or so. So I think it's a laggard that will win.
Yeah, from chips to software. That's, Brian, how a lot of people are talking these days, where the trend is going to continue. Money's going to come out of chips, even though there's some nice winners today, even in the face of the red on the screen. Okta is yours. Speaking of software, they gave strong guide.
They have, and that's a name that has consistently grown.
Okay, ABCD pattern playing out. Looking good on NVIDIA.
And I think in the SMID category, it's one of those growth areas in tech that offers some consistency, especially relative to a technology sector in SMID land that is much more volatile. Speaking of chips, I think we're learning firsthand, especially the last 6 months. If you look at the semiconductor space in the market, traditionally, it is the most volatile industry in the market in terms of earnings growth and especially performance, and we're seeing that come to light.
Watching a lot of momentum names, as you know, AppLovin, Robinhood, Palantir, they're all lower today. So's Reddit, Josh, which has been a week late.
All right, all the New York fangs are starting to turn up. All right, shorts covering more.
Real-time look, but it's down 18% since the beginning of that momentum sell down.
Yeah, I just think that's the basket of stocks that it's in. The same people that are in that are in other momentum stocks. And when people hit these ETF baskets, these are the stocks that get sold off. There's nothing specific happening with Reddit. And if you've been following the stock for a while, it could be down 6% in the morning and up 6% in the afternoon with absolutely no news whatsoever. So I wouldn't make too much of it. Just understand that's the basket that it lives in, and that's how volatile these stocks can be sometimes.
Banks have been brutal today, this week. Most of them selling off pretty significantly. We'll run through some of the names, which include private equity stocks, which last I checked this morning, Care, we're getting hammered. You got Blackstone, but Apollo, Ares, KKR, Josh has Carlyle, but what's going on here?
Well, I think that it's risk off, and there's going to be a fear about doing deals.
Yeah, deals off.
Yeah, deals are off, so no one is feeling comfortable with that. However, if we have lower interest rates, we're talking about leverage. These are businesses that require a lot of leverage. Lower interest rates are good for them. So that's a positive. They've had a big run along with the financials. So we're talking about stocks that are up, if you go year over year, maybe 100%. I don't have a problem with them trading down somewhat because of the big gains. And we've got, enormous embedded gains. We've cut this stock back, Blackstone, over the last year a couple of times, and it's still higher. So
We've already seen $800 billion in M&A, and it's only March.
Yeah.
So I think that we are going to see deals. Absolutely. Does it slow a little bit down? Maybe. But it's
We
going
had
to
the
be better than
slowest start.
3.6.
We had the slowest start. We had the slowest January. I mean, it's just.
$800
We had the
billion
slowest
so far.
January in a very long time. I don't have the number on the top of my head, but we had the slowest start to the year in a number of years. I'm talking about M&A. I'm talking about M&A.
M&A is at $800 billion, and I think it's going to be more than $3.3 trillion, which was last year. I absolutely think that is to be the case. Is it slower than what I initially expected? for the year? Possibly. But deregulation is going to help, and we are going to get deregulation. And we're not only going to get deregulation for deals and CapEx and visibility, but we're going to get Basel III endgame rules that are going to be much less in terms of the capital that these companies are going to have to hold, and they'll be able to buy back stock. And at 1.4 times book value, some of these stocks are certainly still attractive.
Josh, go ahead.
I was just going to point out cross-border tensions and countries throwing out entire U.S. industries is not great for the M&A picture. It slows everything down. It gives people pause.
Wow, the New York Fangs are ripping here.
Yes to transactions.
Nice move.
So I would say, and I'm long Carlisle, which requires there to be M&A. It also messes with the capital markets, slows down the machinery for IPOs. And that was one of the big things that we had expected to come back this year. Now that you're in like year 3 of a bull market, you should see more investor appetite for new companies coming public, which also helps the private equity companies as they get exit liquidity. If you're not getting cross-border M&A, you're not getting exit liquidity, and you got a 20 to 30 VIX regime, these stocks are going to be in the penalty box, not breaking out, not looking good. And you got to decide what's your time horizon. If you want to buy them down, now's your chance. If you're trading them, you're probably not interested.
I think for many, it's a deal's not off, but delayed.
That's fine, but there's also positives from net interest income that we haven't seen that you're going to see from the spread. So there's a lot of puts and takes to the banks, and loan growth is not going to fall to negative. They're just not, especially again if the capital levels are relaxed. So to me, there are many ways you can figure this out in terms of analyzing. You want to own the banks, you want to own private markets companies, go for it. But I just think that the valuations are still very compelling, and I do still expect activity to happen.
Okay, so we'll take a quick break. We will come back. I've got a new move, a new stock that Josh Brown has added to his portfolio. It is in the insurance space. I will tell you what it is. We've already touched on some of these consumer concerns. We do have Stephanie Link making a number of new moves around this market that we still need to get to. Also, Josh Brown's hot take on this year's best performing sector. We got a lot to get to. We're back in 2.
All right, Robinhood. Yeah, I'm watching that one too. Robinhood putting in a hammer now. I'd like to see a base down here a little more. Okay. Robinhood. Looks good, Robinhood. Okay, so Robinhood, 1,700% earnings growth. It's got a 28 PE. I don't know. To me, that's a no-brainer. Okay, NVIDIA is still going. Whoa, that's close.
From Schwab.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Fast Money here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's Landon Schwan, co-founder of Lightfolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. So FanDuel parent Flutter, it's outperformed a lot of its competitors in this space. They did give a mid-quarter update, Landon. I thought this was interesting on the 7th of January, where they lowered 2024 revenue based on the fact that, hey, people are actually winning their bets and they had to lower their revenue output, but it doesn't seem to be negatively affecting the stock that much. It did drop for a couple days after that, but what kind of data are you guys seeing out of Flutter?
You know, I love that update. I mean, that just makes me feel good. Like, hey, some people are actually winning, right?
Yes.
And you know what it actually came down to is NFL. A lot of the favorites covered more than their share this year, and people love to bet favorites. And then you know, that kind of ebbs and flows. That's going to be a one-time event. That's how investors are going to see it. At least that's how they should see it. And really,
All right, Supermicro still diddling with the high of the day. Supermicro just off the high. Supermicro.
It's just nice to see the player win once in a while. But yeah, you know, if you look at last quarter,
Global Foundries, GFS, Global Foundries, nice move as well. I don't know if you can hear that, but these Chinooks are like really active. There's like 4 of them out there.
38 states have now had some form of sports betting allowed, including DC. And you know, 12 to go if you want to look at it that way. And the industry overall went from 11 billion to over 13.5 billion on a year-over-year basis from 2023 to 2024. So obviously they're in the right space.
MicroStrategy.
It's a good spot to be in. Now, what was difficult about this industry?
Nice run up to the highs.
Year or two was the cost of customer acquisition is very high. Everyone who was kind of a, you know,
Robinhood's been off the last few days. It's building a hammer, maybe a base down here. Robinhood.
Because customers are very valuable over the lifetime of the customer.
In the past 2 years with Amex, it trades at 19 times. I was buying it at 13 times. It's had multiple expansion. Yeah, they're seeing a little bit of a slowdown. I do not think it's horrible by any means. I would absolutely buy it back if it fell, but I just want to take the gains and have cash to buy the things that are actually down and out. I'm trying to buy low and sell high, Scott. That's what I'm trying to do.
All right. For instance, Target.
For instance,
You're buying low.
Or it's low.
Because you bought more. You bought more today. All right. So they beat. They did talk about consumer uncertainty. They did warn that February sales were soft. They talked about prices on produce potentially going up in a matter of days. And to follow that, the CFO said at the company's investor day following the report, quote, the company expects to see meaningful year-over-year profit pressure in its first quarter relative to the remainder of the year. So
And
why
that's
buy
why-
more today?
Well, that's why I think it's down, obviously, his commentary, because the quarter itself was actually good. Something that I have been arguing for the last couple of years at Target, even in the really bad times, is traffic. They have traffic. They just haven't been able to convert it. But this quarter, they actually did. 1.5% comp.
S&P 500.
But it's against a negative 4.4 last year. They're making progress. Operating margins actually beat. So they get the gist. Like, conservatively guide, beat. Operating margins are the most important in my mind, along with traffic and comps. And those metrics were good. The full year guidance actually was better than the whisper number, in my opinion. And they will say small operating margin expansion. I think the CFO is being very conservative. Yeah, I didn't like the comments that they made about February, but that's not Target specific. Walmart said the exact same thing. And if I look at the multiple at 12 times forward estimates, where I don't think the estimates are coming down materially after this quarter. In fact, they might go higher. It's a very cheap stock with a 4% dividend yield. And I still think they are one of the haves versus the have-nots, right? We talk about Costco and Amazon and Target and TJX. Those are the haves.
Is Gap a have-not? Because you own that and it's down 7%.
Gap is a very volatile stock for sure, and it's down because tariffs. They do have exposure to Canada in terms of their sourcing, so I think people are a little nervous, but I don't really own it so much for the quarter. It's really the turnaround from the fairly new CEO. He's been there for about a year and a half. He was at Mattel. He turned around Barbie. He has revamped
Robinhood still moving higher. Robinhood.
New management team at Old Navy, Athleta. They're taking market share. Inventories are down. I know the stock trades about 11.
Look at all the buy order blocks on Robinhood and look at supply overhead, supply. I don't see supply up here. Okay, I don't see supply overhead. Robinhood. All buy orders, no sell orders.
leadership to achieve lasting peace. The statement comes as the Trump administration paused military aid to Ukraine overnight. The Trump administration says it is reviewing Columbia University's federal contracts and grants over allegations of anti-Semitism, which it says the Ivy League university has failed to tackle. Columbia was the epicenter of pro-Palestine protests on college campuses that took place last spring. The government says $51 million in contracts are at stake. And thousands of people are filling the streets of New Orleans today for Mardi Gras, but the weather may dampen the celebrations. The National Weather Service says thunderstorms with winds up to 60 miles per hour are expected today. The two main parades have already moved up their start times, shortened their routes, and decided to go without marching bands in a bid to avoid severe weather. Halftime report, we'll be right back.
That's pretty funny. All right. Looking good. Market's driving a bit higher.
A little bit of hope. And next year, I guarantee you there's thousands of people right now who have an Excel spreadsheet that, okay, the last year I made this much money. Now I'm going to double it up next year and I'm going to do this much better. I got bad news for them. You're helping the DraftKings and Flutter investors right now with that thought process. You're right. It only goes one way over time. But it's a great place to be for these businesses. But I do think there is enough to go around as long as those customer acquisition costs can kind of stay in a reasonable range. And the fact that they're pulling back on that gives me hope as an investor because, there's only so much you can pay and people aren't that brand loyal, right? I mean, if you're re-upping and, you lost your money in your account and all of a sudden, you're on DraftKings and then you see something on FanDuel with promotion where you get X, they'll match your money or you'll get no juice or whatever, free bet, whatever it is, you're going to say, all right, I'll take that one. And it's not like it's a hard system to learn how to use. So there's not going to be a lot of brand loyalty. For the most part, it's a commodity. You can bet on this team, this player, whatever you want to do. And you're generally going to go where the price is right. I mean, if there's a significant difference, you're going to move your money over to the other one. So I don't think that, paying a lot for customers is the right strategy. I think they just have to have an appealing product that continually gains and loses customers to the other one, but hopefully gains more customers. And as they grow the popularity of the sport of the industry, which is happening, they just continue to take more and more, and hopefully they can defend their share of the pie.
Yeah, and I think we sometimes lose it in the fact that their overseas operations are massive and just as big or bigger than what they have here in the States with FanDuel also. But Landon, you got an earnings score for this one going into the report?
Yeah, so I think, we're on this one. Flutter, we're about +7. So fairly neutral. We like the pullback that we've seen, but we don't like the relative weakness to the competitor. So it's slightly bullish. Long term, we're bullish on this one. It's just kind of a free money situation. They're always going to make money as long as they keep their customer acquisition costs down. But going into earnings, just leaning on the plus side of neutral, but kind of staying away.
All right, great stuff. Great data as always, Landon. Appreciate it.
Thank you.
All right, that's Landon Tuan, co-founder of Lightfolio. Kev, the stock's bounced off its 100-day moving average a couple times over the last week. Option market pricing at about a plus or minus $19 move in the shares. How do you want to look at this one from an example trade?
Yeah, Tom, when I look at something like this, and you're right, the stock has corrected, pretty solidly here. All I look at here, and I'm not a big trader of these stocks, these gaming stocks, but if you can look at the expected move, which is about $19, look where you are right now. The stock has sold off a little bit, but you can look at and sell the 250, 240 put vertical. It doesn't have weeklies, so you got to do a monthly there, Tom. And so that takes in, a fair amount, a fair chunk of the expected move, both for the 1 day and it's a little inside the expected move for the 17 days. So you can move the strikes down like the stock has. It was about 225. Now it's about 270 actually. So the price of this has moved down. But if you want to look at a medium, a risk-defined, high probability collecting theta way to get passively long, only about 10 deltas in Flutter. This is the way to do it. Sell the out of the money, high probability short put vertical, Tom.
All right, let's break this one down. This is out in the March 21st monthly cycle, as Kevin mentioned. They don't have weekly options. This expires in 17 days. Sell the 250 strike put out of the money by about $15 from the current share price, and then buy the 240 strike put short $10 wide neutral to bullish put vertical, collecting roughly about. We got 225 credit on it. As Kevin mentioned, it's gone up about 50 cents from those levels. But if you collect that 225, takes your break even down to 247.75. That would probably line up just about with that one standard deviation move that the option market's pricing in, plus or minus. If you collect 225, you got $775 in risk per spread, but that's all the way below the 240 levels.
All right, watching Robinhood for a B and C pivot. A lot of stocks are at their A pivot. Some of them, like Nvidia, are at their D pivot already.
Profit if its stock goes higher, stays where it is, or goes lower but remains above that break even, just under $248 per share. So, and then you look at the implied volatility levels when the VIX is at 24, and option premium or extrinsic option values start to expand a little bit, so you can collect a little bit more on these types of strategies with higher implied volatility levels going into this report, and the IV percentile rank on this one going into the report, about 87%. So nearly in the top, 10% of implied volatility levels that we've seen over the last year. But a good look at short put vertical here in Flutter. If you think it's going to remain where it is, go higher or go lower, just remain above 250. All right, let's take a quick break. When we come back, we're going to take a look at maybe an overlooked stock we haven't talked about on the show. Vistra, the power company stock, has pulled back about 40% from its all-time highs from January. Fast Market's coming right back.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free. No place better than the Schwab Network.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Vistra, let's take a quick look at the markets, which are nearly 1% off of its lows for the day. We've had a nice little rally since the start of the show. The benchmark S&P 500 down just over 1%. Dow Jones Industrial Average still down over 580 points, 1.3%. NASDAQ now down only about 0.4%. The Russell 2000 still down 1.2%. So we bounced off of those lows. It's not the end of the day, though. Keep that in mind. There was a lot that may go on here, but we've got the VIX now up to the 23.6 level at this point. So implied volatility level still elevated. We continue to watch that. All right, let's talk Vistra Energy. VST is a ticker symbol. This stock's been a real big winner over the last year, up over 130% over the last 12 months. Pulled back, 37% from its all-time highs that we saw just about a month and a half ago. Let's bring in George Tilla, senior markets contributor here. George, this was a real big winner based on the fact that all these data centers need energy. I was reading through, some of the comments from Vistra. They don't have a major partnership yet, like some of the other companies in this space do, right?
That's right. I mean, if you look at Vistra itself, I mean, this is essentially an independent electricity producer. And so you have to think about the nature of the electricity markets. It's all about the marginal supply or the additional supply based on, peak demand. And so what's happening here overall in the context of the data center growth and the energy use of these data centers is we're actually seeing there's huge demand for the independent power producers like Vistron, Constellation Energy, or a couple of the other major utilities that have actually caught a bid in the past year. Now, one of the things about the electricity markets is that generally speaking, you have to think about the nature of increasing electricity supply. There's a lot of regulatory constraints to do so. So there's a whole tier of these independent power producers which can quickly ramp up production based upon the supply-demand dynamics. And that's why we saw a huge run-up in VST and some of the other power producers like Constellation. Constellation is a little bit different in the sense that they're the ones that are actively alongside companies like Microsoft to restart nuclear reactors, particularly the 3 Mile Isle down reactor in New Jersey. But the thing about this, Vistra, is if you look at just last quarter, EPS growth year over year was up 600%. And the reason being is that they've re-signed power purchase agreements with major demand customers, which include hyperscalers like Meta Platforms, Amazon, of course, Microsoft. So they basically have fixed forward contracts.
Vistra Energy. They're talking about Vistra Energy right now on Schwab, bouncing at the 200-day BST. Victor, Sierra, Tango.
Electricity doesn't necessarily mean that the supply that goes to households and businesses can be reallocated to the highest price bidder because there's regulatory constraints. So at the margin, we're seeing these independent power players just ramp up tremendous demand, and these are forward fixed contracts.
Bitcoin continues.
Is higher by about 120% still, even though, as you mentioned,
Bitcoin, big reversal on Bitcoin.
Yeah, George, I mean, this is a company that had great 2024 performance, reiterated their 2025 and 26 guidance. Their cash flow is growing. They're retiring shares. They think they have double-digit upside potential. But everyone that I read says this stock got way ahead of itself. 80% of their energy comes from gas and coal, George. This has to have a bright future. AI needs energy. This might have just been kind of a technical, but I think it's interesting today, George. It hit it broke the 200-day moving average and then came back over it. So pretty solid news there.
Yep, Matt, I was going to say, I mean, obviously the 200-day moving average is an institutional line of support. I use 50-week moving averages, which are approximate proxies for the 200-day, and it seems to be holding that as well. I think if you look at the run-up the stock has had, particularly in 2024, you'd have to ask the question, is this sustainable just based on the business model? Well, I mean, first off, obviously prices were moved up tremendously because of the marginal supply that companies like Vistra, from an independent power production standpoint, can charge the customers. These are specific customers that are paying these high prices. You can actually see this if you look at gross margins for the business. Last year, they were essentially 43%, about 15% higher than their 5-year averages, and net income was around 1%. So their margins went up to 16%. So we're talking about 1,500 basis points of margin expansion in the last year. The thing about it is if you look at the earnings estimates, I did say that, if you look at 2024, they had earnings growth, at least the last quarter, 600% compared to the previous quarter for the same quarter last year. Going forward, I think things are slowing down. It doesn't necessarily mean that it'll give back all those gains. I think the acceleration in those gains that we saw in the past year are just not going to manifest going forward, because going into 2026 fiscal year at around $9.25 compared to 2025's estimates, it's around 22% earnings growth forward. So it looks like they got a huge windfall right away when they locked in these power purchase agreements with these hyperscalers. That going forward, it looks like prices for the electricity markets are settling, and therefore doesn't necessarily mean the stock will retrace all the way back all the gains. But I suggest that perhaps it means that we won't see a continual run up in this name like we may see in some of the semiconductor names like Nvidia and so.
All right, great breakdown for us. Appreciate it. That's George Tillis, Senior Markets Correspondent here, breaking that down. And just an item of note, Bank of America did upgrade the stock to buy from neutral today with a $152 price target, down from 164, but still about $30 above the current share price in there. The stock was reacting positively to that, now up 1% on the day. Kevin, you mentioned that 200-day moving average. Hit it earlier today when it was down. It's bounced up a little bit. So I took a look at an example trade here, Kevin, where, hey, it takes advantage of upside, but at the same time, if it falls, maybe I get a little kicker in there if it doesn't fall too far, where you can still profit on this type of strategy. So we look out in the put side, bought a put unbalanced put butterfly here, where I'm actually going to collect a credit on. So going out to the March 21st monthly cycle, so 17 days to expiration, buy one of the 115 strike puts, sell two of the 113 strike puts, and then buy one of the 105 strike puts. Credit I collect, we've got $1.80 on there. That's where it was trading earlier, trading closer to $1.10, $1.20 at this point, but it's still a credit on it. If you collect $1.80 credit on it, takes your break even down to 109.20 to the downside. That's over $15 below the current share price in there. And you can see here from the risk profile, anything above that break even, just above 109 is going to be profitability with that little kicker around the short 113 strike cap. So yeah, you get to keep the credit if it goes higher, Kevin, but if it does continue to fall with maybe the overall market, you're still protected a little bit, but you've got quite a bit of risk below 105.
Right. Remember what this is. It's a long put vertical, 115, 113, and then a shorter big put vertical, 113, 105. So that gives you your credit. It would peak out like a butterfly around that short strike of 113. But even though it's a put spread, right, it's still got a long delta. And therefore, because you collect that credit, anything on the upside, you just keep the credit and everything goes to zero. But Tom, yeah, this is one that plays for the slight move on the downside to the 113 and the risk.
Bitcoin's still driving higher. Most likely, a lot of people are thinking about the president speaking tonight. Most likely, we'll mention reserve getting ahead in Bitcoin.
That's below 105 level at this point. And Kevin, as you mentioned earlier, when you get moves like this, the stock's up pretty significantly from its intraday lows on the day, and that's why the price of this example trade changed. The low was 116, so we're $9 off of those lows at this point. Sure, you can do some strike adjustments on this stuff, right?
Yeah, we should say that a lot on this show, especially lately, because these markets are moving all over the place. So yeah, absolutely. As the stock moves, move your strikes, adjust them, of course.
Yep, definitely. And remember, the downside risk is below that 105 and that break even just above 109. All right, that's going to do it for us today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
Just watching Bitcoin and most stocks moving higher. Apple's kind of dragging its feet right now. Tesla with a little bounce. Tesla.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
All right, just watching Bitcoin continues to move higher, along with the New York FANG components. Most of those are at the highs right now. See if we can hold this today.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
All right, futures have pulled back from the highs so far.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach.
Bitcoin continues.
Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
The U.S., Canada, and Mexico. Interesting day to talk to him, wouldn't you think? Let's do final trades. Josh Brown, what do you got?
McDonald's refused to sell off. Stock's been green all day. RSI 58. This thing is set up to break out.
Ryan Belsky. BMO's owned.
BMO's owned. Thank you so much. On shoes, ON, the discretionary stock that's actually working.
Carrie.
Charter Communications, it's US based, it's utility, defensive, lower interest rates are good, and it's breaking out technically.
The Linkster.
Wells Fargo, I think the banks in general are a buy, and this one has a cost-cutting story, an asset cap lift story, and strong reserves, 14 times earnings as well.
All righty. We will track this very interesting market into the close, see what happens throughout the afternoon on Headline Watch as well, and I will see you on the bell at 3 o'clock.
Thank you, Scott, and welcome to the exchange. I'm Kelly Evans, and stocks are selling off again today as the president's 25% tariffs on Canada and Mexico go into effect, along with another 10% on China. All three countries pursuing retaliatory measures, which the president just said on Truth Social will result in an immediate increase of a like amount by us. Now, the S&P at one point seeing its biggest pullback so far this year. That builds on yesterday's almost 2% drop. The NASDAQ is down about 10% from its recent highs. And get this, only the Dow is still positive since Trump was elected, and just barely. While several retailers are under pressure today, including Best Buy and Target. That's for a mix of tariff and consumer reasons. What does it all mean for consumers and for the Fed? That's where we start. Here in the studio with me is KKR's head of global macro balance sheet and risk, Henry McVeigh, and CNBC senior economics reporter Steve Leisman joins us from Washington. It's great to have you both here. Steve, just kick it off for us on the latest odds. I guess they're saying the Fed's not going to be stuck. We're pricing in, 3 cuts at this point?
Yeah, pretty aggressive, Kelly, and good afternoon. What we're looking at here is 3 cuts now priced in. Beginning, hang on, I want to give you a fresh quote here. There you go. Beginning already in June for the first one, July for the second one, and then we have a third one priced in around October right now. That's where we're at in terms of where the funds rate is looking at. I have my concerns with the timing of that, Kelly, because I think the Fed has to make sure that it sees the tariff impact pass through. And now you hear President Trump threatening additional tariffs on top of his tariffs here. So where this all shakes out and when it hits the index, it would be very strange for the Federal Reserve to announce a quarter-point rate cut in a month that, say, for example, the CPI went up by a percentage point because of tariffs.
Exactly. So let's bring Henry in on that note. And you were just in Mexico, were you not?
Yeah.
On a fact-finding mission, or
Yep.
what are the facts? What can you tell us?
I'd say the facts are a couple fold. One is that Mexico is seeing a substantial slowdown since the tariffs. Companies have pulled back on capex, so they're feeling.
Even just a threat originally, because today's the first day we're actually seeing it.
The one thing I'll comment, we have 150 businesses around the world. There's a lot of planning that goes into this. And so what I would say is you saw companies such as Tesla and others start to pull back a while ago. So you're seeing that capex slowdown really manifest itself right now. The second is that the Mexican government and the citizens of that country, I think they really want
Bitcoin rising into the evening session. Most likely, Bitcoin traders thinking about Donald Trump talking tonight to Congress, giving an address.
I think with China, we're moving in a very different direction. There's been more of a strategic kind of ratcheting up of tariffs, and there's more of a competitive threat.
Yeah. Like, you got the Taiwan announcement yesterday, Taiwan semi-announcement yesterday. The industries that they're targeting today are in the defense space and around the Taiwan issue as well. So it feels as if we're kind of strategically decoupling.
I think so. And then I would put Europe in the middle. I mean, one thing we spend a lot of time on the companies is we're obviously judging in demand. If you go back to 2018 when President Trump first did tariffs, we built resiliency in our portfolio companies. So you had to think about supply chains. That got turbocharged during COVID when you had to force.
But also the first time around, that resiliency was often to move product to Mexico. So now when you're saying, well, it can't be China, but it can't be Mexico, but like we're to Southeast Asia.
Well, I think what's happening is most companies have multiple outlets where they can get production. We had one company pre-COVID that had one supplier in Asia. Today, that same company has 4 to 5. So some of that's in the U.S., some of that's in Southeast Asia, some of that may be in Europe, Mexico. So I think what you've seen is supply chains have become much more diversified. That was really accelerated during COVID. So I'm not here to say it's not going to have an impact, but I do think that in terms of getting supplies to market, that will help. What's different this time is President Trump last time did really create a tiering with China, where he said he had different kind of escalations on the tariffs. There were 4 buckets. This time it's been across the board. That's a difference. Our overall view at KKR has been that tariffs will go from about 4% of imports to about 11%. That's our base case that we've had in our models as we work through our portfolio companies. So we're not waking up today saying, oh my goodness, this is a surprise. We've been forecasting that and trying to optimize that.
Bitcoin still hanging in there.
Makes sense here. And of course it comes kind of in conjunction and at the same time as we're talking about consumer weakening. We're trying to
Nvidia
coming in the back half of the year. So it's like a perfect
Nvidia looking good.
The market's been up 50% the past 2 years. I think we all need to take a breath. We're down 1 or 2% year to date, and Europe's up 10, and Mexico's up. The second thing is more tactical, which we don't do at KKR, but if I put up my old lens, what I would say is bonds are actually rallying today. The dollar's weaker, and break-even
Robinhood continues to lift.
To Steve's point, the market is discounting slower growth. It's not saying we're going to have a structural inflation problem.
It's good if you want the Fed to do something.
Some of that gets back to what we were saying about the diversification of supply chain. So I think the near-term reaction is really around growth. My view is this isn't the end of the cycle. I think we may have spent some time on this. There's still a pretty good productivity story taking place in the U.S. This clearly is sands in the gears of globalization, but I don't think it comes as a total surprise.
Steve, what would you add to that?
Well, if we knew what policy was going to be and had some certainty about that, you could pick your suppliers, you could make your investments. The trouble is that it's unclear. For example, I thought Commerce Secretary Howard Lutnick was very unclear this morning in talking about the purpose of the tariffs. He talked long about the issue of being about fentanyl, and then he segued by himself several times within the same sentence into talking about the trouble of U.S. cars being sold in the United States, but made in Canada. And why is that? So it's unclear if the purpose of these particular tariffs are to bring the entire car industry now in Canada back into the United States, or it's about fentanyl. And the trouble, I think, Kelly, when I look at the uncertainty indices that are out there, I am amazed at how excited and optimistic business was to invest under President Trump. You had the S&P up 7 percentage points. And while, yeah, the market was up 50 points or 50% over whatever period of time there, all of that wealth has been wiped out. Since the inauguration, $178 billion has come off of the S&P. This is very dumb policy, Kelly. President Trump is snatching defeat from the jaws of his own victory. And I'm also concerned that it goes beyond tariffs and it creates a broader uncertainty about investing. I think the gentleman from KKR is absolutely right. There's a good productivity story in this country, but that productivity story only happens on the back of capital investments. And I'm very afraid about the confidence and the trust that's been eroded here.
You sound like Trudeau, Steve. His quote today was, "It's not in my habit to agree with the Wall Street Journal, but they point out, Donald, that even though you're a very smart guy, this is a very dumb thing to do." So it's just eerily reminiscent. Anyway, let me just give you
NVIDIA.
A couple of points. One thing is the way you manifest tariffs in the markets is through currencies, and a lot of times we're focusing on equities. The greatest volatility we've had over the past 6 months has been the currency market.
Dollar shot higher.
Yeah, materially higher. And so I would not discount that. That's the way what Steve said will play out. The second point is, if you look at the publicly available data, the ISM manufacturing came out first. Let's say it's been below 50 for 26 months, and actually since he's talked about tariffs, it's actually gone above 50. So that seems a little bit odd. But when you look at it,
yesterday's wasn't great.
But it was you had 26 months below 50. It's hard to hurt yourself falling out of the basement
And what's
window.
amazing is we were 2 years below 50 while doing the massive investment and build out across the country that you'd think would spur some kind of overall manufacturing.
But that's because of
point out the
Steve, let me
general
finish one thing.
One sec, Steve.
Okay, sure.
What is really important though on the data, the new orders prices paid went way up, signaling the concern that Steve highlighted. And second is some of the actual new.
All right, NVIDIA is about to go again.
If you don't create policy that gives guidance to corporations, we're a proxy for that, right? We've got 150 businesses around the world. We are having to navigate this. People do need guidance on which way to go. American companies can execute very well, particularly with some of the things we're doing, but you've got to have guidance on where you want to go.
Is the guidance now that this
There goes the futures.
that the uncertainty is over, and the certainty is that tariffs are now in place, or do you think that we're still all waiting to see if tomorrow brings new?
There we go.
You know, Scheinbaum and
Nice pop on the indices.
which would be better at this point, that they stay or that they come off after a few days?
I think we've been of the camp that they will use this to achieve their political goals, and there will be some economic consequences for that. So I'm not in the camp that all the tariffs are going to come off. I think we've talked about this at KKR. This regime change, heightened geopolitics, bigger deficits, messy energy transition, stickier services, inflation. Those things are here to stay. That happened since COVID, and that regime change has been playing out since. The Fed's going to miss their mandate for 6 years in a row. They told you. That's what they told you.
There goes Microsoft. Everything is breaking higher. Everything is breaking higher.
That's anybody invested in 2010.
Except for Apple. Apple drifted lower.
80% of the time. So it's completely opposite. And so what does that lead to?
Microsoft, NVIDIA, Netflix, Tesla, all bouncing, Meta bouncing, Amazon, Broadcom, Bitcoin.
I think just buying high-priced companies, either public or private, that peaked in 2020 when the Fed went all in on quantitative easing at extraordinary levels and were probably unnecessary in hindsight.
So you don't think that's coming back? And of course, we're seeing the collapse of that latest balloon today.
Yeah.
Steve, a final word, sir.
Very quickly, most economists believe that as a result of the 2018 tariffs, manufacturing went into a recession in 2019. So we'll see how that plays out this time. The other thing is, my objections are not with any of the objectives of the administration. It's the process here. And it feels like the things that are the objectives that are trying to be achieved here could be done much less costly with much less chaos attached to it in a way that would be positive for business and would affirm the initial optimism that greeted President Trump upon election.
All right, there's the economic policy uncertainty index spiking. Steve, thank you. Really appreciate it today. Steve Leisman down in Washington. Henry, stick around for just a moment. Want to bring in our Diana Olick for a look at the fallout all of this is having on the housing market and what Treasury Secretary Bessent is saying about it. Diana?
Well, Kelly, the industry stocks are reacting, of course, today. Let's start with the home building ETF. That's ITB. It's off its lows of the day, but still in the red slightly. The nation's largest home builders were solidly red earlier in the day, but recovered late morning. Lumber futures are, of course, higher given the news on the 25% tariff on Canada. There is already a 14.5% duty on Canadian lumber, so this will end up being total of a close to about 40%. Now, 1/3 of the lumber used in U.S. home building comes from Canada. Drywall, or it's called gypsum, is largely made in China and Mexico, so you'll see prices go up there too. A builder industry.
All right, NVIDIA just going off the screen now. NVIDIA, nice move. Robinhood continuation.
$10,000 per home. Now, the chief economist at Realtor.com today said that the entire market, including existing homes, could get hit as well by all this. Danielle Hell said we may see buyers' willingness to pay rise for existing homes as newly built homes get pricier, which would mean rising prices for existing homes too. Now, on the flip side, mortgage rates have moved lower in the last few weeks and sharply today, with the 30-year fix dropping 10 basis points to 6.64%. That's the lowest since October, all according to Mortgage News Daily. And as Kelly said, Treasury Secretary Bessent said in an interview on Fox News today, one of the biggest wins for the American people is since Election Day and since inauguration, mortgage rates have come down dramatically. So, Kelly, they have come down, but the question is, are they going to offset these higher prices that we're going to see for both new and existing homes? And I don't think it will.
Diana, stay right there. I was struck, Henry, by a comment the other day from one investor who said he's much more comfortable owning bonds than stocks right now. And doesn't that summarize the market and how much things have changed in just a few short months' time?
Yeah, look, to me, credit has become a more competitive asset class. There are a couple of things going on. One is this higher resting heart rate for inflation, and then second is productivity. The Fed probably is never going back to a zero bound on short rates, and so that's the short end of the curve. I think what Scott Bessent is saying is actually really important. He is working to get the long end of the curve down. We actually don't have any manufacturing and construction job growth right now.
Nice follow through on NVIDIA. Still going.
Above 7, things slow down dramatically. Mortgage rates below 7, activity picks up, and so
even at 6.6, you think that makes a difference?
It definitely makes a difference. And so we've had an economy that's been driven all by services. Goods, actually, we haven't had any jobs. We barely had any inflation. As services slows, I think what Scott Bessent and others are saying is we need some pickup in the cyclical parts of the economy, particularly if we're going to have some consternation.
Okay, we're right at supply right now. They keep buying and pushing prices through this area.
It's a very important signal for the economy.
Someone, I can't remember who said it the other day, that the Fed's in charge of the short end, but Elon Musk is in charge of the long end. I think others might say, well, Bessent has been in charge of the long end to some extent. I mean, who is in charge of the long end? Is it the government cuts? I mean, you talked about productivity.
Yeah. I think it's ultimately Scott Bessent. I mean, the Treasury dictates where we issue on the curve, when they want to come to market. I think he's put forth a very good game plan on trying to get the deficit down, how you think about producing more oil and really driving productivity on the U.S. So I actually, one of the things that we had said is that we were much more worried about bonds rallying than selling off. There's a lot of consternation out there about.
Not many people worry about bonds rallying. But.
Yeah, about stagflation. That would, remember a couple of weeks ago, that was all the concern. We got to 485 on the 10-year, and I think what we're saying is just let cooler heads prevail. Ultimately, I don't think we're going to go through 5%, and I do think there's some things going on in this government. There's a lot of hand waving around tariffs. I do think in terms of what the Secretary of Treasury is doing, he's doing a fabulous job there, and I would expect that he finds a way to get the mortgage rates down because I think that's important to the initiative.
Diana, if Henry's right, like you said, they've got visibility into the sector. 6.6% of the mortgage rate may not sound that exciting, but it will make a difference. It could help on the margin at least.
It could help on the margin a little bit, but
Right up against supply. Let's see if we can get through this area.
People have been going to new construction because there's so little supply on the existing home market. And as the builders have to absorb these higher costs, of course, course they're going to pass them on to the consumer. And the NAHB did a survey recently that said for every $1,000 more on the median price of an existing home, you're pricing out about 100,000 potential buyers, and they are already squeezed as it is. So I don't know that lower mortgage rates, as I said, are going to offset these higher costs. Diana, thank you. We appreciate it today. Diana Olick reporting there. And Henry, just before I let you go, since you mentioned the currency risk, and a lot of people are going to come back to this as they digest tariffs this week, or not currency risk, but the way it's reacting.
Yeah.
Do you think the dollar continues to strengthen and therefore kind of offset the tariff impact to the ultimate buyer here, or no?
I think the administration in the near term actually wants a stronger dollar because it keeps inflation down as it does on this. Our estimate at KKR is that the tariffs will take about 40 basis points off growth and add about 60 basis points to inflation over a two-year period. That can be offset through currencies. And so what I would look for is a strong dollar policy in the near term, but ultimately over time, I think Bessent and President Trump want a lower dollar so that they can increase the exports and make the manufacturing sector more resilient.
Exactly, because as strong as it is right now, it's not going to help us compete globally. It's just meant to kind of be a shock absorber in the near term.
Yeah, I think the bigger...
Except for corporate America, as we've seen from earnings season, but that's another story.
The bigger picture is we're getting a blurring of economics and national security, and the countries that are probably going to have the ability to dictate their future are going to be the ones with the largest domestic economies. The U.S., India, parts of Japan, and we're even seeing some of this in Spain. And so as I think about where we're allocating capital, those are really important countries for us.
Great point. Yeah. Perfect place to leave it. Henry, thanks so much for all your time today. Henry McVay with
All right. Stocks continue to look good. S&P climbing back, scratching back, lost levels.
The shares are near a 52-week low. Best Buy down as much as 16% after guidance was light, and they mentioned tariff supply chain exposures. Mattel also under pressure, even while insisting they've diversified their supply chain. Take a listen to all three CEOs today.
China and Mexico remain the number 1 and number 2 sources for products we sell, respectively. While Best Buy only directly imports 2 to 3% of our overall assortment, we expect our vendors across our entire assortment will pass along some level of tariff costs to retailers, making price increases for American consumers highly likely.
All right, it's getting cloudy. Maybe it starts raining. That would be great if we got some rain. It would be great if we got some rain. Let's see. Weather forecast. Myrtle Beach. Okay, we got rain in the forecast for tomorrow. Okay, that looks good.
Industrials and warns, much like our retailer discussion yesterday, that some companies may not have as much pricing power as they think they do, saying both the
NVIDIA is still pushing up against the highs.
Tariffs all the time. Julian Mitchell is managing director of multi-industry equity research at Barclays. Julian, it's good to see you. So how are you thinking this through?
Yeah, sure. Thanks very much for having me on. I mean, I think that the way we've tried to look at it is to focus on names maybe you have consumer discretionary exposure, as you mentioned. Those with, say, a lot of exposure to markets such as automotive. I think you'd also wonder about the pricing power there vis-a-vis very strong customers. On the other hand, I think areas with stronger price include some of those non-discretionary categories, even into the residential world, such as HVAC. I think those names have been oversold and look very attractive. And then I would say beyond that, perhaps electrical equipment, still pretty good pricing power there, even though lead times are normalizing. So I think there's quite a broad spread of pricing power across the group. On average, remember, for the typical...
All right, come on, NVIDIA. You can do it. Push a little higher. We're up against resistance right now, NVIDIA. Looks like with this little pause up here, people are starting to get a little nervous, taking some profits off the table. Supermicro hanging out just above the 50-day moving average. Let's see what Meta is doing. Meta. Let's look at Meta. Okay, Meta below the 50-day needs to get back above. Pull back to this breakout area right around 630, 632.
discussing regarding yesterday's data. Things like South Korean exports for the month of February were also pretty soft. So I think you're starting to see some of that top line slowdown coming through, and the management teams of industrial companies and their customers, I think, will be slowing down decision making and probably wait to see the next few weeks.
Julian, can you settle this kind of debate for us that the whole market is having? When we talk about these tariffs, should we think about your industrial coverage universe as benefiting from potential onshoring or suffering from the uncertainty that's causing people to delay business spending and investment?
It was really
All right. NVIDIA, can you do it, NVIDIA?
channel partners like distributors will weigh on their top lines, and we did not see.
It's only 1:22 on the East Coast. 1:22. I'm your host, Cousin Vinny, coming to you from theclosingprince.com. It's Tuesday the 4th. Tomorrow we'll get something out of the Fed, and tonight we'll have President Trump speaking to Congress.
Julian, thanks. We appreciate it for now. Julian Mitchell with Barclays. Still to come, China hitting back, this time targeting U.S. corn and soybeans. A live report from Beijing is next, and we'll ask ahead of one farming co-op where we expect to see the biggest increase in customer prices. Plus, the tech sector turning positive. The Mag 7 still mostly lower, although NVIDIA is bouncing back today. Morgan Stanley's co-president joins us from the firm's Tech, Media, and Telecom Conference in San Francisco. And as we head to break, here's a check on markets with the Dow pairing an 844-point loss. Still down 536, and it's the worst of the major averages, down 1.25%. The S&P down 1%, the Russell same, and the Nasdaq only down 1/3% after briefly turning positive. 419 on the 10-year. We're back.
This is The Exchange on CNBC.
Okay, so yeah, that's moving towards New Orleans right now, if it's not already there. So we'll get some weather, hopefully put out some of these fires. Still got an ongoing fire situation within a mile. I don't know if you can hear those Chinook helicopters, but they keep flying overhead. There's about 6 of them now. They just keep rotating. They go over to the Intracoastal Canal about 5 miles away, come back, and they just keep circling around. It's pretty wild stuff. Forest fires. All right, let's see.
Looking at a $70 max profit, a $130 max loss, and a break even of 109.30. Simply subtract that 70 cents from the 110. So neutral to bullish strategy in NVIDIA. Elongated Z risk profile, stay above 110. Basically the lows of today. Over the next few weeks, this one has a chance to be profitable. Diane, I'll send it back to you.
All right, great stuff. Those are example trades Alex brought us for NVIDIA and Tesla, and great charting there from our chart master, Rick Duquette. FOMO is up next. We'll preview CrowdStrike earnings coming after the bell. Next Gen Investing. We'll be right back after this break.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free.
NVIDIA, stochastics oversold, volume starting to pick up today.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz. Actually, it's a link from Schwab. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
we're experiencing technical difficulties.
Come on, NVIDIA, you can do it. Bitcoin taking a little break up here. Bitcoin for the last 10 minutes just kind of consolidating at the highs of the day. Futures pulling back a little bit. See if we can't get another thrust higher.
I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market. Weekdays at noon on the Schwab. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's time for FOMO. Today we are going to discuss CrowdStrike, and for help with that, we're welcoming in Kevin Green, Senior Markets Correspondent. Of course, Diane King Hall is with us as well, live from the New York Stock Exchange. KG, set up CrowdStrike here for us. It's been green for a bit now, still up about 30 basis points. The NASDAQ was green there for about 5 minutes or so, maybe 10 minutes ago, but back in the red. What do you make of today so far in CrowdStrike here?
Yeah, I mean, you are seeing, a nice little bid getting caught for the name that was down early on in the session. It actually clawed back around 3.3%. So I think the market's really just kind of preparing for this earnings announcement after the close here, and rightfully so. There's a lot to expect when you're looking at this company and the fundamentals that they're going to be reporting here, especially when you're looking at the fallout from the outage. That obviously disrupted a lot of the air traffic. Now, there was a little bit of consumption right after that.
I don't know if you guys can hear that, but they're like right over the top of my house. So that fire must be getting a little closer.
As what we have seen from the company, will this be the quarter where they do see some cracks when it comes to retention rates? I think that's a big question mark here. But they're also going to be leveraging artificial intelligence and have been doing so, but they're doing so on a larger scale now within their security offerings. And what is the uptick rate when it comes to that product offering? I think it's going to be key. Street's looking for revenue to come in at $1.03 billion, and the adjusted earnings per share estimate sitting at around 85 cents right now. And what we are going to also be focusing on is the remaining performance obligations, or ARPU, if you will. The street has an estimate of $5.95 billion for that number, for that to come in. That would be around a 29% increase on the year-over-year rate. The reason why that's really important.
Okay, futures. We're looking for another higher low on the S&P. A little drift lower off that evening high, afternoon S&P.
KG, you just talked about, that outage, and the stock has had quite the recovery since then, since that, sharp drop it had back in July of last year. What do you think is the investor focus going to be most on? Is it going to be about margin expansion? What growth looks like for the rest of this year for CrowdStrike? What its customer base looks like? What do you think is going to stand out the most?
Well, there's going to be a couple of areas. So after that outage, they did have to leverage discounts for their existing contracts for certain customers in order to retain them or make it as a goodwill gesture. And that's also going to put a little bit of pressure on margins, and we have seen that. Is the company really going to come out and state that they're going to be kind of discontinuing or drawing down some of those discounts, or is that something that's going to be kind of in the works and something that stays permanently moving forward, which obviously is not going to impact the new customers that come on board, but maybe the existing customers and the profitability there. Going back to the remaining performance obligations, that's another one too. You want to see that backlog of orders and items that they need to deliver to their customers grow more and more, because that's obviously a demand driver. So I think those are going to be really kind of the two biggest points for this earnings announcement. And then given the outlook moving forward, are they going to see
Continue to fade a bit.
headwinds? And then also, do they have any dollar exposure that could actually impact?
Okay, so far we've got a pretty decent hammer on the S&P cash. Man, these guys are really close. I don't know if you can hear that. It's right out my office window. Okay, so we got a nice hammer. Close a little bit higher would be good.
You could say it is expensive, but there's not a lot of companies out there that have seen the EPS growth or even revenue growth like CrowdStrike. So if you're kind of looking at the estimates moving forward, the EPS growth numbers actually continue to go up. In 2026, you're looking at EPS growth sitting at around 17.6%. In 2027, the expectation is 26%. In 2028, obviously it's far out, but you're looking at 30% growth. And so if it's able to actually meet that mark, you can make the case that it does kind of deserve a premium valuation to maybe others within this space. And that kind of goes the same way with top line growth. You're looking at a benchmark of around 25% or even higher, around 28% year over year over the next 3 years. If it's able to once again hit that mark, investors tend to try to pay a premium for companies that are showing positive growth, not only on the top line, but also bottom line. And so I think that's kind of the justification for the high valuation for this name. Until we see a meaningful pullback in price because of concerns about growth, stock probably can remain at these elevated levels when we're looking at forward multiples.
KG, you just mentioned the macroeconomic pressures. How much impact do you think that could have on CrowdStrike and its ability to kind of maintain revenue growth?
Well, that is actually a really good question. I'm not sure, if they do see a macroeconomic slowdown, and especially impacting large cap companies or even mid cap companies, that could actually maybe delay or slow down the sales cycle for CrowdStrike. This is similar to what Palo Alto saw pretty much at the middle of last year, which is a little bit of a concern. And then CrowdStrike also has exposure to government contracts. So are they seeing any of their contracts being canceled? It's one of those questions that you would think cybersecurity.
All right, let's do this. Let's push this higher. Let's confirm this move. Come on, let's do it. Let's do it. Let's confirm this move. Make the bears unhappy. Make all the bulls happy. We finally gonna get a bounce.
Especially on the software side and the cybersecurity side, is going to be the closest competitor. Palo Alto also has the hardware component of their business as well, which makes it a little bit unique. But if you're looking at the same type of clientele that really CrowdStrike tries to target, Palo Alto Networks is going to be kind of on that same scale. Fortinet is going to actually be more mid cap and then small cap and smaller companies. CrowdStrike tries to get those customers that are very large, S&P 500 type businesses.
KG, I just want to ask you really quickly. Partnerships has been kind of a part of CrowdStrike strategy. It's got that partnership with Microsoft, it's got AWS. What should investors be looking out for to hear on that front? An expansion of partnerships, or do we not expect to hear much on that?
All right, S&P, let's do it. Let's do it.
Tailwind for them, just depending on how the JV is kind of set up here. If you're kind of looking for optimism around this name, it would probably be more of the cloud players. So you already talked about like Amazon having exposure there, but if you do see a partnership or a greater partnership with like a Snowflake or what have you, those cloud service providers that are going to be kind of at the heart of artificial intelligence and trying to protect those models and protect from intruders, information. I think that's really where we're going to see major growth from CrowdStrike.
KG, appreciate it. Kevin Green, Senior Markets Correspondent for the Schwab Network. Good stuff. Lots of info to digest here ahead of a pretty high-stakes earnings event. It's always tough, I think, Diane, for these companies to report when the market's going a little bit wild. Like, regardless of what you say, it's going to be looked at, I think, a little bit with that glass half empty. That's just my assessment of things. Any final thoughts for you before I got an example trade?
Yeah, I would say that, kind of two things to think about. We know that they'll probably be asked about tariffs on the earnings call because we've seen an increase in that coming up on earnings call. So no doubt that will be a part of the conversation. So it is
Come on, let's do this.
for them to report.
I'd like to see more volume coming in. Watch the volume down here. Watch the volume. Buy order blocks keep coming in.
So it's done well in terms of its recovery from that massive outage back in July.
Oh, I mean, that's an understatement almost. I mean, the stock made a new high. I mean, it was such an incredible turnaround after such a really, really tough time for this company to kind of navigate, and they did so I mean, based off stock price, I got to say they did so well, simply just from that. But what I looked at was kind of it ties to that. Pre the big drop in the summer, the stock was trading around 400. It was just below 400. But say you think that the stock can get back to that level, a level it's been at just recently in the last few weeks, I have a strategy that'll benefit from a jump towards that. Looking at selling the March 14th 400 call and buying the March 21st 400 call. So this isn't like a true, binary earnings trade. It gives it a little bit more time. But a 250 debit, it does have risk in both directions. If the news is super, super strong for CrowdStrike and it overshoots 400, there's risk to the upside. And then, of course, if it never actually moves towards 400 at all, there is risk to the downside. So throwing a dart, aim small, miss small, looking to make some return on this example trade if it does creep towards 400 post earnings at some point over the next couple weeks. That's going to do it for this segment. Thanks to Kevin Green and Diane as always. Diane and I will be right back. When we get back, we're going to be joined by an analyst from S&P Global Ratings, the managing director of retail and consumer, B. Chim, to help us with the outlook for retail amidst all this uncertainty surrounding tariffs. We'll be right back.
All right, let's do it. Yeah, it sounds like
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex around-the-clock market access, even when equities markets are closed. All on our award-winning thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
all right. What else can we get out of this market? Can we get anything else?
Joining us now is a special guest, B. Chim, Retail and Consumer Managing Director for S&P Global Ratings. B, welcome back. And, never in my life and most of, people's lives of the last, 50, 60, 70 years has tariffs been such a big part of the conversation than it is now. So the next step is, okay, we're talking tariffs. Well, what's the impact going to be? I know you focus on retail and the consumer. I'm sure you're doing a lot of work trying to figure out what this might do within that space. So welcome back, and we're excited to have you. What are your general thoughts on the landscape?
Yeah, thanks for having me. I think, this time around, it's going to be more difficult, right? The first solution for many companies is to pass along price increases. We know that we're coming off an inflation cycle that consumers have been hit by. Retail prices are at least 25% higher than they were in the last tariff cycle. So we know that there's less pricing power. So consumers will have to choose. Obviously the earnings report for Q4 and fiscal 24 were pretty solid, but it's really about the outlook for 25.
The outlook for 25, we had earnings today from Target, from Best Buy, executives at both companies.
All right, so the S&P giving us another lift. All right.
The consumer electronics chain, highly global technical complex. They have that exposure to China and Mexico. Target mirroring the similar commentary with expecting the tariff and the impact to them. You can expect that to flow down to the consumer. How long before the consumer says Uncle B?
Yeah, and that's the key question, right? We know there's certain categories that are very elastic, and it's those discretionary categories and durables. And we didn't really see durables.
All right, there goes the S&P. S&P on the move.
And so we know that discretionary spending is stretched for consumers. And so I think companies will have to decide, do we take the margin hit? How much do we pass along, and what can we mitigate before we
NVIDIA.
try to pass along that cost to the consumer?
And along those lines, we know that so many of these companies, particularly the big box stores are making tremendous investment in things like AI, and they're building out their omni-channel and e-commerce and trying to build logistics networks to compete with Amazon. If they're being squeezed from a margin standpoint on tariffs, it would be naive not to assume that they're going to pass some of these on, and Target outright says it. So as you assess that, then what is sort of your baseline? Do you expect these bigger companies to pass on, dollar for dollar of the increase? Do you think they're going to try to weather as much of it, in their own margin as they can?
Yeah, that's a great question. I think the retailers who have been the winners, like the Walmart, Costco, and Amazon, they have a lot of negotiating power over their suppliers. And we've seen that in the past. So I think they'll do the best that they can to see what they can mitigate. And then, to the extent.
All right, S&P climbing back up to the highs of the day. Maybe trying to get there. Certainly a lot more palatable today. The last couple of weeks have been a drag. If you've been bearish, you've done fine.
Experience secular decline issues and structural issues. So I think it's those segments where they've already had pressure, where you may see additional pressure, and they also have a larger exposure to tariffs in a lot of their assortment. So companies will have to be creative in how they look at their assortments, where they can price, and then where they can really work with their supply chains and mitigate some of that.
The last question that I have for you is, in this landscape where it seems the chess pieces are ever moving, and these tariffs, at least this first round on Canada and Mexico, as well as China, are seen as being in regards to the border or fentanyl. And there's this reason. It's not just simply trying to reduce the deficit. It does seem that there's an uncertainty about how long, how vast some of these things will be. If you're looking at some of these businesses and you're a Target, you're a Walmart, you're a smaller business, how do you navigate that uncertainty? Do you assume the worst, or do you kind of hope for the best?
Yeah, I think the good thing about this cycle is that companies became more resilient with their supply chains, right? So they learned from COVID and the post-COVID inflation and supply chain challenges. So I think what we're watching closely as well is how do they manage inventory. You don't want to overbuy pre-purchase because that's going to hurt working capital. You don't want to liquidate excess inventory later. So inventory management is key here. Our underlying assumption that these tariffs are in effect through at least the first half of 2026. And I think a lot of companies will have to determine how cautious they want to be and how much forward buying and how do you manage that inventory, which could get pretty tricky.
Consumer sentiment has been shaky recently. We've seen this come up in whether it's the UMich surveys of consumers or the consumer confidence reading. And before we got the tariffs actually officially coming to the table, consumers called out that as a concern. What are you watching for in terms of sentiment as it comes to the consumer and as it plays out with these retailers? And are you expecting to see any consolidation or shrinking of store footprints as a result?
Yeah, that's a good question. Yeah, we've been monitoring that closely. We've been also monitoring the health of the consumer financially. Are they increasing credit card debt? Are they funding their lifestyles with debt, which is happening? And so we do think a combination of those is showing that the consumer is much weaker. And so
Okay, come on, SPY. Let's take a new high. Would love to see this. Would love to see this hammer turn green on the day. And we're getting close.
Appreciate it, B. Thanks as always for joining us. Diane and I are going to take a quick break, and when we get back, we're going to be joined by George Tillis. We're going to look at On Holdings on the heels of its move to the upside, which goes to show you got a winning brand, you got a chance, even in the midst of this tariff and market sell-off. On Holdings having a nice little day up almost 7%. We'll be right back.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customized to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading the trending names every day. It's Fast Market. Ready for you.
All right, this hammer looking a lot better.
Catch me on Fast Market. Weekdays at noon.
Can't seem to get back above yesterday's low, though. S&P looking good. Cash Patel.
Welcome back to Next Gen Investing. It's under 30 time. Looking at On Holdings on the ticker. George Tillits is with us, senior markets correspondent for the Schwab Network. And George, I was just saying before the break, one of the most important things, especially in these kind of retail, consumer-facing brands, just have a winning product, and it'll solve a lot of your problems. Looks like that's what On Holdings has been able to do.
Yeah, it has. I mean, there's been some great growing brands in the footwear space, and On Holdings is one of them. I see them all the time. There's multiple pairs in my household. Very popular. Hoka from Deckers also has taken over in terms of market share. And, you got to look at some of the laggers. Looking at Nike, the past few years, that stock has been sort of decimated. So the point is,
All right, one more attempt at the highs. A little profit taking, still resistance up here at yesterday's low. New York Fangs are trying their hardest to stay here. Looks like they're buying. Looks like institutions are buying. Still early to tell. We'll know over the next couple of days.
Cents on an adjusted basis. They were expected to earn about 18 cents for the quarter they just reported, but they actually came in with 38 cents. That was a significant improvement compared to the already adjusted EPS of profits for the quarter. And sales were higher 35%, 691 million now for the quarter.
Come on, let's do it.
Beating the estimate, and it was about 35% higher than the.
We'll get confirmation if this closes higher, at least into yesterday's price action. That's confirmation that we should see potentially some follow through. This morning just looked like short covering. Oh man, they got everything out here now. They got seaplanes with those pontoons and water. Water. Wow, come on, S&P, make my day. Make my day.
Nearly as big as, of course, companies like Nike or Adidas, but they have been growing and they're growing efficiently, and that's really important here. Particularly pricing power as well, because gross margins for this particular brand is sort of in the luxury realm or camp. It's around 60% of sales, and that's quite high. So they do have pricing power. People are paying for the products.
Yeah, George.
Here we go. Here we go. One more shot. Let's go. Shot through the heart. You're so
personally been a Brooks girl myself, but I recently
you
saw here that
give
I like that
love
they
a bad name.
But you mentioned growth. Can you catch people up on what their growth trajectory looks like for this year?
Yeah, I mean, if you look at the estimates for the fiscal year, they're expected to continue to grow the top line sales over 20%. What's interesting is what's important is that the company now seems to be more consistently profitable. If you look at, for instance, the EPS for the fiscal year 2025, it's around $1.13 per share. Now, again, if you look at this last quarter, it was around 38 cents. So the estimates going forward might actually increase, considering they actually had quite a large EPS print for the quarter they just reported. So with that said, I mean, the brand is still growing. You're still expecting about 20% top line sales growth, but the EBITDA growth is really where you see this gearing effect, particularly for growth companies like On Holdings, which is expected to continue to improve. And like I said, last year they were barely profitable for the full year on an adjusted basis, and now they're expecting complete profitability for the next 4 quarters. So they're moving in the right direction. They're achieving scalable economies of scale, and that's again important because again, you can't just sell product and not make money. They're actually doing both, and they're doing it well.
George,
Come on, let's go, S&P. NVIDIA's trying to do some more damage to the bears. Okay, here we go with the SPY. SPY moving higher. Okay, looking good. SPY.
Most folks will probably be hit by the larger durable items from their consumption bundles. I think the auto space is going to face some challenges because we're talking about thousands of dollars of additional cost per unit. I think when it comes to On Holding, because it is a Swiss company, they are going to face some currency challenges and some tariff challenges for sales at the very least in the United States, assuming the tariffs do sort of expand to the European Union on an ongoing basis. So I think it's going to impact everyone at the end of the day, to some degree, at least at the consumer level. But you also have to think about brand recognition and awareness and premium pricing, that maybe the customers will absorb those additional tariffs. They'd have to, but again, it may end up encroaching some volume in sales, but they'll make up for it in price.
Yeah, it doesn't. So far, obviously, it seems like they're avoiding this tariffs. I mean, one.
All right, let's go. Let's do it.
Countries that they have exposure to right now. In terms of its share performance, the stock is up almost 7% today. What are you paying attention to in terms of levels for the year, George?
Well, I think you got to look at the breakout levels. Obviously, the stock has pulled back over the past month or so. So we want to see a trend continuation back to some highs or even breakout to new highs. So this is certainly one to keep an eye on. One of the things I'd be aware of is changing dynamics from the standpoint of earnings estimates from analysts. So keep in mind that once the analysts get a hold of where they think the prospects for the price will go, I think they'll make some adjustments to the upside just based upon the better earnings that they actually posted. Plus, like I said, they're becoming consistently profitable, so trends can continue in that regard.
Yeah, I hadn't realized, George, a pretty nice little skid in this stock pre this earnings announcement. So a nice change of direction that was necessary.
Here we go.
To stave off further downside. George Chose, appreciate it as always. Senior markets correspondent for the Schwab Network. Diane, we got a green NASDAQ. So we got to hurry up and get this show over. We left it in good hands. We'll see what happens next. The watch list with Nicole Petalides is up after us. Thanks as always for tuning in.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
All right, let's go, SPY. All right, we getting the confirmation.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
All right, nice follow through. Seeing some confirmation. We never got a capitulation selling though. That's the only thing that bothers me.
Exchange. Look, we bounced up off the lows of the day. In fact, you're seeing a name like NVIDIA back in the green. We had the NASDAQ composite in correction territory. Maybe there's some bargain hunting going on, says David Dietz, one of our guests in our lineup today. Here's what's coming up in the show. We'll be joined by the CEO of Trinity Capital to review the company's fourth quarter earnings and examine the state of the financial sector. Also, it's Technical Tuesday. Key day for this. Kevin Horn.
All right, looking good. Only thing that would be better for me at this point, aside from the markets moving higher, is to put that damn fire out. They're making me nervous with all these freaking helicopters. It could be that they're picking up their efforts because that storm is coming through with high winds. I assume that they don't want to be fighting it during that storm that we're due to see tomorrow. It's supposedly moving through Texas, already moved through Texas and moving through New Orleans now. So it'll be moving across Mississippi and Alabama through Florida and then the southeast coast. So hopefully we'll get rain and the wind will die down. We'll see. Okay, SPY is moving though. Robinhood, nice work in the trading room. Robinhood. Okay. Good job.
Kevin Hanks, host of Fast Market here on Schwab Network, taking a look at what's been going on. Obviously, with all the tariff news, we've seen a lot of volatility. The VIX was jumping 10%. Some of your thoughts on the tariff news and the latest?
I think uncertainty, Nicole, leads to downside in the market, and there's back and forth going on. I think there's things you can read into some of the comments that may lead you to some reasons why maybe the market is off some of its lows. Number one, the Mexican president talking about Sunday their tariffs will go on. That means that they have 5 full days to negotiate some removal. Back and forth between Canada and their tit for tat and our reciprocal tariffs. And it looks like there's going to be some discussions before all this takes place, even though, as of right now, the 25% tariffs on Canada and Mexico are in effect, and another 10% on China, which makes 20. Now, I fully expect some negotiations to take place, and even though those tariffs are in effect, I don't think the negotiations are done, frankly. So that's where we are. The headlines are coming every hour. There's some new comment from some leader of some different country about the tariffs and what they're doing, and some member of the Trump administration. But from a trading perspective, and that's what we do, I need to stay in my lane. And here's what I look at, Nicole. You've got a lower U.S. dollar. You've got lower 10-year yields, and you've got lower crude oil prices. Those 3 key macroeconomic indicators are giving you a slight reason to look at buying dips. And this is a market that was down almost 2% in the S&P 500, and now it's clawing back to close to down 0.5%. The NASDAQ has gone positive, as you know. So this is turning into a real mixed day where dip buyers are here, and they don't seem to be going away. They don't seem to be fazed by the uncertainty, Nicole.
All right. Thank you for all of that. And it's my understanding we'll also have more on tariffs on April 2nd, a trade reset of some sort. I heard Howard Lutnick talking about that today. I had already written that date down. I had noted in my mind that it was April 2nd and not the 1st, so nobody could think it was an April Fool's joke. Literally. I mean, I really thought about this from like 2 weeks ago when they started spewing out the dates. Let's take a look at Target, a name that started off in the green early in the morning and then was in the red. Where is it now?
Yeah, hi. Well, Nicole, a very disappointing.
All right, nice move through the upper resistance levels, SPY, S&P, Qs, IWM, everything looking pretty good. I will say the New York Stock Exchange stayed above the 50-day all this time, so that was a good thing to look for.
Very similar to Walmart. They gave a very muted, a very moderate guidance going forward about the U.S. consumer. They saw a little weakness in February. They acknowledged that, and that seems to have softened the stock. Although the stock is some $5 off its lows and clawing its way back as well, this is a stock that was originally higher on the earnings release, but then some of the guidance came out and the stock softened, as much like Walmart. Walmart beat on its numbers and beat on its revenue as well, but gave very conservative or hesitant guidance. Very similar case here in terms of Target. But like I said, the stock probably $5 or more off its lows now, Nicole.
All right. Thank you so much. We've heard from some of these companies like Target, like Best Buy, noting that prices may likely go up and they may have to pass that along to consumers because of tariffs. We'll continue to follow the retail story too. Thank you. Kevin Hinks, great to see you on tariffs and Target as well. A bigger picture here, David Dietz is here, Managing Principal, Senior Portfolio Strategist, PPAC Private Wealth Management. Thank you for being here. We just talked about how, it's coming back. We're up off the lows, but it has been a wild run.
Very nice move. Very nice. All right. So one of the things I pride myself in is not getting all sucked up into the market when emotions get high. I've seen this so many times. Markets pull back maybe further than we anticipated or thought possible in the short term. But here we are. We hit the 200-day and bounced. Now, I'm not saying that this is over with, but certainly is a lesson for, reducing your risk into strength, which we did the last couple of weeks into last week, and watching for things like the junk bonds to give us signals, which we'll take a look at now. Junk bonds. Junk bonds with a big hammer as well. This is risk on. Okay, if we get back above the 50 and start to launch back in the opposite direction. The U.S. dollar had been moving lower. It is moving lower, so gold is moving higher. Okay, so all of these signals are becoming more bullish, even though we have been bearish for the last few days. Okay, S&P. Beautiful looking hammer now. Now, is it over with? I don't know that it's over with, but it's certainly going to give you an opportunity to reduce some of your risk. Maybe you were too heavy on the stocks on the long side. Maybe you need to reduce your exposure. Maybe you had 1,000 shares of NVIDIA. This will give you an opportunity to get out of the higher level. Maybe you take 200 or 300 shares off and see if we can follow through. Maybe that's not your style. Maybe you want to just hold it right now and see if we can follow through and push a bit higher. So I'd be looking for a move back to the 50-day. So far, we got confirmation for today. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Tuesday, the 4th of March, a little bit after 2 o'clock. So what institutions do, they might be front running in this. They might not have waited until 2 o'clock. They might have saw an opportunity and started to pick up shares. I got a feeling the institutions have been picking up shares, maybe not 100% of what they want to get, but it is March. March is seasonally one of the stronger months of the year. So we're looking for more follow through. A confirmation would come on a bullish candle tomorrow and continued buying like we're seeing today. So we'll see how this turns out. But overall, this is a pretty decent confirmation on a hammer for this Tuesday, the 4th of March. All right, let's look at Oklo. Oklo trying to get back up.
Beset by problems that have nothing to do with its position in the AI food chain, but rather accounting issues, potential delisting and accounting. An accountant quit, but they've got new accountants. They solved their delisting problems, and the stock right now at 39, I think it's one of the top performers of the S&P 500 today, is trading at just over 10 times earnings. So I'm thinking like, hey, I got my AI play without having to pay a nosebleed valuation, and I love the fact that Jensen Huang, the CEO of NVIDIA, the other day gave a shout out to Supermicro as one of their key partners in furthering the AI revolution.
Yeah, I mean, there was certainly a lot of concerns, and then they settled that and not to be delisted. It has had a lot of volatility. At one point, it was $17 and change last winter, like maybe November, December time. Now at almost $40. So we'll continue to watch that. What's the big picture here? Are you?
All right, so a little profit taking right there.
I think recession is part of economic life. No one can really predict it. I do think the Fed has kept interest rates too tight for too long. So I think it's a risk. Having said that, I do believe in the market's now pricing in potentially 3 rate cuts by the Fed, and that will be helpful. I do think
Supermicro at the highs. Supermicro.
The government will do what's necessary in terms of fiscal spending because the bond market doesn't seem to be concerned about the excess of debt, so I think they'll continue to spend. And of course, one silver lining to what's going on geopolitically is now we have tremendous fiscal stimulus that's going to occur over in Europe and perhaps other countries as they realize they've got to pay, or at least cannot rely on the United States for their defense, and they're going to be spending billions of dollars to build out their capabilities. That's going to be manna from heaven for economies. So ultimately, I don't think that the recession is your base case here.
And you're getting the cuts from the Fed, and that'll help as well. You had a couple of other names that you liked in light of the fact that you do think it'll probably be a decent economy, it sounds like. And you had ConocoPhillips on there, as well as ADM.
Yes,
Archer
absolutely.
Daniels, right?
So, Archer Daniels, they've paid a dividend for 92 years in a row. They're a dividend aristocrat, which means they've hiked that dividend for more than 25 years in a row. They're like the backbone of commodities and commodity trading at about 12 times earnings. The stock was 66 last July. Now it's 46. I think you can get back up to that 66 in the next 24 months. That's a 40% return plus your 4% plus dividend. What's not to like there? ConocoPhillips, oil's been down, but I think ultimately China will get some stimulus going. I think that Conoco also, I think, is one of the best managed of the energy companies. Very low debt,
trading about 11 times earnings, nice dividend, and you never know, under the new administration here, there could be a little more M&A activity. Who's to say that a company like Exxon wouldn't ultimately take a swipe at ConocoPhillips? You can't rule that out either.
All right. Well, David D, it's great to have you on, and I think viewers love to talk about NVIDIA, so they'll be happy to have heard maybe an alternative to NVIDIA.
All right, nice move.
More affordable for them. Thank you, David D. It's great.
Microsoft, all of these stocks reversing today. Looking good. Apple's starting to turn now. Apple. Okay, do they follow through with Apple? Do we follow through? Apple, do we follow through? Okay, let's see what Apple looks like. Apple is concerned about tariffs, I guess. Apple. Hello, Lucy. All right, a little consolidation at the highs again. S&P. Okay. Pre-market, we were up here. After hours pre-market, yesterday's high. Let's see, we'll put this right here. That's yesterday's closing level. Okay, can we get above that level?
Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Go to schwab.com/coaching and start learning today.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. Time for Options Corner, where we analyze unusual options trades we're seeing throughout the day. Welcome in Tom White, host of Fast Market here on Schwab Network. And obviously, we've seen a volatile market, a market that has sold off and has broken some new ground on the bottom. And you're watching the tech sector in particular, the ETF. Tell me a little bit about what stood out to you and also the neutral to bullish trade you found, Tom.
Yeah, if you've looked at the NASDAQ 100, it was down over 2% earlier in the day, now up 0.5%. So it's been a whipsaw today. Still down about 3.5%, 4% so far this year now. So it's in the red, but, you know, we're not that far off all-time highs. If you look at the XLK, which was kind of in focus today, that sold off pretty hard. Still down about 10% from those all-time highs that we saw in February, but now in near correction territory there. In XLK, you've always got to look at the components within an ETF. XLK is more technology-based than the NASDAQ 100, right? Biggest components within here, Apple's about 15%. Microsoft, NVIDIA are about 12% each. AVGO, which we'll talk about later, is about 5%. And then you've got Oracle, Salesforce, and some of the others. So this is the big names within the tech sector on this. So coming out of correction territory with this rally, snapback rally that we're seeing today. But implied volatility levels, the VIX got above the 26 level earlier today on that sell-off. Option premium was exploding across the board as everybody was reaching to cover.
All right, so we know where the levels are.
But there was a lot of reach for
Okay, so we're pushing through this area. I don't know. It just seems like there's institutional buying the way this is running. Volume is picking up. Looks very strong. Okay, so this is looking really good. Okay, nice follow through. Volume there at the bottom. And Bitcoin's still going.
On that big downturn that we've seen this week. They collected an average credit of about $10.35 on these puts. So they, as I mentioned, option premium or extrinsic value exploding today. But these out of the money puts, they collected about $10.35 per contract on those. So that takes a break even where they start losing money down to 204.65 over the next 3.5 months. That's about
Okay, Meta's still pushing. Meta looking good. Meta, nice follow through.
Maybe traders coming in there selling cash secured puts like this trader did. Maybe they're trying to pick that bottom, take advantage of the higher implied volatility levels while still giving themselves a cushion to the downside. And if the stock or in the XLK continues to fall down, maybe they have to buy the shares if it goes below 215 at expiration. But they've given themselves 3.5 months with the expectations. I think this trader was trying to take advantage of the move lower today to sell some out of the money puts for that neutral to bullish stance.
All right. And, it's amazing because I was reading how, at least in one area, the bearish sentiment had risen so much and was at 30-month highs, and people were nervous. And yet, even today, when we started to see correction territory for the NASDAQ composite and things at some new lows, you started to find some bargain hunting, and that's somewhat reassuring. That being said here, JP Morgan Chase, this is one. The financials have gotten hit so hard today. The group was down almost 4% this morning when I had the Thinkorswim open. It has certainly gotten a little reprieve. Some of your thoughts on JP Morgan, neutral to bullish stance you found?
Yeah, the financials.
Got a lot of work to do. Get Meta back above the 50-day.
As a whole today, JP Morgan Chase off of those lows that we.
But I'll take it. I'll take it. Nice little run here.
Had been doing the best in the overall market as far as sector gains in 2025. So maybe this is maybe some profit taking on some of those names that we've seen recently. If you take a look at their last fiscal year in 2024. $177 billion in revenue. Net income surpassed nearly $60 billion. Double-digit growth on top and bottom lines from year over year. They're starting to delve more into private equity loan at this point. The FDIC came out with a proposal to roll back Biden-era policy that had stepped up scrutiny of large bank mergers. That's been the aim of the administration. Less regulation in the financial space, and I think that's why you had seen some of the financials outperform at the start of the year. But the same type of situation I saw in JP Morgan that I did in XLK earlier, where the stock was getting hammered earlier in the session, and I think somebody taking advantage of implied volatility levels rising, option premiums rising, because I saw somebody out there selling cash secured puts in this one too, Nicole, and this was out in the April monthly cycle, so not as long as far as duration goes as the XLK trade, but this is 44 days to expiration. Trader sold 10,000 of the April 230 strike puts, out of the money puts to the downside, collected an average credit of about $3.90. So the break even where this trader starts to lose money is all the way down to 226.10 over the next month and a half. That's about 10% below the current share price.
Okay, S&P looking really strong. This confirmation is pretty obvious. The volume just keeps coming in. After 2 o'clock is when we usually look for it. After 2:15. Feels like they've been front running this early. We got a nice reversal around 11:30. Continue to see buy order blocks piling in. Meta, the spiders, everything turning at the same time. If you keep a grid of the New York FANG components, a lot of times they'll all move at the same time, giving you an opportunity to take a trade on one or all of them. Supermicro still going. Supermicro looking good. Supermicro off the screen. Nice reversal.
It's very interesting
when they report earnings on Thursday after the close. So implied volatility levels exploding in this one too. Option market's pricing in about a plus or minus 9% move in the shares, about $16.50. It's up about 35% over the last year, up about 18% to just so far in 2024. But you can see here it's slid pretty hard from those recent highs that we've seen. And then if you take a look at the valuations on Broadcom compared to some other players in the chip space, this is a favorite by a lot of analysts due to the fact that their growth is still pretty robust at this point. But then, you know, NVIDIA's growth is still robust, but it's not as good as it used to be. And that stock got punished before the turnaround today.
Yeah, the flows in Supermicro I'm seeing all the way out in January. I'm seeing the 100 strike. Okay, January.
Earnings, I think, for the tech sector in general and the chip space when they report on Thursday after the close. Did see some bullish activity in here also. And this was a longer dated option trade that this trader put on. This is out in the June cycle also, so 108 days to expiration, where they bought a call vertical here. They bought 27,000 of the 240 strike calls and then sold 27,000 of the 270 strike calls. So a bullish $30 wide call vertical that's far out of the money to the upside. You're going to need a big move over the next 4 months or so. They paid an average debit of only $2.71 for a $30 wide call vertical. So the risk reward setup is pretty good. But the break even for this trader where they start to profit on it, 242.71 over the next 108 days, that's about 27% above the current share price in there, Nicole. It's only been up there above one other time, and that was when the stock hit all-time highs. Call volume double normal daily average volume that we've seen over the last 5 trading sessions. So yeah, somebody's taking an earnings shot.
All right, Robinhood doing well.
For earnings to kind of create some type of catalyst to the upside, but still giving themselves nearly 110 days in this position.
Right, understood. I mean, there's just constant headlines. I mean, when you talk about these kinds of analog chips and whether or not they're making a comeback, names like Broadcom, and then you saw Microsoft at the lowest level in a year. The S&P and NASDAQ are negative for the year, but NVIDIA turned positive, you know, or people bargain hunting is just, it's a lot to take in. Right, Tom, the final thought?
Yeah, the president addresses Congress tonight. That could throw a wrench into maybe the snapback rally. But then, I think the uncertainty that the tariffs are creating is still yet to play out. And remember, Nicole, on a valuation basis, the S&P 500 is still overvalued compared to historicals. Those growth rates from earnings have helped support the equity market. But now you're starting to get into some questions about growth in the consumer, and I think that's what has investors on edge with valuations still pretty elevated going in, into the tariff talks, the headlines, and more earnings coming down the pipeline.
Got to keep those earnings up. That's all. What are you talking about, right? When you talk about the growth rates that we've been seeing, and still people have some good expectations on some of those names. But if they get squashed, that'll be another story. Thank you so much, Tom White. Always great to see you. Thank you, Tom.
Thanks.
Coming up, we'll be joined by the CEO of Trinity Capital. Take a look at the company's fourth quarter earnings and the state of the financial sector. Next here on the Watch List. Stay with us.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex.
All right. Okay, a little pull back there, a little profit taking.
All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Bitcoin at the highs.
Knock, knock. Number one broker here for the number one hitmaker.
Thanks for swinging by, Carl.
No problems. All those for
This lets me adjust the bass, add more guitar, maybe some drums.
wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Accelerate your market knowledge.
And shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to the watch list. I'm Nicole Pipolides, and we're live on the floor of the New York Stock Exchange. Markets have come up off the earlier lows of the day, but still most of the sectors are lower with the exception of technology. We also, one more has turned into the green, and that would be communication services. A few movers for you. Best Buy selling off. It's on pace for its worst day since March 2020, despite reporting some strong earnings. The electronics store posted
NVIDIA.
revenue above
Having a good day, NVIDIA. Nice reversal.
Sending those shares low. Company noting guidance did not account for tariff disruption. CEO Corey Barry noting that tariffs may make prices increase for the consumer. That's highly likely. Okta providing a bright spot in the market today. Shares are up over 20% following strong fourth quarter earnings and the outlook. Software company saying that it has passed $1 billion in sales on the AWS marketplace over the past 4 years. And the CEO mentioned he is optimistic about AI. Okta also received upgrades to buy equivalent ratings at both TA Davidson, also at Mizuho today. So that's some good news there. All right, let's bring in our next guest, Kyle Brown, CEO of Trinity Capital. Thank you for being here. Glad you're here. How are you feeling in the markets? Because people are watching,
What's Uber doing? Uber.
6,000. They get nervous that the S&P and NASDAQ are now negative for the year. What's it you?
I think that the market is digesting some of the new administration's moves.
Nice move on Uber after dropping this morning. Getting back into the consolidation that we've seen over the last week. Uber.
Of course, there's a lot of optimism around M&A activity picking up, but a lot of that depends on deregulation. And right now, optimism and hope is still kind of beating out the actual, reality of what's going on in the marketplace right now.
So that being said now, look, there is some uncertainty looming. We saw the VIX. I mean, what a trade the VIX was today. It was up 10%, now it's negative. Talk about volatility in itself. Earnings, the fundamental growth on earnings, the growth rates of earnings, there's still a lot of high hopes for some good earnings going forward.
Yeah, we saw that in Q4 and throughout 2024, earnings continue to rise. A lot of the rate cuts, especially when you're talking about private credit, a lot of the rate cuts had mostly kind of impacted companies in Q2, Q3, some in Q4. You'll see a little bit more in Q1 as well with that rate cut, and that happened in Q4. But overall, we've seen the portfolio remain really, really strong, and companies are still growing even with some headwinds. And the incremental cost of debt capital from private credit is, in lieu of bank financing, it really just hasn't squashed margins like some have talked about. So, we continue to see kind of late stage VC, lower middle market, private equity backed companies do quite well, even with some headwinds and some of the volatility that's going on right now.
Yeah, you noted that there have been a lot of bright spots, whether it's raising dividends, for example. That has been something, right? You talked about attractive yield and shareholder returns.
Yeah. I mean, you see right now with the volatility that happened over the last couple of years in banking that private credit's really stepped in to fill that void, and a lot of money's flown into that space. And so we're meeting the demands of private companies, and we focus primarily on late stage VC, PE back, kind of 5 to 50 million of EBITDA.
All right, so Uber looking good. Uber, nice reversal.
There's a lot of companies that raise money during
A lot of interest in Uber at higher prices. Buyers stepping up on dips. That's a good sign. SPY is a little fade right now, but looking pretty good so far. Got back up into the lower part of yesterday's price action. It'd be nice if we could close at the highs of the day. That would be a good confirmation signal to look for more follow through tomorrow.
An area that people did like a lot, that was financials. And, that did today, it was under some serious pressure. This is the yield was down to 4.13%, I believe. And financials were down about almost 4%. They've come back. What do you think of that group? Because you talk about M&A activity. And look, now you may even see more in the financials if you get some rollbacks on some scrutiny policies that were in place. What do you think? Is this group attractive?
Yeah, I think so. I mean, TBD on what these tariffs will do, how that'll impact revenues and margins for companies, which of course could negatively impact lenders. I think you're going to see more of that in the middle market, upper middle market, where those companies are a little bit higher leveraged. You'll see the rate impacts from Q4 kind of trickle into Q1 earnings. So, I think there's maybe a little bit of pessimism on what's going to happen in Q1, Q2. I don't know. We focus primarily on U.S.-based companies, a lot of manufacturing here in the U.S., a little bit less volatility, a little bit less correlation to tariffs from China, Mexico, Canada. So, I think companies that have maybe a little bit more exposure, consumer goods, who do a lot of manufacturing and have to, bear the brunt. Somebody's got to pay for this, right? Somebody's going to have to pay for it. So if you have a lot of exposure there, you could see your margins squeeze a little bit. Maybe lenders in private credit, could feel the pinch a bit, but we certainly haven't seen that in our book right now.
Yeah, how have you found? And you talk about the venture capitalists and joint ventures that they've been doing, private credit. How are you finding your company's doing the interest for 2025?
Yeah, I mean, you have the $1 trillion of dry powder for private equity sitting on the sidelines. You have $300 billion of venture capital dry powder sitting on the sidelines, and you have a lot of companies who need capital and who are just waiting to bite the bullet for that valuation that's kind of overblown from 2020, 2021, like I said, for the CERP policy kind of period. And we're seeing deal activity kind of greatly increase. We saw it increase year over year. We're seeing a lot of activity this year. So there's a lot of money, there's a lot of hope, there's a lot of optimism around doing deals. And I think that we're just waiting. There's a lot of companies who are just kind of putting the hold on moving forward, unsure about maybe how the revenues will be impacted by some of the moves that are being made right now by the administration. But I'd say all in all, the hope's still there, the optimism's still there.
All right, so
Companies are still spending to grow.
NVIDIA having a pretty good day. Nice reversal. Got a lot of work to do, but this is a good sign. Institutions might be buying. We'll see some tabulations later. Looking for, if SPY keeps doing this, we keep creating higher lows. People take profits and it keeps moving higher. That's a good signal.
Yeah, life sciences continues to be kind of where a good deal of M&A activity is going on right now. A lot of money being invested in that space. They're still digging out of kind of lower valuations from a few years ago. So we like that space. Equipment financing is a big part of our business. The big push to manufacture in the U.S., we have already seen the effects of that. We see a lot of companies building out their manufacturing and testing capabilities here in the U.S. So we're financing a lot of that infrastructure. We're really bullish on manufacturing, generally speaking, for kind of private companies, sub-billion-dollar valuations here, and bringing it back to the U.S. So we're investing heavy in that space right now, kind of across industries, some life science, frontier tech, really kind of a lot of space, and then of course AI. There's a lot of infrastructure needs.
All right, looking for another push to the upside after a little bit of profit taking. S&P looks like it wants to push.
But $1 trillion, is that what you said? $1 trillion sitting on the sidelines, ready to go?
A lot of money sitting on the sidelines. Yeah, I mean, if it doesn't get put to work, people don't get paid. So there's a combination of optimism but also just self-interest. There's going to be money put to work one way or the other over the next few years. And I think as companies come to grips with the fact that they can't build into the valuations they were hoping for, that dam will start bursting a little bit more.
Kyle Brown, CEO, Trinity Capital. Thank you so much for joining us on the show.
Thanks, Nicole.
Great to see you, Kyle. Thanks.
Good to see you.
Still ahead, Technical Tuesdays. What a day to have Kevin Horner of Charles Schwab to take a look at the S&P 500. He will note the key levels. Everybody's watching the 200-day. I know he'll hit that. Roblox, Palantir. He's got the names lined up for us. He'll be charting these. He'll be right back.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. Time for Technical Tuesdays. Thank goodness we have Kevin Horner here, Senior Manager, Trading Services at Charles Schwab, because everybody's been watching the S&P 500. There's been talk about what a terrible couple of days it's been and the breakdown that we saw. Granted, we're up off the lows, but some of your thoughts here. This is the VIX jumped 10% today. Now it's negative. What do you think is going on here? What levels are you watching? I know the 200-day has been very key.
Well, indeed, very key. As you can see by today's low, the SPX hit it almost on the money there, and we've got a good-looking hammer at this point of the day. Now, let's not get ahead of ourselves. We've still got an hour 20 to play in the day, so we would ultimately like to see that candle hold even further. If we're going to be greedy, let's ask for a close over 58.85, which is going to give us an even more convincing bounce at this level on a short-term basis would give us a little bit more confidence heading into tomorrow. So I'm watching that right around that 58.85, but we really need to pay attention to the levels we've created over the last couple of weeks here. 59.90 up to 6,000, a very important level of resistance, coincident with that 50-day moving average. And now that we've, at this point, intraday, appear to successfully test the 200-day, that gives us our downside zone for short-term support. Under there, we've got a lot to discuss. Yeah, I've got another line down there in the ballpark of 5,100 or so, 5,150. That's a long way off. I'm obviously hopeful we don't get there. That stated, Nicole, I think traders, if you've learned anything in the last 2-3 weeks, it's that we need to be prepared for some volatility, and that volatility has certainly been prevalent here over the last 2+ weeks.
Understood. All right. So a lot of volatility and a lot of names to watch here as well. You also have Roblox on your radar. Why?
Well, Roblox made a really strong push here. Most recently from their earnings on Halloween, they were at more than 70% at the peak. Now, what's intriguing to me at this point is we've failed at the confluence of the 20 and 50-day moving average just yesterday and the day prior. So we're looking at Friday action, Monday action, and then a week open.
All right, come on, let's do this some more. This is fun.
Now we've got a nice little bounce there. It's unclear whether we are needing more time for
Microsoft having a pretty good day. Microsoft, nice follow through on the push off the low. Microsoft, Robinhood, nice trade today on Robinhood. If you took Robinhood right around 11 o'clock or so, we started to see a turn. 12 o'clock, following through, buy order blocks. Okay, we're coming up to supply. Supply is up there around 49 to 50.
Over 65, they would look to say, yeah, we were wrong about being on the bear side of this. This actually has some legs. So, this is right in the middle of things at this point.
Okay, Amazon also having a good push off the low. Amazon, Broadcom. Okay, we're about 50% green, 50% red right now. Meta with a good move today. Off the low, Meta.
Interestingly enough, held up at this exact same level. So I'm watching $79, today's low. This stock cruised. Let's be honest. The thing was up meteoric levels, 650% from January of last year to its peak, and then 200% just prior to the election, the November 4 earnings announcement, up 200% to the peak. The reality is the pullback here to this approximation of the 50-day, it's about a 30% drawdown, but it's totally within line given the movement we have seen in the last year plus, Nicole. So bulls looking to expose themselves here to a position. Watch that 79 level, under which we could talk about some more negativity here. But there's an opportunity even for a short-term pop. Even if it gets rejected, Nicole, it could certainly move through the 50-day moving average, basically our peak today, and push up to that $99 level. Now, I wouldn't be surprised to see it fail at that level or pause at that level, but that's still a potential for another 13-point move here from this price range we've run to today.
Kevin Horner, Senior Manager, Trading Services, Charles Schwab. Thank you. We'll be right back.
All right, here we go. SPY S&P going again. Mark this up to memory. This is a sustained rally on volume. Many stocks turned green at the same time. All right, the whole index just went flipped just now. I just saw, okay, we're about 60-40 on the NASDAQ 100. Big shift from this morning. Okay, let's look at the 0-day setup. 0-day up down volume, still mixed, but the Qs 2-to-1, 2.4-to-1 up volume. SPY 1-to-1 down volume. We got the NASDAQ Composite 1.7 up, and the diamonds 4-to-1 up. IWM bullish 1.37, and the New York Stock Exchange 1.39. All right, let's look at the New York Stock Exchange, because the composite has been above the 200-day. The composite stayed above the 200-day, 50-day. Drop below it today, back above it. So, or trying to get back above it. That's a good sign.
Head over to schwab.com/coaching and start learning today.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Breaking news, it's being reported by Reuters, the U.S. and the Ukraine are set to sign a deal for mineral rights. After all, this deal comes after the heated meeting, you remember, at the White House last week between Ukrainian President Vladimir Zelensky and President Trump. The U.S. cutting off military aid to Ukraine this week. And according to Reuters, President Trump intends to announce the deal in tonight's address to Congress.
New York Stock Exchange trying to get back above the 50-day.
That the Ukraine was ready to sign the deal and called Friday's meeting regrettable. Markets, I see oil coming up to almost the highs of the day, still negative, but the highs of the day. The S&P 500 now has moved up, by the way, folks, to just about the highest of the session for today. So important to keep following this story between now and the end of the day. In the meantime, we're following CrowdStrike, ready to talk about the earnings that are due.
All right, big reversal today. All right.
Analyst, Blackbird Tangler Investments, and Todd Walsh, CEO, Chief Technical Analyst at Cube Investments. Thank you both for being with us. Todd, I'll start with you. Some of your thoughts?
Well, the news flow is pretty fast and furious, isn't it? Getting into CrowdStrike, that's a core holding in our firm, cybersecurity. We like to think of it as though you have an army of criminals parked outside in front of your house, and their numbers and capabilities are growing every day. And there needs to be a culture of fear. So we think it's a core holding. Remains to be seen what happens with earnings, because, of course, if you don't have great earnings estimates and answering all the metric questions, you can get taken out behind the barn and get shot a little bit. So we'll see how they produce today.
Holding. That's actually some good news there. It's at 392 today. Jamie, what say you? I mean, we are obviously eagerly awaiting these earnings. We've seen the stock here, slide.
NVIDIA, nice follow through.
Take a look here. It's just slid off that 455 high recently, but still a great performer year to date at 15%.
Yeah, good afternoon. Thank you for having me. We would agree. It is a core holding within our growth strategy. Unfortunately, as a result of the July 19th incident last year, visibility is rather limited right now. That incident, was all over the news. It delayed their outbound sales activities, extended sales cycles, and the company's having to offer customer commitment packages, which is essentially a discount or for going upfront payment from their customers. We remain positive on the stock. We think that new ARR is going to be in focus this quarter. We think there's still a path to $10 billion in ARR by 2031. And we believe that the company will continue putting up free cash flow margins of 30% plus, but it's going to be a little rocky in the near term.
Granted, we had the global IT outage that walloped the stock. It has made a fantastic comeback since that time in the lows of about $200. Todd, when you look at the competitive landscape, you said CrowdStrike is a core holding. Are you holding many cybersecurity names?
We hold some of the other big names that you might imagine there too. We think it's just a major theme that's only going to become more important as AI sort of permeates the risk matrix around that sector. The biggest issue around CrowdStrike right now, though, is we're up towards the top of the channel in terms of pricing. If a company doesn't come with the razzle and the dazzle, I call it, meaning they've got to hit their earnings, they've got to hit their revenues, they've got to hit their estimates, and then they've got to answer some of the questions that Jamie brought up around recurring revenues, around competition, some of the other issues around the company, that if they don't hit them all, it'll be tough to break above this growth trajectory that they've been in. If they are able to accomplish a good, strong move above that 450 level, we may adjust the growth or the accelerated growth track to a higher trajectory, but that remains to be seen, and they're going to have to really hit on every metric in this earnings report today.
There's some excitement even about stronger outperformance to its guidance. And, you start to wonder what will drive that in 2025. Is this a CrowdStrike story or is this a cybersecurity story, Jamie?
We think it's a bit of both. I mean, certainly there's been a long-term mindset shift around cybersecurity. It's no longer about just putting up walls for intruders. It's about stopping folks faster. It still takes about 6 months to identify intruders, and AI is just allowing less sophisticated actors to do this as well. CrowdStrike is a market leader in threat intelligence. They started an endpoint and sort of built around that. They believe business in cloud security, identity. So, it's going to be important for them to
keep pushing.
this quarter. But more
Keep
importantly,
pushing it. Let's push it some more.
The evolution of earnings over the course of the year and maybe an acceleration in the back half.
And when we think about just tech overall here, Todd, we've seen the group being beaten down. In fact, we were talking about the NASDAQ composite today entering correction territory, but then coming back. In fact, tech turned green today. Are you finding people are bargain hunting for tech?
What I'm finding is a pervasive amount of extreme fear, not too far off the all-time highs on the indexes. When you have two massive years like we saw in the AI ecosystem and tech generally in 2023 and 24, it's extremely logical to expect a consolidation year, a lot of volatility up and down. We've been calling for a sawtooth market since about November of last year. We're seeing.
All right, Meta. Keep leading the way. NVIDIA.
Ecosystem side and the cyber
Big change from the last couple of days. NVIDIA with nice ABCD pattern today. Looking very strong. Very nice move today.
So don't get too excited when things are high. Don't get too depressed when things are low. Stick to your core plan and dollar cost average into some of these names when they get beat up.
Yeah, the AI-driven security, the release of the Charlotte AI detection triage has been certainly received beautifully from what I understand. And security detections, over 98% accuracy. Do you expect they'll be talking more about this, Jamie?
We do. Charlotte AI really allows the system by itself autonomously to take action on behalf of what used to be a system administrator. So we
S&P continues. Looks good. Looks good. Love to see a follow through tomorrow. Would love to see a follow through tomorrow. That would give us more confirmation. It's only 2:55 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Nice hammer off the low, the 200-day moving average, giving us some hope that there could be some follow through and that institutions have had an opportunity to buy some of this dip. Looks like they've been buying today. We'll see how options settle. Okay, this looks a lot better now. S&P, a lot better now.
Yeah, the net new annual recurring revenue, something that many of the investors are focused on for today. We'll watch for that. Thank you both so very much. Great to see you, Jamie Myers and Todd Walsh. So good luck there at CrowdStrike ahead of the earnings. And thanks for being with me here on the watch list. I'm Nicole Petalides. Glad you were here. Download our free Schwab Network app. It's available in the Apple App Store and tune in 24/7 schwabnetwork.com. The Dow's down 260 now. Keep it right here. Market on Close with Oliver Rennick, Schwab Network. Next.
Schwab Bank Investor Checking.
Beautiful, beautiful.
Built for investors, named highest in client satisfaction.
Okay, so we had about a 7% pullback from the highs. Okay, I don't need this anymore.
Cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals.
Okay, watching that.
No overdraft.
200-day bounce looks good.
Keep your money safe. Also, because your investor checking account is linked to your Schwab One.
Stochastics turn up. Now we just need MACD to turn up. Once we get the volume tally for later today, hoping to see above average volume on the accumulation off the 200-day bounce.
Schwab Bank Investor Checking, the checking account built for investors.
Still taking it easy. Not a lot of risk. Tomorrow would be a good day for follow through. We'll see if that happens. NVIDIA. I have NVIDIA shares and Meta. I got FBL shares. Apple. I have no position in Apple. Apple's not moving much.
Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern. Only the Schwab Network.
Google. Let's take a look at Google. Google.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com on all your streaming devices. Schwab Network is available anytime, anywhere, on any device for free.
Google looking good.
No place better than the Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning
Google looks good. S&P continues to push higher. S&P.
our team of passionate traders who live in
What a nice day.
and sharpen your skills with immersive online
What a nice day.
crafted just for traders. Also, you can trade.
All right, S&P is going to go some more.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
I'm Oliver Rennick. Get ready to cut the cord. Market on Close is coming up. Good afternoon. Welcome to Market on Close. I'm Oliver Rennick. Thanks for watching. With an hour left here, we have stocks firming up.
All right, we're in power hour.
Days of the session. Pretty good turnaround.
Still holding up.
Looking pretty ugly. Kind of looked like trap.
Market's still holding up well.
But still holding close. That's good. I'm talking about the election gap from the first week of November. That's the technical line in the sand. Markets are holding right now after testing and closing some of that gap. We're still looking at a market that's putting up a fight, and that's encouraging. So here you go. Bulls showing some life. A little bit of geopolitical developments there just in the last half hour. Perhaps a detente of sorts after a tense relationship between the president here and the president in Ukraine, and maybe a deal getting ironed out. Those are what the headlines are suggesting. Risk has been coming back on the table throughout the session, though. For the most part, we've been firm since shortly after the open. It was a dip down to 57, below 57.50 in the S&P futures. Index also was under some pressure this morning, obviously, across the board. Everything was down. And for a while, every sector was in the red, too. So we're finding some good appetite to buy the dip here ahead of a bunch of economic data the next 2 days. That helps kind of normalize the scale a little bit, maybe zero it a tad. Bonds came off as well. And right now, you've got 2 indexes up, 2 indexes down. So this is a solid stabilization day. And finally, someone buying the dip. It's working in tech. That's really important. NVIDIA was one of the first things to flip. Mag 7 up on the day. There's a few notable things here. One is that the value trade is actually underperforming. So we're finding the dip buying in tech, and that's important. NVIDIA was an early tell, and it still is as useful as anything to watch, really, on gauging the market on a daily basis. Yesterday, NVIDIA was falling off, and that was an early sign when it went red. And then
Okay, S&P continues to thrust higher. S&P
it's obviously not good.
looking very good here. S&P 500.
Around turning positive is usually a good sign, and that was kind of what got the ball rolling a little bit here in the afternoon today and late morning. If you look at the chart for NVIDIA, there still is a lot of action. 140 and 120 are the big volume areas you can see. So getting back to 120 for NVIDIA is some degree of accomplishment, though perhaps the minimum, it still is a good recovery for one of the most important companies in our market, obviously. So the chart, put in lower lows, lower highs. That's not good, but at least the minimum here holding and trying to recover that 120 hasn't quite gotten there yet. A couple bucks away. It's a high volume trading area, so you want to be in the area where there's more trading, because you can see on the right side panel there, things drop off pretty quickly after $120. So that's good. Nvidia held the line. Now the other stuff that's weak today, though, is notable and interesting. Banks have been weak. The value factor is down. It's happening after a flip-flop in bonds, but I don't think bonds are really the main story today, other than some technical resistance perhaps for yields to the downside, price for the upside. Bonds getting a little bit choppy. I think for the 10-year too, this is kind of what we were looking at on the charts yesterday, 4.2, an area that if you break below, if you go below 414 on the 10-year, you're really turning around the longer term trajectory in yield. So a little bit of pushback there from the market, selling some bonds after a rally in treasuries early this morning. That also, when that turned around, gave you clues that the market was firming up as well. So it's important right now to realize a few of these things. And one of them is that bonds have been trading inverse to stocks as you want them to, not the way they did during the inflation scare. It's been more about growth worries. So bonds rallied early, and then as the market firmed up, bonds came off. And they were also a pretty good tell, too, because stocks really hadn't picked up the pace until bonds really started pushing back and yields creeping higher. That's a conversation that's going to be paramount over the next, the second half of this week. Tomorrow, all the way through Friday, tons of economic data are coming our way. So get ready. You can see right now we are basically right at the 3-month high for the yield. That's for the price in bonds, low for the yield. That's really important because you do kind of expect some technical chop here. Now, lastly, the dollar just getting absolutely hammered, and the fact that some of the value stuff was down today. Maybe that's what you're looking for if you're looking for washout. Banks have been really strong the last couple of weeks. The fact that they got hit today and yesterday, we saw kind of a breakdown in that group. It's not a terrible chart by any means. They have been really firm, just putting in highs literally 2 days ago. But it does suggest that investors kind of went through some of the stuff that was outperforming, sold that off today. Maybe that speaks to some degree of washout. Hopefully it doesn't speak to the sell-off broadening out. Lastly, the dollar really getting trounced. And a lot of things in this market are retracing back to their election levels from the first week in November. Stocks have now done that. Bitcoin's gotten pretty close, not quite there, but the dollar's still way off. So the dollar, if you're going to go back to the election week levels, that means the dollar could get down to 104. So that's just something to think about here. If you think a lot of this has been tariff driven, well, certainly the dollar to the upside post-November included a lot of tariff impact, but it also still
Come on, S&P.
Story to tell as well. That's something we're going to be talking about.
Microsoft still pushing. Microsoft looks really good. Microsoft, a nice follow through. Off the screen again. Microsoft misbehaving today. Nvidia misbehaving.
And it's on news out of the administration, or at least kind of leaked news that, they're looking to get some deal announced.
Amazon.
Same deal with Ukraine that was sort of disrupted by the scuffle in the Oval Office is looking to hopefully get announced, I guess ahead of the address tonight or during or whatever it may be. But the market seemed to take a liking to that. You saw bonds come off a little bit. I think that's an exhale, sort of that risk-off premium coming out of the market. Gold has remained bid. I think that's something to take note of, but it has, eased off its highs a little bit. I think that there's also a little bit of a geopolitical risk there.
My eyes went to gold too, and that Ukraine headline came through, and it's gold for me is tough to interpret right now.
I think that there's another piece that I was going to add, which is prices pays higher, right? Price pressures are higher, but yields have been going lower. That's actually when gold would out.
All right, here we go again. Wow, this is really market's relieving the stress for sure. Futures got another eight handles, 9 handles to go. Make it 10.
Say anything too absolute like that. There's still so much to digest and get through this week.
Yeah.
But these 100-point, reversals, they just don't happen that often. You've got a couple of them now that have happened this week, both directions. At some point, you expect volatility to come down a little bit, given the fact that we've been able to stabilize. It isn't yet. So I know it's down a little bit in spot VIX, but we're at 22. 3-month VIX is 22.
Meta continues as well. Meta. Very nice reversal.
There's still a lot of things to get through this week, but the fact that you saw Nvidia, Calvary came, Apple, Broadcom,
Nice.
Microsoft even catching a bid.
24 points, not a bad day. Wow.
Agreed. The trapdoor I was describing yesterday is that November 4th to 5th level in the S&P 500. So if we look at today's candle on the S&P, if we look at the E-minis just to get that full trading arc, the wick today closed that gap, if you will, on its futures. So the gap's not going to be as there. But the point is, 57.35 basically was the November 4th low right before the election, and so that whole big move in the S&P minis from, let's call it 57
Wow.
up to
Very impressive.
6K. That was
Very impressive price action.
The highs before that growth scare last time. So there's a lot of technical
There's
stuff.
a lot of technical stuff that seems like we held that we didn't open up that the basement yet. We're not looking down into the abyss quite yet.
Tested it twice too.
Tested it twice, and Bitcoin still has several $1,000s before that gap. The dollar's not a lot. So stocks did close the election gap a bit quicker than some of the other stuff. Bitcoin was at 70,000 election week, and the dollar was at 104. So
Some of these moves are big too, Oliver. I mean, we're $8 off the lows in Nvidia. We're like $20 off the lows in Tesla. These are the kind of moves that get your attention. Now, the only reason I'm saying get your attention and not, say signal something significant is we kind of had this happen a couple times in the last few days, and so it's sort of the fool me once, fool me twice narrative. But again, these big reverse. I mean, we're about to go green on the day.
Mm-hmm.
I mean, I know I kind of joke sometimes while I'll walk by your desk, middle of the day and say they're going to be green. But I'm kind of joking. And the fact that we were able to turn this around after being down, over 100.
It's a good day.
The market was on its heels earlier this morning.
Absolutely on its heels, back against the wall.
S&P, they're going to close this green. They're going to close it green.
Weakness in banks. We talked about that this morning. I don't like that. I think that's a bad sign, frankly, generally for the market, because one of the areas of solace I think the market has expressed is that through all of this, the banks have been firm, and that's the one part of that kind of growth scare part that hasn't really fit, because the banks are generally very cyclical in nature. So I don't love the banks are down 2.5%.
Too. I mean, you can look at the sector on a heat map, and you got like 2 or 3 kind of green names. I mean, it's pretty, evenly dispersed.
Yeah.
It's not, a JP Morgan weighing down the bunch. It's the whole bunch.
Yeah.
Futures.
But I guess, hey, the math.
All right.
If you're gonna take a little bit out,
We're about to go green on the futures.
Staples down today too, taking some out of the more defensive group, plug that money right back into Nvidia. That's as good as this market can ask for.
Yeah, and for the second day in a row, if you watched, and you can say Nvidia, you can say Tesla, but let's just say Magnificent 7 as a bucket. Magnificent 7's driving the ship. Magnificent 7 turned around first yesterday. It brought the market with it. Turned around first today. It brought the market with it. Look, I know it's still a red day for a lot of assets. You only have 157 of the S&P 500 names higher today, but we're basically unchanged. So this is the power of market capitalization and how big some of these companies are. But the Nasdaq's, it's almost up 1%. And you actually have 60% of the components higher. So this isn't just Mag 7. I think that's important to note too. Mm-hmm. This is tech as a cohort making a stand.
All right. About to go green on the futures. Trying to go green on the futures.
At least for a bounce. Again, I don't know that this is a long-term, multi-super cycle low type thing. I'm saying maybe you can, take a deep breath for a second. Maybe if we can get through the State of the Union and some of the data, maybe this is a low that is interesting for a little bit.
Yeah, good point. On the State of the Union as well. I keep forgetting about that because I'm so focused on the economic.
All right. So everybody is saying the same thing. Not sure if this is the low for now.
Yeah, Scott, you talk about a rebound. Just look at the XBI.
morning it was down, and now it's up almost 1%. And it's recovering today, but it's been down about 15% since the election, and that's against the S&P, which is flat. And so it has not been a good few months for biotech. And this is a sector, remember, that's trying to rebound since those pandemic highs. And these are companies that shouldn't get swept up in tariffs, since many biotechs don't actually have approved drugs to sell yet. But on the large pharma side, it's a little bit more of a mixed bag. You have Johnson & Johnson.
Okay, let's do it. Let's push it through. Here we go. Here goes the S&P right here. We're about to break out to green territory. Futures are one handle off. Pushing higher, trying to break out. Looks like institutions are pushing this. Looking really good.
Angelica, thank you for that. Angelica Peebles. Let's bring in Courtney Garcia of Payne Capital Management now. Max Kettner of HSBC Global Research. Courtney's a CNBC contributor. It's good to have you both with us. What do you make, Court, of this price action today, which is, as we said, been quite interesting? Kerry Firestone, I might add, on the halftime report today, said when we were almost at the lows, hey, I wonder if we're going to finish positive today on the S&P, and maybe she will end up being correct.
Yeah, which I don't think anybody saw coming into today, how much a lot of these sectors were going to bounce. But I think that is a positive that you're seeing. There is a lot of dip buying opportunities that are being taken, which I think is an opportunity you want to take advantage of, because I think these tariffs are something where everybody thought this is a negotiation tactic. Clearly, we realized, okay, these are actually going in, and now you're seeing the markets are repricing this risk. But now that it's here and they're in effect, I think the markets are going to price it and move on from that. And that's really what you're seeing in the action today, which I think is overly a positive sign.
Max, you have remained bullish this market from afar, but now you have made the trip across the pond, as they say, from London to the United States. We have tariffs, as you might have heard. Does it make you less bullish?
No, I think we're talking perhaps a little bit too much about it. I think when we look at the numbers overall, the earnings impact that we're seeing both in Europe and in the US is probably not as much as we think. Look, overall, the revenue exposure isn't that big, even in Europe, to the US. I think more importantly, when we look at particularly our sort of shorter term sentiment and position indicators, what we've seen the last few days, it took a couple of % of a bit of a drawdown. Let's be honest, we're talking as if the market is down 20%. Like when I'm talking to clients now in New York, it genuinely feels like we're in the middle of a bear market.
Well, I mean, the NASDAQ, let's be fair, has been in a correction. I mean,
yeah,
it
but
was
come on,
down
the S&P
10%.
is down 5%. I mean, it's not the end of the world, right? When we look at high yield spreads, emerging market debt spread, those things, they've widened like 10, 15, 20 bips. So what? That happens, right? 5% drawdown. You get that, once or twice a year? Yeah, cool, fine. So, you move on. I think the interesting thing that we've got now is when we look at our positioning stuff, whether that's VIX futures curves or hedging demand, whether you look at put call ratios in equities and rates and credit, that's already super bearish. You look at, obviously retail sentiment is tanked last week. There's loads and loads and loads of those shorter term positioning things that are actually already flashing oversold with that little of a drawdown.
Is this a buying opportunity, Court? As some have suggested, some very high level market watchers have said if there's a big drawdown, buy it.
It absolutely is, but I think this is something Liz pointed on earlier that I think is spot on, where there has been a rotation that's been happening this year, and I think that's something you still want to focus on. So as you're getting your money reinvested, I don't think you want to go all in on the Mag 7 or the NASDAQ. I think you want to make sure you're broadening out, because as much as we're talking about how much the S&P 500 is down, it's basically flat for the year to a little down, but you have healthcare is up 8%. You have real estate is up between 6 and 7%. Financials up between 6 and 7%. There's a lot of areas of the market that are still doing well this year, and I think that rotation is probably going to continue, and that's what you want to think about when you're reinvesting.
You're talking about broadening out at the sector level, not necessarily the market cap level, right? I mean, were you thinking that small caps were going to do pretty well this year?
That was the hope post-election, which clearly has not come to fruition, and I think a lot of that is with hesitation of where the economy is going and the consumer pulling back.
For sure.
But yes, across different market caps, but also across the world, right? I mean, not only here in the U.S., you're seeing Europe and even China actually now performing even.
All right. What a beautiful reversal.
So yes, when I'm talking about broadening out,
Love. Part of the fun is watching the action.
Small caps might not have panned out, but I do think generally you still want to make sure you're broad here.
How do you see that?
I think so. I think, you know, if you go to Europe, I think we'd be talking way differently than we're talking right here. You wouldn't be talking about a bit of a drawdown. You'd be talking about we're entering a bull market. You look at, you guys were talking about banks and financials getting hammered today. You look at European banks, they're up 30%. It's rock and roll, right? It's rock and roll. We get maybe close to €1 trillion more spending out of Germany. That ought to be good for the economy. That ought to be good.
Well, that's why people have been saying that maybe you're going to get a better bang for your buck now outside the U.S.
I think it's both. Because, as much we've given up on US
Okay, here we go.
in 2 months.
All right.
2 months ago, the narrative and the consensus was buy the US, buy the
2 handles to go. We keep trying to push through this area. Okay, S&P continues.
2 months later, we're basically pretending as if US exceptionalism has died. And it's only Europe and it's only China, nothing else. I can honestly see a case, and to your point earlier, is there's a buying opportunity. I can honestly see a case where you look at the drawdown of the Magnificent Seven. Let's be honest, 4 of the Magnificent Seven got absolutely slammed after Q4 earnings. That's not justified, right? Like, but we're talking about some of those names, like Nvidia. It's like, oh, maybe they could grow earnings only 65% of 70. Come on, man. And then like, oh yeah, that needs to be 30% down. Really? On that kind of news? No, that's way overdone to me. So even in the Max 7, even in tech, and then
Beautiful.
then obviously in the US, I think you want to buy.
Come on.
It's not a
Close green.
buying Europe over the US. It's buying Europe and China and the US. It's actually really broadly where things are still pretty all right.
We will leave it there. That's probably a good place to do that. Court, it's nice to see you here at Post 9, and welcome to our set here at the New York Stock Exchange. This is Max Kettner.
Look at how pretty this candle is now.
Biggest names moving into the close. Christina.
Thank you, Scott. Well, Okta shares soaring right now on better than expected Q4 results. This is a cloud-based software provider. It saw record profitability and cash flow boosted by an accelerating subscription backlog. They also issued a rosy outlook compared to larger peers like Salesforce as well as ServiceNow, and that's why shares are popping over 22%. Its third best day on record. Shares of Hong Kong conglomerate CK Hutchinson popping after it sold its controlling stake in a Panama Canal port operator, and they sold it to a group led by BlackRock. The $22.8 billion sale also includes dozens of ports in other countries. The move is considered a big win for President Trump, who has aimed to curb China's influence in the canal. And shares are up of CK 23%. Scott?
Christina, thank you so much. Christina Martinopoulos, we are just getting started here, and the market is continuing to get better. Up next, Flexo Capital's Lo Tony is standing by to tell us how he's playing the tech space right now in the face of those new tariffs. He will join me right after the break. We're live at the New York Stock Exchange, and you are watching Closing Bell on CNBC.
Beautiful, beautiful. All right, all of these stocks continue to rally. S&P looking good. Futures are green, red to green. Oh, beautiful. Here we go. Nice little move there. Thank you very much. Nice job. Okay, looking good. Looking good. All right, maybe we get a few more days upside. Nice, nice. Very nice. Don't stop now. Don't stop now. We got 38 minutes to go. Looking good. Futures are up. Green on the day now after being red and dropping down almost to the 200-day moving average. Robinhood continuation. Robinhood looks good. We got all the New York Fangs looking good. Super Micros higher. We've got MicroStrategy higher with Bitcoin. All right, everything is working. All right, nice job.
You got this.
All right, welcome back to the bell. Apple could be caught in the crosshairs of President Trump's tariffs. Steve Kovac here with what's at stake, and it would seem to be a lot, Steve.
Yeah, exactly, Scott. And let's try to game out what's at stake here, really, because that first round of tariffs, not that they've been doubled, analysts have been saying to expect a low single-digit percentage hit to earnings. We'll see what they have to say for this round. I'm expecting those estimates to come in either tomorrow or the next day. The big question, though, is price increases and new products coming out. A couple weeks ago, we got that iPhone 16e. It did have a price increase. Unclear if that's due to tariffs or what, but it's $170 more than its predecessor. And just this morning, that new iPad Air starting at $599. That's the same price as last year's version, so no price increase there. But we're expecting one more new product this week, the MacBook Air. That could also see a price increase. We'll compare that when we get that announcement. But so far, Apple has been largely silent on the tariff impacts. The most important thing to watch is iPhone pricing, as the company is not going to really be able to shift its supply that it makes those phones in India from China and into the U.S. And by the way, we got those Best Buy CEO comments today on their earnings saying to expect price increases from its vendors, which includes Apple, by the way, along with so many other PC makers. And I'll just add in, Microsoft is feeling it too, because when those PC makers take a hit, it takes a hit to Windows revenue as well. CFO was warning about that on its last earnings call, Scott.
Are you surprised, or the people that you're talking to at all, Steve, surprised at how reasonably well Apple has traded, knowing that all of this was happening?
Very nice move today.
The number of chip components it gets from China is a big deal.
All right, let's look at Apple.
The amount of revenues they get from
They got to find something negative to talk about.
stock is traded better than most of the others in that group.
Yeah, yes and no. One, you got the buybacks coming up, and that we're expecting that in the next earnings
Okay,
call.
we got supply right overhead, 240, 241.
There was this idea going into this Trump administration that Tim Cook would be able to pull off what he did in the first Trump administration, either dodge those tariffs or that Trump would kind of back off on his claims that he'd do the sweeping tariffs and they'd be more surgical like they were in the first administration. That was kind of the belief, I feel like, within Apple, that they would be able to get a reprieve again, and that's clearly not happening yet. So we'll see how long this lasts and how much more pressure Apple could take on the pricing front before they have to change something or just eat those costs themselves.
Unless some of the telecom companies are the ones who end up helping to eat it.
And that's
right
true.
in the subsidies that they already do.
Then that's super expensive customer acquisition for the T-Mobiles and Verizons of the world. They're already doing that. You see the same commercials I do where they say, trade in your old phone and we'll give you a new one for free. They're eating that cost up front as well. So maybe they eat into it still. But at the same time, someone's paying for the phone. Someone's paying for the hardware, whether it's you through your contract with Verizon or whoever, or just paying it straight up, out of pocket, paying for cash straight up.
Yeah, we'll see. I mean, the New York Fed president's on the tape, Williams, saying that he sees a very high pass-through of tariffs to consumers. So we shall see. Steve, thank you. That's Steve Kovac. Joining me now is Plexo Capital's Lo Tony. He is a CNBC contributor. It's good to see you. Welcome back. Let me just stick with Apple for a minute. Your view from where you sit,
Apple.
this particular stock has traded, and maybe more so how you see it in the context of what seems to be a fast-developing trade war.
Right, and I think it was well laid out in your last conversation. I think the thought was that the ability for Tim Cook to pilgrimage down to Mar-a-Lago and achieve what he did last time. Clearly, that's not going to be the case. And so, it's well laid out, right? It's either maybe Apple can squeeze the suppliers a little bit, but I think that's probably already happened as a natural course of business. The ability for it to be subsidized by the telcos, pass it on to the consumer, or just eat it themselves. So it's going to impact someone somehow.
When you look at the bigger picture, Lo, of what appears to be a quest, if you will, for a new world order, as it relates to tech, as it relates to manufacturing, how do you think about it on the bigger scale of what that will mean and the transition and the timing that all of it will take to actually come to fruition?
Well, we've seen over the course of the past few years the look to diversify supply chains for the larger companies.
All right, a little profit taking there. Not surprising. S&P
In some ways, a tech company based on
with a little over 30 minutes to go on the regular session. All the New York FANG components are moving higher. Let's go take a look at that. And let's take a look. Let's take a look at junk bonds. Junk bonds, one of my favorite signals to watch. Junk bonds with a nice reversal.
But in particular, your point about this new world order, I think we will see some onshoring. So bringing a lot of that manufacturing.
Okay, we need to get a little bit higher so we can get into above the close, yesterday's close. We bounced at the 50-day yesterday on junk bonds. Let's look at advanced decline percent. That was moving lower earlier. Okay, still moving lower, trying to turn up. NASDAQ is turned up and moving higher. NASDAQ showing a lot of strength with all the New York FANG components turning up. Okay, so we're fading a little bit here. Okay, fading back to unchanged on the day after a big move lower this morning. S&P equal weight index. We'll see how this looks. S&P equal weight, big hammer as well at the 200-day. Breadth is still deteriorating somewhat, so it is the big cap tech names that got bought today. Okay, we're back to unchanged, slightly lower now.
I believe that as well. It's just going to take the investment to do so, which we're seeing, right? We're seeing large, massive amounts being invested. It'll take, training the workforce to be able to work within these more technical, focused manufacturing processes. It'll take these more advanced manufacturing processes that involve robotics and other high-tech techniques to be able to produce.
If you're worried about the markets, the place to take puts was up here at the high.
The human component. So I think, again, speaking within the
I haven't done anything.
world order, the competitiveness both for what we need to achieve as an economy within the United States, but I also don't want to minimize
Bitcoin hanging out at the highs.
the importance of the ability for this new global world order and kind of the ability for the states, the United States, to be able to play an important role, the leadership role. We're already seeing that as well with some of the policies around AI, for example. It's very important, I believe, for the United States to maintain that competitive nature throughout the entire supply chain.
Lo, we'll see you soon. Appreciate your insight very much on a very important day. Lo, Tony. Up next, we'll have much more on today's market sell-off, plus President Trump's trade war potentially putting the World Cup organizers in an interesting spot. Why? Because it's being jointly hosted by the United States, Canada, and Mexico. We will discuss with Alex Lasry. He is the CEO of the FIFA World Cup host committee here in the New York and New Jersey area. We'll be right back.
All right, nice work. All right, so SPY continues to pull back here from the that move back above. All right, so this will look a little different now. S&P. This will look a little different. I was hoping to close at the high of the day. Still time. Hammer would be better than a spinning top. All righty.
All right. Well, we had a little dash of hope there that faded back around with S&P's dipping there. Kind of hard, but still a good run from the lows of the day. Kevin Green, looking at the chart. I don't know, KG, should I be concentrated on the previous 4 hours or the previous 4 minutes here?
Look, it depends on what happens in the close here, Oliver. We had a lot going on here today from a structural standpoint. You know, obviously fading, coming down, hitting that 200-day moving average. We're getting pretty close to the 200-day moving average, and we saw some consolidation and then some buyers kind of stepping in on the call side. You also had some covering of those puts that we talked about earlier this morning. And this is kind of the fear that you got going into the close. Do we see an unwinding of those call positions, and then do you see shorts actually loading back up? And that's exactly what's happening right now. You are seeing some shorts getting into the 58.35s and the 58.25s. That actually happened right before we started this segment here. And we are now kind of breaking this uptrend line. So you would love to see a little bit of a recovery. 58.50 is going to be your area of resistance. If we were to see a squeeze to the upside, I was looking at around 5,900, which was going to be around 40 to 50 points more than what we were kind of looking at for right now. But what you really do not want to do is go back and revisit 50.70. And this is where it makes it very difficult, because not only the positioning and the amount of volume that we saw for today, the structural nature of the trade that we had today as far as the 200-day moving average, but we also had that risk of President Trump speaking to Congress tonight. And who knows what he's going to say when it comes to the tariff policy. Do we want to see risk on going into that particular event? And I think that's going to be the biggest question mark, which is why we're going to see probably some fireworks here in the close.
Okay. So maybe a little reorientation after a day to kind of so far even things out a little bit, try and find some middle ground. I'm thinking about bonds too, which kind of settled into now just a 10 basis point move on the day after being up real strong this morning when stocks are coming off. And then for, if we can hold that election level from, November 4th, a little bit below here, you've got some degree of stability, I guess, as long as we don't crater into the close. I mean, I don't know. It's not looking great. As long as we don't crater, then, this is a mildly successful session.
It's an okay session, right? It was a battle.
Yeah, I guess TBD.
But yeah, I mean, at the end of the day, we do have a lower low right now. Even if we close at those highs, it would still be kind of a little bit of a wash trying to get back to that initial channel that we saw for yesterday. But there's a lot of work to still be done here for the bulls to be able to try to recover. And once again, the candle that might be showing up here might be a nice little doji candle. You would love to see a green hammer candle, especially getting to that 200-day moving average. Maybe that could have created a little bit of a rally moving forward. You do have stochastics still kind of in that buy zone, so maybe there's a lot to kind of throw at this right now. And I think we're just going to continue to see a little bit of volatility. But on the vol front, we have seen the backwardation coming back down a little bit, and I think that's actually a really decent sign. It didn't get higher and higher for today. Let's say that backwardation is kind of still where we started the day, which I think is once again kind of a decent.
All right. Do we drop off a little more or do we bounce? Okay, now we're a doji, long-legged doji. Big range today. What's the verdict? Do we bounce or do we continue to sell off? Was a nice day. We need to see some confirmation tomorrow.
That all of this is going to have, not only on this area, but as you think of just the collective tournament itself for other cities too.
I mean, the economic impact is going to be massive. I mean, you're going to have millions of people, especially coming to the New York, New Jersey area, where a vast majority are never going to step foot into MetLife Stadium. So they're going to be celebrating with their fellow countrymen, with Americans, and with the city and states, and going to restaurants, bars, staying in hotels. The economic impact of this is going to be massive, and I don't think we fully understand the scope of this yet. That's going to be our job to help make sure that everyone really understands
VIX.
how big of an event that this is going to be.
When do you actually start, ramping up your efforts to get spectators engaged, fans in this area? You go around New York City anytime there's a soccer game on, and it's obviously crowded in certain sections and bars of the city, but at what point do you really start to engage with people?
So we're starting that now. I mean, we just announced this Sonic ID today, but I think the 1 year out in June is going to be the real moment where we really press play and we start to really engage New York, New Jersey, and the fans, and start to really let everyone know the World Cup's going to be here in a year, and it's time that everyone starts to pay attention and start to really feel the impact.
How much does it matter whether the U.S. team does well or not? It seems obviously undergone some changes in its own right.
I mean, I have all the confidence in the world that the U.S. fans are going to help make sure that the U.S. team goes very far in this tournament. But this is a global sport, and I think what we're looking for from this World Cup is to engage the international fan base. And I think when you're looking at how do we grow soccer more, that's making sure that we start to make soccer one of America's big sports.
Well, we are excited about it. Interesting day, as I said, to have you, but we're glad to have you join us and talk about this. Alex, thanks.
Thanks so much.
That's Alex Lasry right here at Post 9. Up next, we hear from the former Dallas Fed President Richard Fisher. He's also a former deputy U.S. trade representative. He'll tell us what he thinks about these new tariffs and what it could mean for the economy and the Fed. Closing bell.
All right, we're fading some more. People probably getting nervous. Had nice gains today, taking profits.
Stocks in just a few clicks.
Accelerate your market knowledge and shift your perspective.
All right. It'd be such a waste if we don't manage to follow through from this bounce. It reminds me of 2007, 2008. If you recall, 2007, 2008. Remember that crazy price action? 2007. We had days where we'd be down. We hit the 200-day. We bounced. We'd bounce 150, 200 points, and then right back down to new lows. 2007, 2008. That's crazy. Actually, it's just 2000. It's not 2008. Let me go 2008, December. Okay. Anyway, all right, so the S&P fading a bit more. People get nervous that this rally sucked a lot of longs in. Depending on what Mr. Trump says tonight, the president.
pieces for cryptos depends on what this administration does about this so-called strategic reserve.
Yeah, so on the Bitcoin side, there's definitely an angle there. We think that there's potentially significant upside if there is some kind of strategic reserve that actually ends up coming to pass. Our expectation is it's most likely that the U.S. is just not going to sell the coins they already have, as opposed to going out into the market and actually buying more. If they ended up doing that, I think that's really not priced into Bitcoin prices today. Then on the altcoin side, which is basically everything else, the administration already has made substantial moves forward in terms of making it easier to launch coins and understand really what the actual regulatory environment is around them and how to maintain regulatory compliance, which really for the last 4 years in the prior administration was impossible to know what was legal and what wasn't. So it's a big step forward in that regard.
Yeah, it seems like that part they have already followed through in a pretty.
Certainly, yeah. So, look, I think if you look at the chart of Bitcoin, there is not a lot of support below the low 70s. Excuse me, there's a lot of support below the low 70s. So, if you look at prices from where they are, obviously we got a bounce today. There's definitely a possibility that we see 70K range Bitcoin, something with a 7 handle on it. We're prepared for that scenario. However, we think that the thing that is most likely to drive Bitcoin to new highs, or at least back to 100K plus, is the Fed becoming more accommodative. So we need to see some of these new actions from the Treasury and the President start to take hold, reduce inflation.
Just watching whether the bulls can pull this one out. If that was just some profit taking at the highs, somebody dumped a bunch of shares at the highs. Hard to say.
Crypto react, and crypto is by far the most sensitive to global liquidity. So if we see those things start to improve, which we already have, I think that's when we'll start to see a bottom and things will turn around and head back to prior all-time highs, if not exceed them.
Okay, so basically the macro case of Bitcoin responding as the risk asset it is, to your point, when those things do unfold in the past, is the one that responds the most. I think important also that you highlight the 70K area. That's what I was looking at as the election level. A lot of things have reverted back down to the election level, including stocks. Bitcoin still has a lot of room, though, if it's going to do that, which would basically be to 70. Speaking of 70, Michael Saylor's average total buy-in price now is at like 67, I think, from like his whole history, something like that. Do you worry about potential rug pull from that giant Bitcoin buyer if their investment goes underwater for too long?
Yeah, so I'll address those first. The first thing first. So, yeah, interesting point that.
Yeah, no follow through yet.
Still above the election night lows, whereas stocks have fully retraced, or at least the S&P. I think that's just an indication of how much interest there is in Bitcoin and how much it's changed over that period. I mean, if you look at the changes pre-Trump to post-Trump, they're more significant for.
All right, VIX dropping from the high of the day.
There's an interesting point there, which isn't to say that we.
Okay, VIX dropping from the high of the day.
But I think there's a very strong base of support there. I think.
Hard to read this right here. We did look like we saw some profit taking at the highs. S&P.
Looking at their balance sheet, that seems extremely unlikely unless they were to have a wholesale shift in their corporate strategy of buying Bitcoin. So, the nature of their convertible bonds is such that they're not going to be in a position to have to sell, even if they do go below their cost base. So we're not worried about that for this time.
Yeah, okay. Yeah, no forced selling below the cost basis. Do wonder, though, if it becomes a tip of an iceberg, if everything they put in is in the red and not the black. May not show up immediately, but something to think about. We're not there yet. For sure.
They've been there before, and they didn't sell then. So I think we're fairly confident. However, I think if you look at some of the levered ETFs that buy MicroStrategy.
Okay, so we went from being positive to 48 handles down again, 49 handles. So crazy market for sure. All right, let's take a look. Okay, so Doji now does not look as good as it did earlier, obviously. Back down in the middle of the range, much better as a hammer, not as a doji. We continue to fade. A lot of people most likely looking to jump ship now as we pull back.
Bitcoin is really different than the rest of the coins. Its digital gold is fully decentralized. The rest of them, they're really more tech platforms, if you can even call them that. You know, things like Cardano and XRP really don't do anything at all. So I think that's like going out and buying equities for the US. I don't see that happening. So to me, I would fade those. However, I think that there's still a pretty strong fundamental argument for owning Solana. It's down over 50% from its all-time high just a couple months ago. Yes, some of the activity on there has slowed down, but at the end of the day, it really is quite undervalued compared to Ethereum in terms of its fundamentals relative to its market cap. And, you know, it's attracting a lot of the global users for crypto, and I think that has a pretty bright future. So from here, I'm feeling pretty good about Solana.
All right. Rand, thanks. Like the introduction, like the thought process for the policy side and the MicroStrategy stuff. We'll be in touch.
Sounds good. Thanks for the time.
All right, you got it. Rennick Pally, founder at Stratos. Interesting thoughts on crypto for sure. We'll see if it gets any mention from the president tonight. When we come back, we're watching the session very closely. It kind of looks like we lost it there. That's frustrating. That's frustrating. Mr. Joe Mazzola joins me alongside Cooper Howard. That's good, though. We got two smart people taking us into the bell. 10 minutes left.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the
All right, quite the reversal. We're going to go back all the way back down to the low. Oh my goodness, look at this.
analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access.
This is quite a move. All right, so are we going to take oh, shit. We're going to take this entire move in the opposite direction? Wow. That's crazy. Look at this. Look at this.
You can trade brilliantly with Schwab.
No politics, no noise. From bell to bell.
What are we down now? We're down 86 handles.
Okay, so we are red. And
Holy smokes.
Ouch. Joe Mazzola joins me, head trading derivative strategist, and Cooper Howard, director of fixed income strategist at Schwab Center for Financial Research. Joe Mazzola,
315.
frustrating week for stocks. We can't get anything right. Look at this. We're giving it all up.
Giving it all up and tearing up my notes and then taping them back together. It's interesting when you think about the fact that
there's $2.2 trillion of trade between the nations that are involved in the latest rounds of tariffs. And I think what's happening is the markets, just got kind of caught off sides. I think there was this belief that there might be a 11th hour deal that was done, and that didn't come to fruition. And then, we had this bounce midday where it looked like now there's a
Wow.
deal, and that war might be
Wow. Look at that move. Some crazy moves back and forth.
what the markets really have to digest. And I think you can see it in some of the sector rotations today, Oliver. Banking, discretionary, so the ones that are getting hit the most. Why? Because recessionary fears are really starting to creep back in. And maybe it's not even a creep. Maybe, the door's wide open and everybody's kicking it down because to see the kind of the turnaround that we've had in the last couple of days, and it's really interesting just to see how the money's flowing into the different sectors. IT tried to kind of save it today a little bit, but just wasn't strong enough to pull up the overall market as decliners outpaced advancers by more than 2 to 1.
Okay. I also need to correct myself. Technically, it's not a State of the Union, but it's a speech to Congress. I could keep calling it State of the Union. But this address to Congress, everybody's watching tonight. Like, I get it because right now there's a lot of, everybody likes to use the uncertainty framing. But I feel like there's not that much uncertainty from a more macro perspective, which we knew tariffs were the plan. And we knew some of this other stuff was the plan too. What I think, to Joe's point here, is really crucial, Cooper, is I don't think anybody really had in their plan our economic data falling off the way it has the last couple of weeks, with surprise indexes all taking a nosedive. It's not like we've had some major deterioration in the jobs data, the core of the stuff, but tomorrow's services. I mean, to me, for ISM, that has
All right.
to be a big mover the way we saw.
Be crazy if they bounce this in the next 6 minutes.
Yeah, what I think you're seeing is kind of a divergence between the soft and the hard data, Oliver. So if we look at the hard data, the actual data that's coming in, things continue to be holding up relatively okay. Now, does that mean that the future is going to look positive? Potentially not, because if you look at the soft data, kind of the survey data under the hood, consumer doesn't look.
All right. It looks like shorts, a little short covering. That's all. We could see more than likely going to see more downside the way this is selling.
We're seeing in the treasury market, and one is growth concerns, the other is volatility. So the market clearly is moving on the concern that growth isn't going to be as good as originally expected, and that's why you're seeing the long end of the yield curve start to move down in terms of yields. The other piece is volatility. And this is going to be a difficult one to navigate the market over the next coming months, or potentially even longer, as we try to parse out what is actually happening with that, with tariffs, what's happening with taxes, what's happening with immigration policy, what's happening with a lot of these different policies that are coming out of Washington. Are they negotiating tactics? Or are they actually policies that are going to be put in place and going to come to fruition? So I think that that's really what you're seeing in the treasury market, and where we've seen a lot of kind of the moves in yields as of lately.
Okay. Yeah. The bond market seems like it had a little bit of trouble pushing that 10-year below 4.2, a little bit of spring in our step around that area, but just been pretty much a one-way train lower. I think that's Joe too. I hear when cuts start to get priced back in, you start to hear some of that more positive commentary start to envelop the equity discussion a little bit as well. But one of these times, I know there's been a lot of head fakes the last year and a half, 2 years, 3 maybe, basically since COVID. But one of these times, these bonds are going to be rallying and they're going to break out for the wrong reason.
I mean,
a non-bullish reason. A recession.
Yeah, exactly. That's exactly what you're seeing right now. I mean, the rally in bonds is not because we're getting more favorable data from CPI and PPI. It's not because inflation has been squashed and the Fed has done its job and we're going to start seeing cuts. It's because there's a growth scare, and it's amazing just how quickly the narrative can change, right? And we always talk about this idea of valuations and there needs to be a catalyst in place. Well, maybe this is the catalyst. Maybe that grows.
Just a little bit of short covering after that pretty deep drop. Yeah, it was 100 handles. That was 100 handles in less than 40 minutes.
And those names, and now kind of what you're seeing in the financials today and discretionary. Maybe the catalyst is the idea that we don't know what the next 6 to 9 months is going to look like in terms of the strength of the consumer and whether or not there's a recession. And it's not being a fear monger, but it's interesting to kind of of see how quickly things unravel from a volatility standpoint. Oliver, you and I talked about this a couple weeks ago. People have been preparing. So I think there's a reason that you're not seeing a 5 or 6% sell off in 2 days. And I think the reason is a lot of hedges were already in place, and the hedges were in place for March. Now, if you start to see some of those come off, as March starts to roll into April, it'll be really interesting to see if those carry forward, or whether or not this is kind of a short-term drop that you might see a bit of a short-term bottom. We hit the 200-day moving average. We bounced off of that, but we're kind of making our way back down towards it right now.
Yeah, not a good close here. Kind of dropping it a little bit. The commentary from Fed officials, Cooper. What tone do you expect to hear the second half this week?
We would expect that the path that the Fed's going to be moving down is still a path of rate cutting. Now, how fast do they get there, and how many times do they cut? I think that's a big question mark, and that's going to be data dependent. I know that's kind of the cop-out answer, but really that's what we've been hearing from Fed officials, and I think that they're going to take a more cautious approach to where they go with the
All right.
Now, in terms of what the market's pricing in, they're pricing in about 3 rate cuts, and to Joe's point, that really shifted quite substantially pretty quickly. It was that the market was pricing in potentially 1 or 2 rate cuts, but we've given a little bit of a move down in terms of where we're pricing in the number of rate cuts this year. So I think that's going to look ahead to kind of the big data report coming out this week, what's going to happen on Friday with the jobs report. My expectation is that if we start to see a deterioration in the labor market, then yes, that's going to increase the likelihood that the Fed cuts faster than originally expected.
We are far from done this week. Kind of feels like we're just getting going here. Like I said,
Tuesday, Oliver.
it's only Tuesday.
Tuesday.
I guess technically that's definitely true. Oops.
And that's a wrap.
It's been a busy day and a half here. Day and minus 1 minute. Thanks, guys. Joe Mazzola, Cooper Howard, 60 seconds till the bell. See you on the other side.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library.
Okay, folks, I'm out of here. Have a great evening. Take care. We'll see you tomorrow. Ciao.